Okay, let us now start with chapter 8, operating costing or service costing. As most of you know, transportation is one industry where our syllabus mainly focuses on passenger transportation and goods transportation. When I say syllabus, this chapter, so passenger kilometer and tons kilometer. This is what most of you are familiar with. I hope a lot of problems have already been solved in the regular class and you guys know about these things. This is one chapter where you can expect mainly practical problems. This is not a chapter for theory questions. And transportation, that is passenger transportation and goods transportation, where you calculate passenger kilometers, ton kilometers, right? So that's where the focus is, but that's not the only thing in the chapter. You also have hospital, hotel, insurance companies, software companies. See, the chapter name is service costing, so they can ask any service industry related problem here, but the focus has been mainly on transportation and hotel, hospital, insurance companies, sometimes very rarely, and sometimes maybe toll charge collection, a software company, school, college, etc. These kind of questions. I can say 50% focus is on transportation. The balance is on all of this. So let us discuss some of the problems on transportation first, and then we'll discuss problems on other service industries as well. Right. As you know, in this particular chapter, you're going to calculate the cost and fix the fare if it is passenger transportation. Now, first of all, before I begin with problems, service costing is used by all service industries. Like how you have process costing used in manufacturing entities, contract costing used by construction companies, this chapter, service costing, focuses more on service industries. In our syllabus at CA Interlevel, the focus is more on transportation and few others. Now, how are you going to fix the fare? Fare if it is passenger, freight if it is goods. Fare if it is passengers, me and you, bus ticket, flight ticket, that is fare. If it is goods, then it is freight, correct? Yeah. You are going to charge per passenger per kilometer. You are going to charge per passenger per kilometer because one person may travel for only 18 kilometers, another may travel for 25 kilometers, another may travel for the entire journey, say 100 kilometers, right? And one person may come with his entire family and say, give me 4 tickets to the city which is 20 kilometers away. That means you need to charge for all 4 of them for traveling 20 kilometers in the bus, correct? That means you are going to charge per passenger per kilometer. Suppose if my company is into making calculators, my answer will be per calculator. If my company is into making laptops, my answer will be per laptop. Answer means cost per laptop, price per laptop, correct? My end answer will be per laptop, per mobile phone, per tube light, correct? Per cup of coffee, yes. But here in service industry, it is not single factor. You have multiple factors which you need to consider. Right, it's combination of 2 cost units, passenger, kilometer. Suppose I am getting admitted to a hospital. How are they going to charge me? Per person, per night or per day? If I am staying in a hotel, they are going to charge me per room, per night or per day. If it is cinema theater, it is per person, per show. If it is college, it will be per student, per course. Same way, if it is transportation, it will be per passenger, per kilometer. That means in calculator company, in computer company, in mobile phone company, denominator will be number of calculators, number of computers, number of the particular cost unit, correct? You can have 100 example, number of tube lights, number of fans, number of mobile phones, anything. But when it is service industry, as I told you, you have combination of 2 factors. Therefore, it will be per passenger kilometer, per student, per course, per room, per night. Are you following? Yes. Now, let's see some of the questions. XY Travels has been given a permit to travel in a route which is 25 kilometer in an AC bus. That's okay. The cost of the bus is given. insurance 3%, annual road tax given, repairs given, bus is likely to last for 5 years, this is basically for depreciation, driver salary given per annum, conductor salary is also given. 10% of the takings, when they say takings, basically it is the total collection revenue, okay. Takings, you can understand it as collection, receipt, as commission to be shared by driver and conductor equally. You will consider total 10%, they will share it equally, that is for them. From company's perspective, it is 10% is to be paid. Office and admin overhead will be 3,18,000 per annum. Diesel and oil will be 1,500 per 100 kilometers. If you do 1,500 divided by 100, you will get to know per kilometer. Bus will make 4 round trips, that means 4 times it will go from point A to point B and come back, because the word used is round trip. So 4 times, say city A to city B you will go, and B to A you will come back, that is called one round trip. So A to B, B to A, one trip like this 4 times in a day, and on an average it will carry 40 passengers. Assuming 25% profit on collection and considering that bus will run on an average of 25 days, you are required to prepare the cost sheet and calculate the fare. This was asked for 10 marks. Now, one very easy chapter, if you ask me to pick from the entire costing syllabus, that would be this, because you just have to calculate the correct denominator. What do I mean by denominator? Passenger kilometer, ton kilometer, room days, patient days, the denominator depending upon type of industry. If that is calculated properly, numerator is just total of all the costs. Let's see how it's worked. See here, all the expenses, insurance, road tax, depreciation, repair, office, admin, all the cost is just copied from question as it is. Most of this is very easy. Only thing here you need to be careful. Commission, profit, because commission is also on takings, profit is also on takings. We don't know the taking. So what you can do, you can keep this as X, then commission will be 0.1X and profit will be 0.25X, and then you can work out the equation. You can do the total here. See, 21,84,000 plus 0.1X plus 0.25X is equal to X. From there you can get the number. Now total takings is what you are going to earn for the whole year, But when a passenger comes, he wants to know how much will be charged to him. That means he wants to know his ticket fare per passenger per kilometer. How to do that? You need to collect total of 33,60,000, correct? And you need to collect it per passenger per kilometer. That means 33,60,000 is the numerator. This should be divided by passenger kilometers, which will be your denominator. How did they get 24 lakh? See the workings here. First of all, I'll be marking it. Please observe. 25 kilometer one way, correct? Into 2 times, that will make it one trip. 25 kilometers from city A to city B, and when you return it will be another 25 kilometers. So one trip will be 25 plus 25, 25 into 2, 50. Such 4 trips will be done in a day, correct? Into 25 days in a month, into 12 months in a year. I repeat, please observe whatever I am marking. One way distance is 25 into 2, so you will get to know how much is per trip, into 4 trips that you do every day. So this gave you number of kilometers per day, correct? Into 25 days in a month, into 12 months in a year. So you got the total kilometers as 60,000. But you need passenger kilometers, multiply 60,000 kilometers by number of passengers on an average that you're going to carry, which is 40. So that will be 24 lakh. Please understand, I'm circling in blue now. This number will always be a big number. In every answer, you will have this number in lakhs or crores. Why so? Please understand. one passenger, say myself, I travel for 100 kilometers. I travel for 100 kilometers. From city A to city B, if I travel, it will be counted as 100 kilometers. With me, there are 40 passengers traveling in the bus, total 40 of us. Now, when you say passenger kilometers, 40 passengers are getting multiplied by 100 kilometer, the number will be 4,000 kilometers, right? That is per day. And if we return 4,000 plus 4,000, 8,000 kilometers every day into 365 days when you do, obviously the number will be big, correct? So this particular number, the denominator will definitely be big. Some students, when they get 1 crore 35 lakh, they think it is wrong. This number has to be big. Don't worry if it is a big number, because you are talking about 25 kilometers twice, correct? 2 trips, 4 times a day, 25 days into all 12 months into 40 passenger you are carrying. Obviously passenger kilometers will be big. Just think, 100 people traveling for just 3 kilometers. 100 people traveling for just 3 kilometers will be counted as 300 passenger kilometers. Number is big. Everybody is traveling for just 3 kilometers. Just 3 kilometers. But because there are 100 people, the number will look big as 100 passenger kilometers. Clear? So now this will go to denominator, as you can see here, 24 lakh. Now how to interpret this? We need to earn 33,60,000 rupees, which includes profit, commission, everything, and that should be earned from 24 lakh passenger kilometers. That means we need to earn, or we need to charge to customer 1.4 rupee per passenger per kilometer. Did you understand? 1.4 rupee per passenger per kilometer. Hope it is clear now. Now tell me, if somebody comes and says, give me one ticket to city A, and if city A, suppose we are in city B, city A is 25 kilometers. Now you see, you have one passenger and he is traveling for 25 kilometers. That means passenger kilometers will be 25. You will multiply that by 1.4. Whatever number you get, that will be the ticket fare. What if he says we are 2 people, then 2 passengers into 25 kilometers, 50 passenger kilometers into 1.4. What if he says give us return ticket also, then it will be 2 passengers into 25 kilometers into 2 times, because 25 plus 25 you have to take. So basically 1.4 gets fixed in the system. Then depending upon number of passengers and number of kilometers, you are going to multiply it. Is it clear? Yes. Next, let's see one more question. X Limited distributes its goods to a regional dealer using single lorry. Now from passenger transportation, we are now discussing what? Goods transportation. The dealer premises are 40 kilometers away by road. That's the distance. Capacity of the lorry is 10 tons. The lorry makes the journey twice a day, fully loaded on outward journey and empty on return journey. Very important. When you are going from first point to end point, you go fully loaded. Fully loaded means 10 tons. But when you return, it will be empty. That means 0. In the previous problem, when we said 40 passengers average, we said while going also 40, while returning also 40. But here they are saying, look, while going you will carry 10 tons, but while you are coming back it is 0. Right. Diesel consumption. Diesel cost 8 km per liter. This is the mileage, and 60 rupee per liter. That means if you do 60 rupees divided by 8 kilometers, you will get to know cost per kilometer. Then engine oil, driver salary, repair, garage rent, cost of lorry. This will be used for depreciation calculation. Life of lorry, insurance, cost of tire, life of tire, estimated sale value of the lorry. Again, I told you depreciation, vehicle license and other overheads. These are all going to be very easy. When something is given as per week, If they want you to do it per annum, then do into 52. These things you are good at. Let me focus on something that's more important. The lorry operates 5 days a week, right? A statement to show the total cost of operating the vehicle for 4-week period, analyzed into running cost and fixed cost. Now what is running cost and fixed cost? You know what is fixed cost. Anything other than fixed cost is running cost. Basically, anything that you incur only when the vehicle is on its way, that's called running cost. Diesel, grease and oil, toll charges, these things you pay only when the vehicle is running. But something like garage rent, depreciation, etc., which is based on time factor, driver salary, they said you have to pay him 10,000 rupee per month, whether he is given work for 5 days a week or 6 days a week. Sorry, not 8 days. 5 days a week or 7 days a week. You have to pay him the fixed salary. Those are all called as fixed cost. Anything other than fixed will be running cost. Okay. Calculate the vehicle operating cost per kilometer and also per ton kilometer, assuming 52 weeks. See how the answer is presented. They have calculated first kilometers. Here distance means only kilometer, and then they have calculated ton kilometers for 4 weeks. They said, look, distance is 40 kilometer from one city to another city. 2 ways, 40 and 40. 2 trips a day, correct? 5 days a week, 4 weeks. This is the number. Ton kilometer, when you calculate, you observe 40 kilometer is there, 10 tons is there. But here you must observe, it is multiplied twice, 2 and 2 trips, but here it is only 2 and then 5 days and 4 weeks. Why? Why are they not multiplying 2 into 2? Because only when you are going, you carry goods. When you are returning, you don't carry goods. This can be presented in one more way. Let me show it here. Out of 3,200, 1,600 should be outward journey, that is going, and 1,600 should be return journey, that is coming back. Are you following? 3,200 is 2 ways, correct? Going as well as coming. But are you carrying goods while going and coming? No, it is only during going, correct? Outward journey. So break this: outward journey, return journey. During outward journey, you carry 10 tons. During return, you carry nil, 0. That means 1,600 into 10. Directly you got 16,000 ton kilometers. You don't have to do it this way also. But you'll have to break 3,200 into 2 parts. While going into 10, while returning into 0. Add both. That is total ton kilometers, right? For 1 week, basically whatever is the number here, they have divided it by 4. All right, and then they have written all the fixed charges and running charges, driver salary, garage rent, insurance, and all of this for 4 weeks. See here, anything that is given per week they have multiplied, correct? And here they have running cost, diesel, engine oil, repair, depreciation on vehicle. Sir, why is depreciation on vehicle taken here? Because if you see useful life of the asset, that is vehicle, they have given it in kilometers. They have not given it in number of months or number of years. Let me just show it to you. Here in the question, you observe. See, life of lorry is given in kilometers. And life of tires is also given in kilometers. That means it is more like a running cost. If they say life of lorry is 3 years, 5 years, then it will come under fixed charges. Because they say it is per kilometer, you have to understand it as a running cost. Okay, right? It depends on the question basically. So they have taken all the cost items and then the total. So both you need to add. I am just circling. 18,400 fixed, 49,900 running, together 68,320. Right. Calculating vehicle operating cost, 68,320 divided by 3,200 kilometer, or because that is for 4 weeks, or you want to do it per week, no problem. 17080 divided by 800. Basically both numerator and denominator is getting divided by 4. 21.35 if it is per kilometer. What if it is per ton kilometer? Same numerator, but denominator will be 16,000 ton kilometers. Correct? Here it was 3,200 kilometers, because observe in the question they asked both operating cost per kilometer. There I divided it by number of kilometers. Operating cost per ton kilometer, I need to divide it by ton kilometer. So here is the answer per kilometer, per ton kilometer. 4.27 per kilometer is 21.35. Got it? Yes. Next, one more problem on goods transportation. Here you have 4 trucks. So far what we did is only single truck problem. Yeah. A transport company has a fleet. Fleet means a group of 4 trucks of 10 ton capacity, each plying in different directions. That means one is going from city A to B, another from city E to F, another from X to Y, all 4 different directions. The trucks run loaded with goods and return empty. I've already told you how to solve these kind of questions. While going, that is half of the journey with load, while returning empty, that is 0. The distance traveled, number of trips made, load carried per day per truck is given to you. Truck number 1, 2, 3, 4. One way distance, number of trips every day, and load carried. Now remember, this is the load that you carry while going only. When you return, it will be 0, because it's clearly given they run loaded with goods but they return empty. Then the analysis of maintenance cost and the total distance traveled during last 2 years is as under. Year 1, year 2, distance traveled, that means this is in kilometer, maintenance cost is in rupee. The following are the additional details: diesel, driver, license, insurance, purchase price, oil and sundry, general overhead. All this is easy. You know, you will have to just copy and paste in the answer. Something will be given per month, do into 12. Something is per week, into 52, per annum straight away. Truck operates 24 days per month. Alright. What is that they want us to do? You are required to, number 1, prepare an annual cost statement covering the fleet of 4 trucks. Annual cost statement of all 4 put together. Calculate cost per kilometer. Determine the freight per ton kilometer if you want to have 30% profit on freight. Now freight is the revenue, right? So what is the first question? Annual cost statement of all 4 trucks, right? See what they have done. This is just copy from the question as it is. Diesel, oil, maintenance, driver salary and all of this. But to calculate diesel cost, oil cost, maintenance cost, all of which is given per kilometer, you need to know total number of kilometers. How to calculate total number of kilometers? See here, working note. They have done it properly. This is how they expect you also to present the working notes. Total kilometer and ton kilometer is calculated like this. Truck number, okay. One way distance, number of trips, total distance covered in kilometer per day, all the numbers, and load that you are carrying, and then ton kilometers when you multiply. And then this is 1464 per day. So into 24 days into 12 months, this will give you number of kilometers. This 5592 is also 10 kilometer into 24 days into 12 months. You have 1610496. This is kilometer. This is ton kilometer. When you multiply, you will get to know how they have got these numbers. 48, number of trips 4. By the way, this 48 is one way distance. 48 is one way distance. Do it in calculator. 48 into 2 way into 4, that will give you 384. Correct? And then load carried is also given, effective ton kilometers. Alright? Yes. By the way, don't do 384 into 6. All of you, 384 is total kilometers. In that, half of that is empty. So divide by 2. Then you multiply by 6. You will get 1152. I hope you are observing the calculation. 384 kilometers is what you are going to travel. But you won't be carrying load. Entire 384 kilometer. No, half of that is going. Half of that is return. The return journey is always without goods. That means 384, if you divide by 2, you will get to know that load is carried only for 192 kilometers. That you multiply by 6 tons, that is 1152. So 384 divided by 2, 192 into 6, that will be 1152. And this is all per day. Therefore, what I did, all per day, 5592 number. This 5592 here you can see, this 5592 is going here. And 24 days, 12 months, you got ton kilometers. Clear? Let me go back. So all these kilometers are taken here. You can see diesel, oil, maintenance, all of this. So this is your total annual cost. How to calculate cost per kilometer? This number divided by the kilometers which is there in the working note later. And then freight rate per ton kilometer, that is 113,39112 divided by ton kilometers 7.04. But this 7.04 is cost, because this number is cost number. This is not revenue number. Correct? You need to add profit. And they are saying 30% on freight. Freight is the revenue to them. Correct? So if 100 is freight, please understand, if 100 is freight, then 30 should be your profit, then cost should be 70, right? That is what they have done here. 70 means 0.7 into 1, 10.06 is what you need to charge per ton per kilometer. See, all these answers are with you. You can rework later. You can check in the calculator later. I would suggest you focus now on whatever I am explaining. The purpose of giving the answer to you printed is that you can focus during explanation. Otherwise, I know if the answer is not there, you will be busy writing and you won't focus on the explanation. You have the answers. You can do it later. Focus now. Right? So, I think we answered all this. Yes, here there was this maintenance cost in the question. Let me just scroll up. Maintenance cost was there in the question. Here, this I'm circling in blue. 1 second. Yes. Now, how to estimate maintenance cost for this year? You observe the cost is not remaining same for year 1 and year 2. It's not same. That means it's not a fixed cost. That is clear. Is it a variable cost? Let us check. If you calculate 1,38,150 divided by 1,60,200, you will get cost per kilometer. I repeat, 138,150 is cost. Divide that by 1,60,200 kilometers. Now you got cost per kilometer. If you cross multiply that with 156,700, you will not get 135,525. That means it is not a pure variable cost also. It is not a pure variable cost also. By the way, this clear understanding of semi-variable cost, segregation is there in budget chapter. It is there in budget chapter. Yes. So now it is partly variable and partly fixed in nature, and that variable and fixed explanation is provided here. How to segregate change in cost, difference in cost by difference in kilometers. They did difference in cost by difference in kilometer. They got variable cost per kilometer. Out of total maintenance cost, if I take out variable portion, the balance portion will be fixed portion, and this is used in the main answer. Okay, when we revise budget chapter, I will discuss this semi-variable cost segregation in detail. Right after that, you will be able to understand this. Okay, right. What next? Hotel problem. We discussed Couple of problems on transportation. Let us see other service industries. Yeah, here. A company runs a holiday home. For this purpose, it has hired a building at a rent of 10 lakh per month along with 5% of taking. So, rent agreement says you have to pay 10 lakh rupee fixed rent, plus you also have to share 5% of whatever revenue that you earn. Taking means revenue. It has 3 types of rooms or suites for its customer: single room, double room and triple room. Following is the additional information given. How many rooms we have? Single rooms we have 100, double rooms we have 50, triple rooms we have 30. And how much of that is occupied? 100%, 80%, 60%. That means always our single rooms are fully occupied, double rooms are 80% occupied and triple rooms are 60% occupied. Sir, are we charging same to all of them? No. Look at this. Rent of double room is to be fixed at 2.5 times of single room, and that of triple room will be twice of double room, and double room is already 2.5 times. Are you following? I repeat, I'm writing it here. You observe, if single room is considered as X, then for double room you are going to charge 2.5x. Correct? What about triple room? You are going to charge 2 times of double room, 2 times of 2.5. That means it will be 5x. Correct? Sir, now how do we work out the problems? See, whenever you have a question with differential rates like this, you need to first convert all of them to one category or one variety. What do I mean by one variety? You need to convert all these rooms, all these different types of rooms into one common type of room, let's say single room. What do I mean by that, sir? See here. If one single room is occupied, let us consider it as one room. But if one double room is occupied, it is as good as 2.5 single rooms. Are you following? And if one triple room is occupied, then it is as good as 5 single rooms. I repeat, one single room is equal to one single room. One double room is as good as 2.5 single rooms, and one triple room is as good as 5 single rooms, which means if total 3 rooms are occupied like this, which is one here and one here, for our calculation purpose, you will have to treat them as 8.5 single rooms. 8.5 single rooms or 8.5 equivalent rooms. Right? Sir, what is the use of doing this? See, when you have differential rates to be applied, what will you take as denominator? You have one rate, you have 2.5 times of 1 and you have 5 times of 1. So how will you take the denominator? Now to take the denominator, what I did, I converted all varieties of rooms to one common variety, which is that I took single room as the base. So what I did, one single room is equal to one single room. Are you following? One double room is equal to 2.5 single rooms. Is that correct? One triple room is equal to 5 single rooms. Therefore, if in the question they say 1 plus 1 plus 1 is occupied, I should understand it as 8.5 single rooms, and this will be my denominator. Because you are going to consider finally the answer as rate per room. Rate per which room? If you don't convert 8.5 like this, you can't divide it by 3, because if you directly divide it by 3, you are equating all rooms. Correct? You are taking every room as 1:1:1, but no, it's not 1:1:1. It is 1:2.5:5. Therefore, what I did, I converted all of them. Now my denominator will be 8.5. It is just like converting physical units into equivalent units. Correct? The same concept can be applied, and in exam they can ask you one more variety question, something like this. In a plane, in a flight, there are 100 seats, 80 economy class, 80 economy and 20 business class. I'm sorry, I'll just write here. 80 economy class and 20 business class. And then they may say, our charges are different. We are going to charge 3 times of economy rate to business class. That means 1 economy is equal to 1 economy. 1 economy is equal to 1 economy, whereas 1 business is equal to 3 economies. I repeat, if the question says we are going to charge 3 times the rate to business class people, then 1 economy is equal to 1 economy, whereas 1 business class is equal to 3 economy class. Now this will be 80 and this will be 60. So totally there are 140 equivalent passengers, though physically there are only 100 passengers. Did you understand? This question can be even asked in a hospital problem. General ward, special ward and super specialty ward. They may say in special ward we will charge them twice, correct? And in super specialty we will charge them 4 times. That means 1 general ward is 1 general ward, 1 special ward is 2 general wards, and 1 super specialty room is 4 general wards. So basically whenever you have, keep in mind, whenever you have differential pricing, keep this wording, differential pricing, whenever you are charging differently to different customers, you need to first convert all of them to one common base. This question can be for hospital, it can be for hotel rooms like the one we are solving, it can be for flight, correct? It can be even for buses. They may say we have 30 seaters and 10 sleepers, and for sleepers we are going to charge twice. That means 1 sitting is equal to 1 sitting, whereas 1 sleeping passenger is as good as 2 sitting passengers. You have to convert everybody to sitting passenger and then work out the solution. Finally your solution will be for your base category. Suppose after doing this sum, we got 5 rupees as the answer, and 5 rupees for economy class, correct? And business class will be 3 times, that will be 15. Because here you have multiplied by 3, rate also will be multiplied by 3. Clear to you? Yes. Let me go back. Here, I hope now you understood what is 1, what is 2.5 and what is 5. And then they have given all the cost items, staff salary, room attendant, lighting. Just copy. Keep copying all of this. They want 20% on total takings, profit, 360 days in a year. You are required to calculate the rent to be charged for each type of suite, each type of room. See what they calculated first. They are saying equivalent single room suite. That means they converted all variety of rooms to equivalent single rooms. What they did? 100 rooms, 360 days, 100% occupied, and that is multiplied by 1. So this is the main answer. Yeah. Double rooms, there are 50 rooms, all 360 days, 80% occupied, 14,400. This 14,400 is going here, and 1 room is as good as 2.5 rooms. Correct? Here also 30 triple rooms, 360 days into 60%, 6480, and that is as good as 5 single rooms. So 104,400. This is your equivalent single room. Equivalent single room. Clear? And then is the cost sheet. This is just copy paste from the question as it is up to this. Here is the total cost. Then rent, because rent will be 10 lakh into 12 months plus 5% on takings, and we don't know takings. So you can keep that as X. You can keep the taking as X and work out an equation like this. See here. Total takings, let it be X, is equal to total cost plus profit and commission. That commission that you have to share it to the building owner, and then you work out the equation, you get value of X at the end. Got it? Now X3373 is the charge to whom single room suite. For double room it should be into 2.5, and for triple room it will be into 5. So basically you will convert all variety into one variety and work out the cost sheet for that one variety, which I call as base category, and then multiply it by 2.5 and 5. Got it? This question can be asked in bus, can be asked in hotel, can be asked in as I told you, the airline companies. All these examples where different type of rates are charged. This can be even asked in a cinema theater. No? There are 100 seats, 80 seats are first class, 20 seats are second class, something like this, and then charge for second class is half of first class, balcony will be 3 times, etc, etc. So you just have to convert all variety of seats into one common base variety. Work out the cost sheet, answer will be per base category, then into 2, into 5, into 10, whatever you have taken as a multiplier, take that in the final answer also. Here my base was 2.5 and 5, therefore whatever final answer that I got, which is 3373, that is for base. That into 2.5 is the second number, into 5 is the third number. Got it? Yes. Chalo, next. This is one easy problem. This was there in ICAI material, so I just thought I'll discuss it in RTP. Yeah. Here they have given a life insurance company operates life insurance businesses. Last year it had launched a new term insurance policy, etc. Professional protection plus. The company has incurred the following expenses. All the expenses are given: policy development, sales support, etc, etc. And then number of policies, total insured value. Next, you are required to calculate the total cost of professional protection plan. You just have to add all the numbers. But only thing extra they want you to do is segregate the cost into 4 categories, which is marketing and sales, which is operation, that is day-to-day activity, which is IT related, and which is support function. This can be read by you. It's more like a theory question. And then calculate cost per policy. Total cost divided by 528 policies. That will be cost per policy. And then cost per rupee of insured value. Again, total cost divided by 1320 crore. Very simple straight question. In the answer, you can see here. They have segregated the cost into marketing, operation, IT and support. And then they said this is my total. Divide that by number of policies. This will be cost per policy. Divide that by crores. This will be cost per rupee of insured value. Okay. Right. Let's continue. What next? We have a healthcare service. That means a hospital problem. A group of healthcare services has decided to establish a CCU, critical care unit, in a metro city with an investment of 85 lakh in equipments. Unit capacity is 50 beds. 10 more beds if needed can be accommodated. Normally you will have 50. If you have too many patients, more than 50, then you will get extra beds from outside. Extra how many? 10 you can accommodate. That means maximum is 60, normal is 50. Other information is also given to you. Again, see, all cost items are given properly. Building rent, salary, nurse salary, ward boy, doctor payment, all of this will be copied as it is in your final answer. Simple. Whenever it is per month, per person, you'll have to multiply. 24 you have, 12 months. These are all basic things. Let's not spend time on this. This is the important part. Tell me, in passenger transportation, my denominator was passenger kilometers. In goods transportation, it was ton kilometers. In hotel, it was room days. And now I am talking about hospital. It should be patient days. Basically, number of patients multiplied by number of days, correct, for which they were admitted. How to find this out? See here. It was reported that 200 days in a year, 50 beds were full. That means 200 into 50, you can see here in the answer, plus 105 days, 30 beds were full. So 105 into 30 is done here. By the way, this is the answer. Yeah. Then 60 days, 20 beds. So 60 into 20. When you add all of this, you will get 14350 patient days. But see this, the hospital hired 250 beds at a charge of 950 to accommodate the flow of extra patients. Now what is the meaning of extra patients here? It is in excess of 50. Are you following? It is in excess of 50 because 50 is your normal capacity. When you have 50 or less than 50, you don't need beds from outside. Your hospital already has 50 beds capacity. You have 50 beds. If you have 51, 52 patients on a particular day, for that extra one patient, for that extra two patients, you will have to get the beds from outside. You don't own, you will have to buy it from outside. Such how many beds you have taken? 250 beds. That means 200 extra patients you had. That is why they added 250 here. Clear? Now, if you just check here the number of days, look at this. 200 days, 50. 105, 30. 60 days, 20. And then additional, correct? So 200 plus 105 is 305. 305 plus 60 is 365. That means full year data was given. And then they said, no, look, few days we had little extra patients, and for that we have taken 250 beds. It's not all 250 on the same day. Why? Because your extra capacity is only 10 more than 50. 50 is normal, 10 extra. That means some day maybe 2 extra patients, some day maybe 1 extra patient, some day maybe 5 extra patients, but never more than 10 extra patients. You don't have capacity. Anyway, 250 extra will have to take. So 14,600 will be my patient days. Correct? This will be my denominator. What is that they want you to work out? See here, last line. I'm marking now. Find out the profit per patient day if hospital charges 2,500 rupee per day per patient. Now, here they are not asking you to fix. They said, look, we have already charged 2,500 per day from each patient. Tell us how much is the profit that we have made. Simple. You will work out total cost. Instead of you adding profit, you will leave that empty and fill the revenue, income. Difference between income and cost will come and sit as profit. You divide that by patient days, you will get profit per patient day. See this. First, revenue 14,600 patient days into 2,500 rupee. That will be 365,000,000 revenue part. Then the cost items, food and laundry, medicine, doctor payment, all of this, fixed cost, building rent, nurse salary, manager salary, all of this. Now you have the total cost. The difference between these two will be your profit. And then the profit, if you divide by number of patient days, you will get 485.17. What is the meaning of 485.17 here? 485.17 is the profit per patient day. In simple words, if one patient is admitted for 1 day, are you following? If one patient gets admitted for 1 day, hospital will make a profit of 485.17 rupee. Clear? Yes. Here the question is not fixing the charges. Charges are already given in the question. You only have to calculate profit per patient per day. Got it? Okay. Let's continue. Next problem is about toll collection. See this. SLS Infrastructure builds and operates 110 km long highway on the basis of Build, Operate and Transfer (BOT) model for 25 years. A traffic assessment has been carried out to estimate the traffic flow per day. Type of vehicle, daily vehicles, number of vehicles. Two-wheelers, 44,500 two-wheelers will be using this road per day. Car, bus and heavy commercial vehicles. Okay, this is all per day. The following is the estimated cost. Site clearance, land development, all the expenses. Total project cost is also given. An amount of 1120 has to be incurred on administration, etc., etc. right? All this is easy. This you are going to just copy as it is in the main answer. Here comes the important part. On the basis of the vehicle specification, that is weight, size, time, etc., following weights are assigned to the passing vehicles: two-wheelers, car, bus and heavy commercial vehicles. Now you observe, you have 4 different variety of vehicles using this road. Are you going to charge same toll to all of them? Toll charges for two-wheeler, toll charges for heavy commercial vehicles cannot be same, correct? You need to fix. Are you following the same rate? No, you are following differential rates. Look at this: 5%, 20%, 30% and 45%. I told you, whenever you have a policy of differential rates, you need to convert all variety of vehicles to one common variety, correct? Like different patients, different hotel rooms, correct? Economy, business to different class of passengers. Here your 4 variety of vehicles, convert all of them to one base category. Question says, calculate the total project cost per day and calculate the toll fee to be charged per vehicle of each type if company wants to earn 15% on total cost. What is concession period? That's also explained here. That's okay. My focus is not on this cost part, because all of this is just copy paste. This 114495 was already there in the question. Just copy paste. Admin cost, total cost, right? Here is the important part. Yes. How are you going to charge them? One second. Yes, here is the important part. You have 4 variety of vehicles: two-wheelers, car, buses and heavy vehicles. Daily traffic volume is also given. Are we going to charge them equally? The answer is no. For that question only they gave that we are assigning a weightage. 5% can be taken as 0.05. 20%, 30%, 45%. Now what is my base category? Base category will always be the smallest one. Smallest one is this. Therefore, let me keep this as one vehicle. So what is the meaning here? One two-wheeler is equal to one vehicle. Correct? Now this is 0.2. By the way, 0.2 is 4 times of 0.05. 0.2 is 4 times of 0.05. Therefore, I will count these vehicles as 4 vehicles. One car is as good as 4 two-wheeler. Are you following? Now 0.3 means what? 0.5 6 times of that and 0.59 times of that. Right? I quickly repeat this. Let me consider the smallest number as the base. I am marking in blue. 0.05 as the base. That means one two-wheeler is equal to one two-wheeler. Correct? Now, one car, they are saying it is 0.2. And if you divide 0.2 by 0.05, you will get 4. Now, what is the meaning of 4 here? One car is as good as 4 two-wheelers. Correct. Then this is 0.3. If you divide 0.3 by 0.5, you will get 6. That means one bus is as good as 6 two-wheelers. Correct. Then this is 0.45. When you divide, you will get 9. You will get 9. What is the meaning of 9 here? One heavy commercial vehicle is as good as 9 two-wheelers. Correct? Again you are converting. This is just like single room, double room and triple room. Just that the word weight is used. So I am explaining it in detail. Now when you multiply 44,500 into 1, 34,500 into 4, 1,800 into 6 and 816 into 9, 76,444. Now what is this 76,444 here? Equivalent vehicles. Equivalent vehicles. And what was the base category? Two-wheelers are the base category. Correct? You see where they will be using this. They calculated total cost. Correct? And then, one second. and then they are dividing it by 76444. Here you have the cost and then cost per day, etc. This is 1267 in lakhs, so 000 per day, because all this vehicle movement is given per day. They are dividing it by 76444. You got 19.06 rupee per what vehicle? Equivalent vehicle. Therefore, for two-wheeler, I will charge 19.06. But if you're a car, it's as good as 4 two-wheeler. So I'll multiply 19.06 into 4. I will charge 76 rupee. For bus, it's as good as 6 times. For heavy commercial vehicles, 9 times. Here is my equivalent rate, which I got by, correct, using the formula. And then I should multiply that based on the weights assigned. You get toll fee to be charged per vehicle. Is it clear? Here also I am converting different varieties of vehicles to one common base category vehicle. And what was my base category? Two-wheelers. Simple. Right. Actually, you can do this as your first working note. Nothing wrong. This can come as your, sorry, one second. This can come as your first working note. Yes. Right. I think with this, we completed the revision of service cost. Okay. Chalo. What comes after this? Chapter 9. Cost Accounting System. Chapter 9. Cost Accounting System. This chapter mainly has two areas from which you can expect practical questions. One, reconciliation of profit between cost accounting and financial accounting. Second area is maintenance of books of accounts, which is journal entry, ledger account, trial balance under integrated and non-integrated accounting system. We will discuss journal ledger part later. The first part of the chapter is reconciliation of profits between cost and financial accounts. First of all, why reconciliation? When we are maintaining cost accounting records and financial accounting records separately, please understand, when we are maintaining cost accounting records and financial accounting records separately, you will have two different profits. One, profit as per cost accounting. Second, profit as per financial accounting. When you maintain books of accounts separately like this, it is said to be under non-integrated system, because they are not integrated, they are not together. Are you following? Cost accounting records are separate, financial accounting records are separate. That means you are following non-integrated approach. Now, when you maintain two separate books of accounts like this, cost accounting books separately, financial accounting books separately, the profit that you get under cost accounting and the profit you will get under financial accounting can also be different. Why? There are many reasons. Number one, cost accounting is based on estimated cost, whereas financial accounting is based on actual cost. Reason number two, valuation of stock differs. In cost accounting, stock is valued at cost only, whereas in financial accounting, stock is valued at cost or NRV, whichever is less. So accordingly, you will have difference in stock. Number three, for financial accounting, you have rules, regulations. For example, depreciation rate. You cannot take the rate that you want, the rate that you wish. Correct? You have Income Tax Act. If you are a company, you have Companies Act. In that, you have depreciation rates. So you have a set of framework. In cost accounting, you do not have. So you can take the depreciation amount as per your understanding. Right? That means depreciation under cost accounting books and depreciation under financial accounting books can be different. Then certain expenses are taken only in financial accounting, not in cost accounting, like what we discussed in cost sheet chapter. Bad debt, preliminary expenses, goodwill written off, donation, fine, penalty, interest charges, loss on sale of assets. Some of these items you take only in financial accounting and not in cost accounting. So when you take some expenses in P&L account, which is financial accounting, and you don't take them in cost accounting, obviously your profit will be different. Same way, the fifth reason is incomes. Bank interest earned will never be taken as an income in cost accounting because it is a pure financial income. We say this will be kept outside cost accounting. If you win a lottery, you will not consider, your company wins a lottery, you will not consider that as an income in cost accounting. But if there is a receipt in cash or bank, you have to pass a journal entry, cash account debit to lottery income account or bank account debit to lottery income account, and that will go to the credit side of P&L account. Again, there is an income which is not taken in costing but taken in financial accounting. This will also cause the difference. So I told you 5 reasons why there will be differences in profit between cost accounting and financial accounting. Now that you have different profits, you need to reconcile them because it is ultimately your own books. A Limited, for example, A Limited maintains cost accounting records separately, financial accounting records separately. At the end, both records are correct, belonging to A Limited only, X Limited only, the company. You need to know, in cost accounting, I projected, I budgeted, I expected a profit of 10,000 rupee. But in P&L, which is based on actuals, the number is much less than that. Much less than that. Our expected profit is one number, whereas actual profit is so less. Why? What went wrong? What is the reason? Why is there a difference in the profit? I need to know. How will I get to know the difference between cost accounting profit, the reasons for difference between cost accounting and financial accounting profit? By preparing a reconciliation statement. Any reconciliation statement, as you know, you can recall your bank reconciliation statement. How do you do a reconciliation statement? You always start with one point, correct? And then you make the adjustments plus and minus so that you can reach the end point, the other number, right? Here I have 2 profits. One, profit as per cost accounting. Second, profit as per financial accounting. Right? So let us start with profit as per CA. Let this be my starting point. Let this be my starting point. And what should be my ending point then? Profit as per FA. Correct? If starting point is CA, ending point has to be FA. Correct. Now I need to add 6 items and deduct 6 items. Following? Add 6, deduct 6. Sir, should we mug up all 12 items? Not necessary. Please understand the concept. It will be very easy for you. Let us understand one by one. Why am I adding? Why am I deducting? If you understand the logic, format becomes very easy. Income taken in FA, not in CA. Your starting point is CA, correct? Let us consider this, my right hand, this hand, as profit as per CA. This hand is profit as per CA. And this hand is profit as per FA. One profit is FA this side, one profit CA is here. One income is taken in FA. When FA takes an income, its income or profit will go up, correct? And if I have to reconcile, I will also have to go up. Are you following? I repeat, this is my profit as per CA and this is my profit as per FA. There is an income taken in FA, not in CA. So when FA takes an income, its profit will go up. If I have to reconcile, remember I am here, this is me, profit as per CA. I will also have to go up. Going up means what? I have to add. Clear? Second one. Excess income taken in FA over CA. Again, both of us are here. Remember, this hand is CA. This hand is CA. In FA, I took 8 rupee income, whereas in CA, I took only 6 rupee income. I repeat, in FA, I took 8 rupee income. In CA, I took only 6 rupee income. Now, the difference 2, I will have to add and go up, correct? That is added here. Now you can say, sir, if this is plus 8 and this is plus 6, why can't you ask this to come down? No, you can't do that because your starting point is this number. Your starting point is profit as per Correct. CA, this only you have to go up or come down. You can't ask this number to change because this is your starting point. This only, either it will go up or it will come down. Following. Next. Expense taken in CA but not in FA. Look at this again. Both of us were here. I took one expenditure. I means CA, this hand. My profit came down and FA did not take that item at all. So if I have to reconcile, I will have to come up or add back. That is why it is a plus. Next one. Excess of expenditure taken in CA over FA. Again, both of us were here. I, that is CA, I took 10 rupee expenditure. So my profit went down by 10 rupee. Whereas FA took only 6 rupee expenditure. Their profit went down by only 6 rupee. Now if I have to reconcile, I have to come up by 4 rupee difference. I repeat, we were here. This is CA, this is FA. CA took one expenditure, profit went down by 10 rupee. But FA took it as only 6 rupee. Now to reconcile, I have to come up by 4 rupee. Correct. Next one. Undervaluation of closing stock in CA. Please understand, when you undervalue closing stock, your profit will come down. This we know. This is something that we have learnt in accounts also. When closing stock is understated, profit has come down. And here we are saying undervaluation of closing stock in CA. That means in CA, in my books, I have undervalued the closing stock. So my profit has gone down. Correct. Now if I have to meet this number, I have to come up. That means I have to add. Correct. Next one. Overvaluation of opening stock in CA. Now this is just opposite. When closing stock is undervalued, profit goes down. Same way, when opening stock is overvalued also, profit will go down. When opening stock is overvalued also, profit will go down. Now what happened? I was here CA and it was here FA. I did overvaluation of opening stock. My profit went down. Now to reconcile, what I should do? Add back, come up. That's why it is added. Clear? Now, let's observe. Is it really 6 or is it only 3 that you have to remember? See here. 1 and 2 talks about income. 3 and 4 talks about expense. 5 and 6 talks about stock. That means you should not understand it as 6 items. It's only 3 items. 1 and 2 about income. 3 and 4 about expense. 5 and 6 about stock. That's all. Sir, what about less items? You don't have to mug up this. Why? Whatever is FA here will become CA and whatever is CA will become FA. Simple. All 6 items you observe, wherever you have FA, it is CA. Wherever you have CA, it is FA. That's all. That means first of all, it's not 12 items. It's only 6 items. In that also, it is not 6 items. It's only 3 items. That is income items, expense items and stock items. That's all. I hope it is clear to all of you. Now some doubts. Doubt number 1. Sir, instead of profit, what if it is loss? Nothing to change. Instead of writing plus 100, you write it as minus 100. That's all. In calculator, instead of starting from 100, start with minus 100. Everything else will remain same. Got it? Okay. Another doubt. Sir, what if in exam, they ask us to prepare reconciliation statement by keeping profit as per FA as the starting point? Because what I showed you just now is keeping profit as per CA as the starting point. What if in exam they say prepare using profit as per FA as the starting point? Nothing to worry. What you can do in pencil, okay, in exam, in pencil, you work out the entire reconciliation statement with profit as per CA as the starting point only in pencil. Correct? Once you reconcile, then you reverse it. profit as per FA will become starting point. Whatever you have written as plus will become minus. Whatever is written as minus will become correct. Plus. That's all. That's all simple now. So irrespective of what they ask in exam, you keep in mind our starting point will be profit as per CA. Got it? If they say no, it's not profit, it is loss as per CA, no worries. Instead of writing plus 100, write as minus 100. Everything else will remain same. That's it. Okay. What if they say profit as per FA as the starting point? You write it in pencil, that is profit as per CA, or do it in calculator. Once it is reconciled, reverse it. Starting point will become profit as per FA. Whatever you have written in pencil as plus will now become minus. Whatever is minus will become plus. That's it. Right? Now what are the type of questions they can ask in exam? Type 1. Please follow my explanation. Type 1. They will ask you to prepare P&L also. They will ask you to prepare cost sheet also. They will ask you to do reconciliation also. I'll just write it this way. Yeah. They will ask you to do P&L also, cost sheet also, reconciliation also. Second type of question is profit and loss account will be given in the question. They will ask you to do only cost sheet and reconciliation. Are you following? Third variety of question, P&L will also be given, cost sheet will also be given. They will ask you to do only reconciliation. Getting it? This and this, that is first and second variety, will come for 10 marks. Okay, the last variety will come for only 5 marks. Sir, why only 5 marks for this? Starting point is given, ending point, or rather ending point and starting point, everything is given. What you have to do is prepare one statement to decide whether it is plus or minus. 5 marks is more than enough for that. Right? I am expecting more of category 2 questions. That is, P&L will be given in the question. You will be asked to do cost sheet and do reconciliation. Why, sir? Why are you expecting such questions? See, if they ask us to do P&L account also, cost sheet also, and reconciliation also, it will be a very lengthy question for 10 marks. Number 1. Number 2, we have already given 200 marks for accounts. In group 1 we gave 100 marks, in group 2 we gave 100 marks. 200 marks is already with them. Again in my subject cost sheet, in my subject of costing, they will not ask us to prepare P&L here also. Already 200 marks is given to them. Why again P&L here? Correct. So there is a greater chance that they will give you P&L saying, this is not accounts paper, let us give you P&L. But this is costing paper, no. You prepare cost sheet and do reconciliation. So variety number 2 is what I am expecting. Okay. Yes. But you be prepared. P&L account anyway, you know you are doing it from first PUC, second PUC, foundation, accounts 1 paper, accounts 2 paper. So much of accounts. Accounts is in our blood, correct? Especially if you are a CA inter student or direct entry student, accounts. 5 years you have studied accounts, correct? First PU, second PU, 3 years of degree. And now accounts 1, accounts 2 in inter also. So much of accounts you know. That means P&L should be easy for you, correct? P&L will be easy for you. What is important for me is cost sheet preparation, for which we have done one full chapter, first chapter cost sheet, and then reconciliation, which we are going to learn in this topic. Got it? Right. Chalo, let's see some problems. Here it is. The financial books of a company reveal the following data for the year. Opening stock, FG and WIP, and transactions given. RM, labor, factory, admin related to production, dividend, observe. This will not come in cost sheet, but this will come in P&L. Bad debt also, same thing. Selling and distribution, interest received, again, selling and distribution will come. Interest received, this will come in P&L, not in cost sheet. Rent received also, same thing. Sales, closing stock, work in progress. However, the cost records provide you the following data. Factory overhead is 70% of wage, admin overhead is 50% of gross works cost, selling overhead is 3 per unit sold, opening stock is 120, company values WIP at factory cost, both financial and cost profit reporting. You are required to do what? See, so many things. Profit as per FA, that means P&L account. Profit as per CA, that means cost sheet, and also reconciliation. This was in RTP, not in exam. Yeah. Okay. So first what to do? Prepare a profit and loss account. I won't be spending more time on P&L account. As I told you, we have already given 200 marks to them. So you know how a P&L is prepared. All these items on the debit side, and here you have on the credit side the net profit. Yeah. And now some students may get this doubt, sir, what about GP? Should we do that? Not necessary. I told you our focus is not P&L. Okay. I know in some answers, factory overhead, they will take it above GP. That is in trading account. And in some answers, they take factory overhead below GP. My answer to you, don't worry. You take factory overhead above GP. Because we used to consider in PUC, if you remember, 11th and 12th, fuel, gas, water, etc. These items we used to take it above trading account, that is in trading account, above GP. So if you want, you can take it above GP and give a note, that's okay. Don't worry, focus is not much on P&L. Focus is more on how you prepare cost sheet. Let's see how cost sheet is prepared. Now 69725 is the profit as per FA, right? And here you have costing records. You can see here it is prepared in a little different order. You don't worry about this particular format. You will prepare the cost sheet as per the format that we studied in first chapter. It is starting from sales and then cost of sales and then stock adjustment and then finally you have the profit. And all of this story, refer working note 2. In working note 2 they have done all this. I'll just show to you. See here. Here is your actual cost sheet, RM, labor, prime cost, and then factory overhead, factory cost, opening and closing, net factory cost, admin, COP, and this COP is taken there. We have already studied cost sheet, so you know how to prepare cost sheet. Let us focus on the most important part of this chapter, that is reconciliation. Okay, right. Profit as per CA. When nothing is given in the question as to what should be our base, you please consider profit as per CA as our base, because that is how we have understood the concept, understood the format. So let us start with profit as per CA only. Okay. Now we have added some items. Let me explain each one of this in detail. I want to focus more on this statement, not on P&L and cost sheet, because you know those things. First, administration overhead over recovered, over absorbed. In overhead chapter, at the end of the chapter, I discussed this concept. What is over absorption? Estimated cost is more, actual cost is less. Estimated cost will go to cost sheet, actual cost will go to P&L. That means administration overhead is more in cost sheet and it is less in P&L. Correct? That means it is an excess of expenditure taken in cost sheet compared to financial P&L account. Now what happened? When you take excess expenditure in cost sheet, your cost accounting profit will be less. I repeat, when you take excess of expenditure in cost sheet, your cost accounting profit will be less. To reconcile that, you will have to add. Clear? Second, opening stock overvalued in cost accounting. I told you, when opening stock is overstated in cost accounting, profit will be less. To reconcile, you will have to add. Next, interest received, rent received. These are the two incomes which we don't take in cost sheet. But in P&L they have taken. Now see, P&L they took income, but in cost sheet we did not take. So their income will be much more than ours. To reach that number, we should also go up because it's an income. So add. Right. Last one, factory overhead over recovered. Recovery or absorption is same logic. Over recovered means you have already taken more factory overhead in cost sheet, but in P&L account it is actually less. When you take more cost in cost sheet, that means cost is more, cost sheet profit is less. Correct? To reconcile, you will have to add addition. Okay? All additions in one place. Ensure all of you, when you present the answer in exam, don't write 1 plus 1 minus 1 plus 1 minus. That's not the correct way. Okay? If you want that way, do it in pencil. First do it in pencil and check plus minus. And then let all plus come in one place, all minus come in other place. That's the correct way of showing reconciliation statement. Let me then discuss why these items are deducted. Selling and distribution overhead under recovered. Under recovery means what? In cost sheet we have taken less. In reality we have actually paid more. We have paid more, that is actual, and that has gone to P&L. Now you observe, you have taken less cost in cost sheet. Because of that your profit will already be more. To reconcile, what I have to do? Bring it down. Bringing down means what? Deduct. I repeat, under recovery of selling overhead means you have taken less cost in cost sheet. You have recovered, charged, estimated, budgeted, forecasted, everything is same. You have taken less cost in cost sheet. When you take less cost in cost sheet, cost profit will be more. Less cost means more profit. Now you want to bring it down, you have to reconcile it. Bring it down means minus it. Closing stock overvalued means what? When closing stock is overvalued, profit is already more. Closing stock is overvalued means profit is already more. How will you reconcile? By bringing it down. So deduct. Okay. Dividend and bad debts. These are the two expenses which will be taken in P&L, not in cost sheet. Look at this. These two expenses we did not take in cost sheet, but in P&L they took. When they take in P&L, their profit will go down because these are two expenses. When their profit goes down and our profit has not gone down, to reconcile, we should also go down. That is deduct, minus. And then at the end, your profit as per FA should be this number. In exam, I would suggest, if you are not very sure, do it in pencil first or do it in calculator. Do plus minus in calculator. Once you get the confidence that my number is correct, then only you present the answer. Got it? Right. See next problem. Then where are we? Yes, here. GK Limited showed a net loss of 243,000 as per financial accounts. Don't worry, final number will be minus 243,300. That's it, right? Don't have to change the whole format. Yeah. However, the cost account disclosed a loss of 248,300. Both places loss. Good. Start with negative number, end with negative number. Yes. For the same period. Now look at this. What type of question this is? Cost, profit or loss is also given. P&L profit or loss is also given. Neither P&L needs to be prepared nor cost sheet. That means only thing you need to do is reconciliation. I told you these kind of questions can come for only 5 marks. On scrutinizing both the accounts, the following information is revealed. They have given all the adjustment. And what is that they want you to do? Prepare a reconciliation statement, reconciling, etc., etc. Taking net loss as base, costing net loss. Anyway, we like that only. Yeah. Which means this question is all about deciding whether these items are to be added or deducted. Is it plus or is it minus? That's all. Such questions, my suggestion to all of you, first in exam also do in calculator. Do plus, do minus and see, because you have plus also. Sorry, you have both starting and ending points. And you have this many items, that too only what? 7 items. Out of 7 you need to decide how many will be added, how many will be deducted. You cannot lose marks here. 5 out of 5 you have to score. You have starting point, you have ending point, you have 7 items. You need to decide which is plus, which is minus. Randomly, if you try also, at some point you will get. Correct? Let that not happen. You know what happens most of the times? You will understand what to do with 6 items. 1 item you are doubtful. You don't know whether to plus it or minus it. When you do it in calculator, first you do plus and see, is it matching? No. Then you do minus and see, is it matching? If yes, then write minus only. Why to break your head unnecessarily? Correct? Do not write. Do it in calc and see whether numbers are matching. If yes, then you put it on paper. Clear? Right. See what they have done. Here, that's how they have presented. Loss as per CA. This many items added. This many items deducted. End result is here. Got it? So now if you want me to quickly explain, works overhead over recovered. Over recovered means what? You've already taken more cost in cost sheet. More cost means profit is less. To reconcile, you will have to add 30400. You can see here they have added. Are you following? Next, second one. Okay, selling overhead under recovered. Under recovered means you have taken less cost in cost sheet. Profit is already more. Bring it down. Deduct. First one is plus, next one is minus. Admin overhead under recovered. This is also minus. One under recovery is minus, means other under recovery also minus only. Depreciation overcharged in cost accounts. Overcharged means you have already taken more cost. More cost means less profit. Correct? You have taken more cost, so profit has gone down. Bring it up. Add. Bad debts written off in financial accounting. They means financial accounting. They took bad debt. I did not take. When they take an expense and I don't take, their profit will go down. I should also go down so that I can meet them. That is called reconciling. Preliminary expense written off. Same logic. They debit. I don't. So their profit will go down. I also have to go down. Going down means minus it. Interest credited in financial accounts. When they credit means what? Income. When they credit an income, their profit will go up. But I won't take this in cost sheet. Correct? So their profit has gone up. To meet that number, I should also go up. Going up means what? Plus. So these are the three numbers you will add and four numbers you will deduct. See here, three numbers they have added, four numbers they have deducted. That's it. Simple. Done. Next. Instead of asking reconciliation statement, they can ask you reconciliation account. Now what is this reconciliation account? Some students don't like this. Yeah, I know. Because they have not understood how to prepare an account. They think this is one more ledger, so they get confused. Don't worry. I'll tell you what is the easy way to understand and remember this. What is memorandum reconciliation account? Reconciliation statement prepared in the form of a ledger account. That's it. Reconciliation statement prepared in the form of ledger account. Ledger account means the total should tally and then there will be debit side, there will be credit side. Yeah. Now let's understand how to prepare a reconciliation account. You can copy it later. Yeah. Like reconciliation statement, I need a starting point, I need ending point. How to decide whether the starting point should be here debit side or should it be on the credit side? It's a ledger account, typical ledger account. Yeah. How to decide this? You tell me. When you prepare P&L account, financial P&L account, net profit should go to the debit side. Net profit should go to the debit side. Correct? Credit side should be more. Debit side should be less. Then net profit will come there. Which means I'm writing here profit as per FA will come here as the starting point. Got it? If profit as per FA is this side, then profit as per CA will be this side. Correct? Now profit as per CA is here. Whatever you want to add in the statement, take it to the same side. Take it to the same side. Whatever you want to deduct, take it to the opposite side. I'll write it as minus, but in ledger you should not write it as minus because you've already changed the side. Correct? Then the total should match. Total should match. Let me take one simple example. Listen to me. Suppose profit as per CA. profit as per CA is 10 rupee, and you need to add two items, say 3 rupee and 1 rupee, and you need to deduct one item minus 2. This will be your profit as per FA. Correct? 10 plus 3 plus 1 minus 2 will be 12. Are you following? Now how to present it in the form of account? See this? See now. Let me just erase this. Profit as per CA, you write here. How much is profit as per CA? 10. And then I said, whatever you want to add, take it to the same side. So 3 will come here, 1 will come here. Correct? And whatever you want to deduct, take it on the opposite side. That is 2. Profit as per FA will be on the opposite side. If CA is this side, FA is this side. Total of the ledger should tally. That's all. That's all. That means it is just a reconciliation statement presented in the form of a ledger account. That's all. I hope it is clear to you. Getting it? Right. Let me explain other possible cases. I'll just erase this. By the way, these videos will be there on our channel. You can play it later also. Okay, if there is no time to copy now, you can write it later. These videos will be there on the same channel. Don't worry. This is case 1. What is case 2? What if there is loss as per FA? Now tell me, net loss as per FA, you will always write here loss as per FA. I am discussing different cases, by the way. This is case 1 possibility, case 2. Okay, yes. If loss as per FA is here, then loss as per CA should be here, just the opposite side. Correct. Sir, what if starting point is one profit and ending point is one loss? See that also now. Third case. Suppose if there is profit as per FA, but there is loss as per CA, then both will come to the same side. Why to worry? Why to worry? Starting point also here, ending point also here. Simple. And then all the items will come here and here. Are you understanding? See, I quickly repeat. Profit as per FA, profit as per CA, two opposite side. Loss as per FA, loss as per CA, two opposite side. One profit as per FA. I know, keep in mind, profit as per FA should always be on the debit side only. Keep that, register that in mind. You already know P&L account, debit side will be profit. Keep that. Then loss as per CA. One is profit, another is loss. That means this will fall correct on the same side. What is the fourth possibility? Now you would have guessed already. Fourth possibility would be, see this. There is loss as per, let me write it here, case 4. Yeah. There is loss as per CA, loss as per FA. But profit as per CA, both will come on the same side. That's it. Because one is loss, FA, another is profit, that is CA. Therefore, that has to come on the same side. So these are the only 4 combinations possible. Quickly repeat. Both profits, one here, one there. Both losses also, one here, one there. One profit, one loss, same side. One loss, one profit, same side. You can copy this format. Any reconciliation account problem can be answered if you can remember this ledger, this format. And remember, because this is a ledger, the total of the ledger should tally whether it is case 1 or case 2 or case 3 or case 4. Done. Yes, I told you you can copy it later also. Don't worry about writing now. Focus on the explanation. Problems here again. Company disclosed a net profit as per cost books. This is cost accounting, net profit. However, financial accounts, net loss. Okay, one is profit, one is loss. That means starting point is with you, ending point is with you. All the items they have given to you. Prepare an account, memorandum reconciliation account. See how they have prepared. You know, in exam what you can do. if you still think you will get confused by account, you first prepare reconciliation statement in pencil. Okay, and then convert that to ledger based on the way I told you. Write one profit here, one profit there, all addition that side, all deletion this side, over. Yeah, yes. See, how did they prepare reconciliation account? They said, we will take profit as per CA this side. I told you, because profit as per FA will be here, but this is profit as per CA. So they took this as the starting point. But ending point is loss, and loss as per FA is here. Loss as per FA is here. And then you have all the items. At the end, the total of the ledger should tally. Are you following? Look at this. Let me take one example. Dividend received on shares. Now this will be an item which will be taken in FA, not in CA. When you take it in FA number profit will be more, CA will be less. To match that, you will have to add. You need to add means your starting point is here. So all additions will come here. All deletions will come here, and net number will be here. Because this is loss, it is coming here only. And then the total of the ledger will tally. It will tally, don't worry. If your statement is correct, account has to be correct. Majority of the students have only this confusion. Sir, account we are ready to prepare. How to decide which is starting point? That is why I showed this to you. We all have to register this one thing in mind. Net profit as per financial accounting will always be on the debit side. This is what we have studied in accounts class for so many years. Correct? If you remember this, then simple. If FA profit is here, then CA profit should be opposite side. Profit is here, that means loss will be opposite side. If this loss is here, then costing loss should be on the opposite side. Simple. From here you can only develop the next case and next case. Getting it? Good. One more problem. Yes, a manufacturing company has disclosed a net loss of 225 as per CA. However, FA records a net loss of 270. Both are net loss. That means one net loss this side, one net loss that side. Now because both are losses. See here, this is also loss and this is also loss. This is easy for you. Both losses. One loss this side, one loss that side. A scrutiny of the data is given to you. Again, 1, 2, 3, 4, 9 items. Prepare an account. See what they did. They said net loss as per FA, because we know profit as per FA will be on the debit side. Loss will be here. If this loss is here, then this loss should be here. Correct? And if you are starting with this, then all the additions will be here, all the deletions will be here. Correct? That's it. That's it. And then the total will tally. This is very easy. This is very easy. The only confusion that can come is the starting point about ledger. From where to start? Where to start? I hope this is clear to all of you. I think with that, we completed the concept of reconciliation of profits. By the way, you can practice all those problems. You can practice all those problems after watching the video. Also, answer is also given to you. Not to worry. Okay? Yes. As I told you, this chapter has got two parts. One part is reconciliation of profits. That's what I discussed so far. The other part is maintenance of books of accounts, which covers journal entry, ledger account, trial balance and P&L account preparation. Okay? Yes. Okay, let us start with the journal entry discussion. I have segregated this discussion into 4 parts. Journal entry related to material cost first, labor cost next, overhead later, and last one will be sales and profit. Now, how to understand and how to remember these journal entries? Journal entries related to material cost can be easily remembered if you understand this flow, this chart or this small diagram. See, supplier is the one who gives us raw material. My focus is only and only on material cost now. Yeah. Supplier is the one who gives us raw material. And who will receive the raw material inside the company? Stores, the go down, warehouse, and then that will be issued to production, which I can write as work in progress. And once the production is done, it will go to FG account, and finally it will go to customer. But this portion will be discussed little later, because this is not about material cost, because it is not going to customer at cost, it will go at price. So you will have to also add some profit to that. So this part I'll discuss little later. Now, you please follow the arrow marks carefully, then you will understand how to remember the ledger accounts easily. When I say transaction number 1, observe the arrow mark. Stores, that is warehouse or godown, is receiving goods from supplier. You will have to treat all these accounts as personal accounts. You need to debit the receiver, receiving department, and credit the giving department or giver. So, who is receiving goods in transaction number 1? Stores, correct? And we have to write it as stores ledger account. And because these accounts are all temporary accounts, we are writing it as stores ledger control account. Please understand, in non-integrated accounting, that's where our focus is on. Integrated accounting will be easy. I will discuss it at the end of the chapter, but the focus should be on non-integrated accounting. As I already told you, what is non-integrated accounting? A system of accounting where cost accounting records and financial accounting records are kept separately, correct? Which means what I will be doing, what journal entries I will be passing will be only in cost accounting records, will be only in cost accounting records or cost accounting books. That means there is some other person, some other accountant who is maintaining financial accounting ledger also, correct? Financial accounting records also, yes. Now, all those ledger accounts which will be maintained by him means the financial accountant, those ledgers, I should not be taking the name of those ledgers. I will use one common ledger called as GLA account, General Ledger Adjustment Account. What do I mean by this? Take an example. When bank loan is taken, is it something for us to worry in cost accounting? Answer is no. Bank loan is a matter of financial accounting. Let them handle. That means debit also, credit also, both will be in financial books. Nothing will be there in cost accounting books. I can completely ignore it. But if I am paying wages in cash, tell me, is wage account necessary in cost accounting? Yes, because in cost sheet we have studied direct wage will be prime cost, indirect wage depending upon which department, mostly factory overhead, it can also be in office and admin, selling and distribution, correct? That means wage account is needed for us. So we have to open a wage control account. But what about cash account? Are we going to deal with cash in cost accounting? No. He is maintaining, he means again financial accounting. Throughout my discussion I will be saying he is maintaining, he means financial accountant. When he is maintaining those ledger accounts, I don't have to write those ledger accounts once again. For all such, I can name them, all such ledgers I can name as GLA account, which means cash account I will write as GLA account, bank account I will write as GLA account, customer account, which is debtor account, I will write as GLA, supplier who is a creditor, that also I will write it as GLA. All those transactions where financial accountant is maintaining a separate ledger for that, I will not write the name. So I will use one common ledger account called as GLA account. Here supplier means creditor, or if it is cash purchase it will be cash, or if the payment is made via check it will be bank, correct? Either cash or bank or supplier or creditor, these accounts are maintained by financial accountant. That means I don't have to write the supplier account name. I can use one common account called as GLA account. In summary, GLA account will have all those items for which financial accountant is maintaining books of accounts. Sir, what about stores ledger? Do you need stores? Do you need raw material in your cost accounting? Yes. Do you need work in progress? Yes. Do you need FG account? Yes. That means maintain all of this. But do you need cash, bank, debtor, supplier, creditor? No. Share capital? No. These accounts I don't need. I can just write it as GLA account. Is that clear? Next. Here you need to understand this maintenance of books of accounts you must connect to cost sheet chapter. Cost sheet preparation format, if you remember, that's what you have to keep in mind while discussing these journal entries. I need direct material, direct labor, direct expenses, that will give you prime cost. That means you will have to open direct material ledger, direct labor ledger, direct expenses ledger. You will not write it as a direct material account, you will write it as stores account or stores ledger account. You will not write it as a direct labor account, you will write it as wage control account. Are you following? Yes. Now let us focus on material first. See, in transaction number 1, I am going to erase all this and write once again. Please follow my explanation. In transaction 1, who is the receiver of goods? Stores ledger control account, correct? And who is the giver of goods? Supplier, and supplier account is maintained by financial accountant. That means I should replace it with the word GLA. That means what should be the journal entry? Stores ledger control account debit. Remember, debit the receiver. Yeah. SLC, I will say SLC, understand. Stores ledger control account. Yeah. SLC account debit to GLA account, correct? That is your journal entry number 1. Clear? Let's focus on transaction 2. Now, what is happening in transaction 2? Stores, that is godown, is issuing some raw material to whom? Production, which is called WIP control account, right? Who is the receiver of goods? WIP control account. And who is the giver of goods? Stores ledger control accounts. Do you need both RM account and WIP account in your cost sheet? Yes. That means you can't write GLA here. Who is the receiver? WIP debited. Who is the giver? SLC credited. That means the entry should be WIP control account debit to SLC account. Are you following? You have to focus on the arrow mark, right? It will tell you who is the receiver and who is the giver. Accordingly, pass the journal entry. As simple as that. Third one, what is happening in third transaction? WIP, which is production department, is transferring some goods to FG. Simple, production has been completed. We are now transferring it to FG where they will do the packing. Who is the receiver of goods here? FG control account, correct? And who is the giver of goods here? WIP control account. That means whom you will debit, receiver, that is FG control account. And who is the giver? WIP, that will be credited. So the answer will be FG control account debit to WIP control account. Here is the third journal entry. Clear to you? Next, what is fourth transaction? Observe the transaction first, then the entry. Fourth arrow mark is going this way. That means from stores, some goods are going back to supplier. That means this is purchase return, correct? Now who is the receiver? Supplier. But you will not write as supplier's account. You will write it as GLA account, correct? And who is the giver? SLC account. That means GLA account debit to SLC account. That is a journal entry here. In exam, you write even the narration being raw material returned to supplier. Got it? Right. Next, what is happening in transaction 5? You observe WIP department, which means production department, is giving some material back to godown or stores. What does it mean? Maybe they issued 100 kg. Stores ledger issued 100 kg to WIP. They used only 80 kg. 20 kg is returned. Now who is the receiver of goods? SLC, correct? So follow the arrow mark. Who is the receiver of goods? SLC. Who is the giver of goods? WIP. That means what should be the journal entry? SLC account debit to WIP control account. Here is this. SLC control account, SLC account debit to WIP control account. They will give you in the question past journal entries or prepare ledger account. They will say raw material of 10,000 kg worth 2 rupee is returned. worth 2 rupee per kg is returned by production department to stores. That means receiver is SLC, giver is WIP. Got it? So debit SLC, credit WIP. Next, transaction number 6. What is happening in transaction 6? FG control account is returning something to WIP control account. What should this transaction be? Maybe when FG department is packing the commodities, packing the goods, they got to know that there are some defects in the production. They will send it back to WIP or production department and say, please correct this and send it back. Please rework, correct? Please correct the defect and send it back. Now who will receive this? WIP department. And who will be giving it? FG control department. That means receiver will be debited, WIP control account debit to FG control account. Clear? That is your journal entry number 6. Got it? Next. What is happening in transaction 7? Observe, I am circling it. Yeah. From supplier, some goods are directly coming to WIP. When will this happen? Say for example, someday this purchase department, employees in warehouse and purchase department, they were on leave. Okay. And there was a high demand and production department came on Sunday to work. On Sunday they came to work. That time they wanted some material. But the stores department was closed, godown was closed, purchase department was not there. They took a permission from senior officer and called supplier and said, dear supplier, please supply some goods today. Now tell me, who will be receiving these goods? Directly WIP control will receive this. And who will be giving this? Supplier. Now who is the receiver here? WIP control account, that will be debited. Who will be the giver? Supplier. That will be GLA, that gets credited. See the transaction here. See the journal entry. WIP control account to GLA account, whether cash or bank or on credit. Anyway, it is maintained by financial accountant. And these people, WIP people, may even return it the same day saying, no, this is not the material that we wanted. In that case, who will be the receiver of goods? Supplier. That means GLA account debit. And who is the giver? WIP control account credit. Simple. That's all. These are the 8 journal entries that you should know to understand material cost. Done. Once the material is done, what is the next thing we should discuss? Right. Labor. Let's see. Observe here. Just give me a minute. Yeah. Journal entries related to labor cost. That is wages. First, wage paid and then wage accounted or charged. Now what is the entry for wage paid? Please understand, wage is an expenditure. All expenses are to be debited. This accounting rule you anyway know. That means wage control account will be debited. How do you pay wage? Either in the form of cash or in the form of bank transfer. That means wage control account debit to, you can't write cash or bank, I've already told you, it will be GLA account. Therefore the entry is wage control account debit to GLA account. You can see here, wage control account debit to GLA account. Right. Now one part of the work is done, wage paid, but I need to record wage in cost sheet properly. What do I mean by properly recording? I need to know out of total wages that I am paying, say 1 lakh rupee, I need to know how much of that is direct labor, how much of that is indirect labor. If it is direct labor, we all know they are working in production department. They are doing main activity, correct? But if it is indirect labor, then they might be working in factory, they might be working in office, might be even in selling and distribution departments, right? So next part is charging or recovering the wages. First, direct wage. Tell me, direct wage, when I say, these are the people who are working in production department and these are the main workers, correct? That means entire direct wage cost should be charged to WIP or main production activity. Correct. You are charging it to whom? WIP account. You are charging from which account? wage control account. Please follow my explanation. This amount, say you are paying 100 rupee total wage. Okay, in that 40 rupees direct wage. Now this 40 rupee direct wage should be transferred or charged to WIP. That means WIP will receive this money from wage control. Are you following? In the form of journal entry, you observe when I pay, see this, when you prepare a ledger account, when you pay wages, what will be the entry? This is a wage control ledger. Wage control to GLA. You have paid 100, correct? Now I need to know where should I charge this 100. If it is direct wage, it should be charged to production department. Production department means which ledger? WIP control account. That means this will go to WIP control account, correct? From which account it will go? Wage control account. So WIP control account debit to wage control account. Here in wage control, it will come to the credit side. I hope you are following. When I pay wage control was debited, cash or bank, that is GLA, was credited. Now that I am segregating or charging wage to respective department, wage will get credited. Wage will get credited. To which account am I transferring? That account will be the receiving account and that should be debited. If it is direct wage, it should go to work in progress account. So the entry will be WIP control account to wage control account. You can see the entry here, WIP control account to wage control account. Right. Next. What about indirect wage? The moment you see this word indirect, that means you should understand all of this will go to overhead account. Correct. Which overhead? Depends. If those workers are working in factory, it should go to factory overhead. If they are working in office, it will go to office overhead. If they are working in showroom, that will go to selling and distribution overhead. Correct. From which account will this all go? From wage only, wage control and wage control. Suppose direct wage is 40, then I'll write in blue, then the indirect wage should be 60. This should be 60. In that, suppose 10 is here, 10 is here and 40 is here. Then out of 100, you follow here from here. Out of 100, 40 was direct wage. We transferred to WIP. 60 was indirect wage. Normally what happens in most of the books, in most of the questions you would have seen, they will only say direct labor, indirect labor. They won't tell you whether it is office or selling and distribution. And what is our general practice? If the word labor is used, if the word wage is used, indirect labor or indirect wage means we will charge it to factory overhead only. But if they say out of 100, 40 is direct, balance is indirect. In indirect also, if they give segregation, this is how you will have to do. Correct. Now you visualize your ledger. 40 was on the credit side. Correct. Here 100 was debit, 40 WIP. Now 10 will be factory overhead, 10 will be office overhead, 40 will be selling overhead. Total of the ledger will tally. There will be no closing balance because this is an expenditure. Whatever I have paid, I have charged. Clear? See these journal entries now. Journal entry number 11 is, observe here, factory overhead to wage control, office overhead to wage control, selling overhead to wage control. Is it clear now? We have completed 13 journal entries where we discussed material cost and labor cost. Material done, labor done. What next now? Overheads. Let's see. Yes. Again, overhead entries will be overhead payment and overhead transfer. But here, because you have 3 overheads, I have segregated everything. You please follow the chart. Factory overhead when you pay, office overhead when you pay, selling overhead when you pay. Or you can remember all of this as concerned overhead. Whichever is the overhead, that overhead. Now tell me, when overhead is paid, overhead is an expenditure. All expenses are to be debited. This we know very well. Correct? What should be the journal entry? Factory overhead control account debit. Paying means it is either cash or bank. Right? We won't write cash or bank. We will write what? GLA account. So it will be factory overhead control account to GLA account. What if it is office overhead? Office overhead control account to GLA account. What if it is selling and distribution? Selling and distribution overhead to GLA account. Simple. You can actually remember all of this together as concerned overhead control account to GLA account. That's it. Done? Right. Next. These overheads are paid and you need to classify them or categorize them. Correct? How to do so? Factory overhead. Now, remember your cost sheet. After prime cost comes factory overhead. What comes after factory overhead? WIP. Adjustment, that is opening WIP, closing WIP. You get factory cost, then you adjust WIP, which means that WIP will include this factory overhead. I repeat, in cost sheet, after prime cost comes factory overhead. Yes. After factory overhead comes WIP adjustment. Correct. That means that WIP includes this factory overhead. That means factory overhead is charged to WIP. Correct. Which means what should be the journal entry now? WIP control account debit to factory overhead control account. Now you observe factory overhead ledger when you prepare, how will it be? If you prepare a factory overhead control account ledger, here when you pay factory overhead to GLA 100, here when you charge WIP to factory overhead 100. Correct? Yes. But we also know in overhead chapter we have studied whatever I pay need not be equal to whatever I charge, because charging is based on estimation, whereas payment is based on actual. What if, sir, we have paid 100 but we have charged only 80, not 100, we have charged only 80. Now tell me what will happen. You have paid 100, you have charged only 80. The difference will be under absorption. Paid more, charged less. Charging means recovering, absorbing, correct? Paid more but charged less. This 20 will be under absorption. What to do with this 20? Should I write it as balance carried down or should I write it as costing P&L? I will discuss it little later. I'm still in overhead. I'll discuss under and over absorption little later. Alright, done. So 17th entry should be, you see here, sorry, 1 minute. 17th journal entry is WIP to factory overhead. Okay. What should be 18th entry? Here we are talking about charging the office overhead. In your cost sheet, after WIP adjustment, you get net factory cost. Net factory cost. Then you take office administration related to production, correct? And then comes COP, cost of production, and then you adjust your FG stock. That means when you are adjusting FG stock, office and administration overhead will be part of FG stock valuation. Correct. That means office and administration overhead will be transferred to or will be included in FG control account. That means who will receive this money? FG control account. From which account? Office and administration overhead. Correct? If it is related to production, you do it as journal entry 18. If it is not related to production, then you will mix it with selling and distribution and transfer it to cost of sale, which I will discuss now. So the 18th entry will be transferring office overhead to FG control account related to production will be charged to FG. Okay. What next? Let me scroll up. The last one that I have is selling and distribution overhead. Tell me, after COP, you adjust FG stock, you get COGS. After that, I'm talking about cost sheet. After that, you add selling and distribution, then you get total cost or cost of sale. That means total cost account or cost of sales account should include, cost of sales account should include selling and distribution overhead. That means when you say cost of sales should include selling and distribution, you're indirectly saying selling and distribution will also be transferred to cost of sales account. Now who is the receiver? Cost of sales account. From which account will the money go? Selling and distribution. Therefore, what should be the entry? see here. Cost of sales account debit to selling and distribution overhead, being selling, distribution and general overhead which is not related to production is charged to cost of sales or total cost. Got it? Yes. Now, what you charge on the debit side and what you pay on the debit side of overhead account and what you charge which will be on the credit side of overhead account need not be same. See the explanation here. The difference between overhead incurred, now where will the overhead incurred come? On the debit side, because overhead control account debit to GLA is the entry when you pay overhead, correct? And overhead charged, say WIP control account to factory overhead, that means charging is here. Suppose you have paid 10 but charged only 8, then the difference will be 2 and that will be either under absorption or over absorption. In my case, it is under absorption because you have paid more, you have charged less, the difference is under absorption. What to do with this? This will be transferred to costing P&L account. If it is under absorption, you will write here on the credit side, as I told you, under absorption to here in bracket costing P&L. Now visualize costing P&L. When you prepare costing P&L, this will come to the debit side as 2 in the P&L account, and P&L account on the debit side should be always expenses and losses. And when there is an under absorption, it's a kind of loss to you. That's why I said transfer it to costing P&L account. Sir, what if it is over absorption? Then you will have this 2 here, not this side, you will have it here, and that will also go to costing P&L. Later when you prepare, it will be on the credit side as a gain or a saving, advantage or benefit. Got it? Yes. See the journal entry. Costing P&L account debit to concerned overhead. When you are debiting the costing P&L gets debited with expenses or losses. That means this has to be under absorption. Correct. Concerned overhead account debit to costing P&L. You are crediting, that means this should be a gain. Gain means it should be over absorption of overheads transferred to costing P&L account. Got it? Yes. Sometimes they will give you a transaction like this. Let me explain it here. They'll give you a transaction something like this. They say raw material is used for factory repairs. Raw material which is in stores is used for factory repairs. Now factory repair is a factory overhead. This we all know. And you are spending something for factory repair. That means factory overhead control account should be debited. Debit. But should you write GLA account? The answer is no. Why should you not write GLA account? You are not paying cash or check. What are you using? You are using your own stock. That means the stock balance, SLC balance should come down. So SLC account will get credited. SLC account will get credited. I repeat, when you are using your own raw material for factory repairs, when you are using your own material for office purpose, then what will happen? That overhead account will be debited because you are spending, you are incurring. You are not spending in cash, you are incurring an overhead cost. But are you paying cash? No, you are using stock, and as we all know in accounts, stock account, raw material account is an asset account. Correct? And if there is a decrease in the asset balance, then that has to be credited. Therefore, the entry will be factory overhead control account debit. I just wrote factory, it can be anything. Yeah, concerned overhead. Let's understand this way. Concerned overhead control account debit to stores ledger control account. And when will you use this journal entry? When raw material is used. Raw material is used for factory overhead purpose or office overhead purpose. If you want, you can quickly make a note of this journal entry. All of you, please make a note of this journal entry right here as additional notes. You write concerned overhead control account debit. Concerned overhead control account debit to stores ledger control account SLC account. In narration you write being raw material from stores is used for factory repair or for office purpose. Okay, I have a small question for you. What if they say company decided to distribute some free samples of FG on festival day? Now when you are giving something as free sample, it is selling and distribution overhead account. You are incurring selling and distribution overhead control account. That should be debited. But are you paying cash? No. What are you giving? You are giving FG. You are giving your finished goods free samples to the public. That means which balance will come down? FG control account balance will come down, correct? Right. So what will be the narration? Being FG used for promotion purpose, marketing purpose, advertisement purpose. If you want, make a note of this also. Selling and distribution overhead control account debit. Selling and distribution overhead control account debit to FG control account. FG control account being FG stock used for promotion, branding or advertisement purpose. Promotion, branding or advertisement purpose. Right? Yes. Let me go back. Here we were discussing under over absorption. Under absorption being a loss, I said that will go to the debit side of costing P&L account. And over absorption being a gain, it will go to the credit side of costing P&L account. Right. But look at this explanation. Some companies may choose to carry forward the balance of under or over absorption to subsequent financial year. In that case, entry number 20 and 21. What is 20 and 21 for? Transferring under or over absorption to costing P&L. You don't want to transfer. Look at this. Debit side you have 100. Credit side you have 80. What will you do with this 20? I said if you are transferring it to P&L, this is the entry to be passed. But now if company says, no, we will not transfer it to P&L account, we want to carry it forward to next year, then simple, right? It has balance carried down, that's all. If you want to carry this to next year, then write as balance carried down. See this. In that case, entry 20 and 21 will not be needed. Difference in the ledger account will be written as simple, balance carried down. Now some students will have a new confusion now. Sir, in exam, what to do? Should we transfer it to costing P&L or should we write it as balance carried down? That depends on the question. See here. How to decide whether to transfer to P&L or to carry forward to next year? How to decide it? It depends on the information given in the question. That is, if nothing is given, then transfer it to P&L and give a note. In some questions, very important, in the opening trial balance, that is trial balance as on the first day of the year, there will be overhead control account opening balance, which means it is coming from the previous year. If there is overhead control account opening balance, that means it has to be coming from previous year. we should understand that company's policy is to carry forward the under or over absorption balance. If there is opening balance, that means it has come from last year. That means company's policy is to carry forward the under or over absorption balances to subsequent years. Let us also do the same thing in this year. In simple, if they have given opening balance, understand company's policy is to carry it to subsequent years. What I should do? So do the same thing even in this year, that is carry forward to next year. Don't transfer it to P&L. Understand? The moment you transfer it to P&L, you are indirectly accepting that you are writing it off in the same year. You are writing it off in the same year. But the moment you say, no, I will carry forward to next year, that means you want to recover it from customers in the future. That is why you are carrying forward. When the opening balance has some balance coming from previous year, you also this year, at the end of your answer, when you prepare overhead ledger, transfer it to next year. Got it? If nothing is given, as I told you, you will transfer it to costing P&L straight away. Okay, right. Now, with 21 journal entries, we have discussed entries related to material, related to labor, and related to overhead, including under or over absorption. We have come till cost of sales, where selling and distribution, we said it will be transferred to cost of sale. That means we have come till cost of sales account debit to selling and distribution overhead account. Yes. Now, what is the entry for total cost and income? Where will this total cost go? When you prepare P&L account, total cost should go to the debit side. Debit side. That means costing P&L account debit to cost of sales account, being total cost transfer to the debit side of costing P&L account. Obviously, cost will always go to the debit side of P&L account. What is on the other side now? Sales. Now tell me, when you sell, it will be either for cash or for bank or to the debtor. Correct? Credit sale to the debtor. All three ledger accounts, cash, bank, debtor account, is maintained by, correct, financial accountant. So I need not have to write the name. I can use a common ledger called GLA account. And sales will be on the credit side of P&L account. Therefore, it is GLA to costing P&L account. Now you observe, entry 22 is total cost. Total cost is called as cost of sale. And entry 23 is total revenue, or I can write as income or sales. Now look at this. Difference between entry number 23, sales entry, and entry number 20, not 4, this is 22. Make a correction. Entry number 23 and 22. 22 is cost entry, will be profit or loss, which will be transferred to GLA. Why profit is going to GLA? Where will profit go in your accounts class? To reserves or surplus? Are we in costing class going to maintain a reserve account or surplus account? No. Therefore, we will write it as GLA account. This GLA has other names. General ledger account GLA can be also termed as GLC, General Ledger Control Account, CLA, Cost Ledger Adjustment Account, or CLC, which is Cost Ledger Control Account. And our study material mainly uses GLA account. Okay. Now, what kind of questions can come in exam? 5 marks questions can be to pass journal entries only. They will give you 5 transactions. I have discussed 23 transactions, 23 journal entries, one of these 23. Plus additionally also I discussed few. Yeah. And I will now discuss few in next 15-20 minutes. Either a question can be purely on journal entry. 5 entries, 5 mark, 1 mark each. Please write a narration in exam without fail. And don't use short forms as GLA, SLC. In classroom it's okay. Now also it's okay, but in exam, no, it has to be stores ledger control account only. No short forms, please. Okay. 5 marks question can be to pass journal entries. 10 marks if they ask, it will not be journal entry. It will be to prepare all these ledger accounts. SLC, WIP, wage control, GLA, and so on. Okay. Or they can go one step further for 10 marks and ask you to prepare trial balance also. Simple. This is something that you have learned from first PUC. If you know how to pass the correct journal entry, everything up to balance sheet is just a flow. Whatever journal you pass, that only you will post in ledger. Then you will do the totaling of the ledger. Then you will do the balancing. That will go to trial balance. Asset and liability will go to balance sheet. Income expense will go to P&L. That's all. You understand, your focus should be on understanding the journal entry. That is why before going to the problem only, I took so much of time to explain each entry for you. If you understand the correct journal entry, from there everything will flow. I know the moment you are correct with journal, ledger, trial balance, P&L will not go wrong. Balance sheet anyway we don't prepare in costing. Asset liability is kept outside costing. We deal only with income and expense. That means only up to costing P&L account. They may ask you balance sheet extract, but not full balance sheet, right? Yes. Now tell me, what will be there in costing P&L account ultimately? Costing P&L account. I'll just scroll up. Here I said on the debit side, costing P&L to cost of sale. That means on the debit side you will have COS. This is basically total cost. On the credit side it will be GLA, basically the sales. That means here you will have GLA, correct? The difference I said will be profit or loss, but there can be few more items which can come in costing P&L account. Which are the items? Under absorption or over absorption, I told you, can be transferred to P&L account, costing P&L account. Whenever I say P&L, understand it as costing P&L. That means if there is under absorption being a loss, even that will come to the debit side, correct? What if there is over absorption? That will come here. Can there be both under or over absorption in the same ledger? Sir, yes, possible. Not same overhead ledger. In P&L it is possible. How? Factory overhead may be under absorbed. Office overhead can be over absorbed. So under absorptions will come on the debit side. Over absorption will come on the credit side. Sir, is that all? Will I get profit or loss? No, there can be one more item. What is that one more item? Suppose there is a theft of raw material. Theft. This is an abnormal loss. And in cost sheet chapter I told you, any abnormal item will not go to cost sheet. It will directly go to P&L as our loss. I repeatedly said it will be our loss. Fine paid, penalty paid, correct? All these expenses will not go to cost sheet, but it will hit my P&L straight away. Take an example. Suppose there is a theft. And we have lost 100 kg stock, raw material. Now the SLC balance, stores, ledger, control account balance should come down because raw material is going. And is it a normal cost that you will consider it as consumption? No, nobody consumed it. It has been stolen. That means it's an abnormal loss. Any loss should come to the debit side. That means what should be the journal entry? Costing P&L account debit to stores ledger control account. By doing this, stores ledger balance will come down. Obviously the stock balance should come down and an abnormal loss gets debited to P&L, and this will come and sit here. SLC account, abnormal loss. Deficiency found in stock, loss due to fire, loss due to accident and damage, etc. If they give, all such abnormal losses will come here. Then you will do the total. Difference will be either profit or loss, and that will also go to GLA account, reserves and surplus, that is GLA account. I think there was a small technical issue, so let me quickly repeat this. Costing P&L on the debit side will have cost of sales, which is total cost. On the credit side, sales income, which is GLA. And what else can come? One, under absorption, which is a loss, that will come on the debit side. If there is over absorption of some other overhead, that is, if under absorption is factory, then over absorption can be from office admin or selling distribution, that can come here. And if there is any abnormal loss, as I told you, all abnormal losses will be debited to costing P&L. Any loss should be debited to P&L. And if it is abnormal loss of raw material, it will be reduced from SLC balance. What if it is theft of FG? Then that will be reduced from FG balance, correct? So it will be costing P&L to SLC. Theft of WIP, it will be to WIP. Theft of FG to FG control account. But costing P&L will get debited. That is more important here because I'm focusing more on costing P&L now. Then you do the total. The difference between the total of the debit and credit side will be either profit or loss, which will go to GLA. Basically it goes to reserves and surplus. We don't write reserve surplus, therefore we write it as GLA account, right? Yes. Before I go to problems, one more thing that I wanted to discuss was, this is the entry 23. Let me just scroll up. Yeah, 23. This is the journal entry for sales, correct? What if it is sales return? Obviously reversal entry. Costing P&L account debit to GLA account, correct? Yes. In some questions they say sales return at cost. Sales return at cost. Understand, this entry is at the selling price, which includes profit. What if they say sales return at cost? When there is sales return at cost, please understand, sales return at cost, that means the FG balance will increase. FG balance will increase. So FG account, FG control account will be debited to cost of sales account, to cost of sales account, not costing P&L, because when you credit cost of sale, it is at cost. But if you are writing costing P&L, please understand it will be at price. Therefore, the reversal entry will be FG account debit to cost of sale. Cost of sale is total cost. And in the question when they say sales return, then you do what I have circled here. If they just say sales return. If they say sales return at cost, then only use cost of sales account. FG account debit to cost of sales account. In one of the questions you will see this, you will get to know, right? Okay, purchase return you anyway know. Alright, chalo, problems. I have not taken any journal entry question because I have discussed all 23 journal entries in detail. I have directly taken some ledger accounts. Here they have given as on 30th September following balances existed, correct? Stores, WIP, FG, manufacturing overhead control account. There is opening balance in overhead control account. What does it mean? Company's policy is to carry forward the balance of under or over absorption to subsequent year. This is a hint for you this year also. At the end, if you get under or over absorption, don't transfer it to P&L. Transfer it to next year, write it as balance carried on, because if there is an opening balance, that's a hint that they don't write it off, they will always carry to next period. You also carry to next period. Okay, CLC account means I told you GLA account, all the opening balances are given, and then they have given the transactions. Okay, this many transactions, and then see, they want you to prepare almost every ledger account. CLC, that means GLA, SLC, WIP, finished stock, manufacturing, wages, and trial balance also. Now if you understand the correct journal entry for this many items, then ledger, trial balance is all just clerical work, correct? Will be very easy. When they say finished product at cost, what does it mean? Production got over. So who will be receiving it? FG control account debit to who will be giving it? WIP control account. Simple. Second, manufacturing overhead incurred. So manufacturing overhead control account debit to GLA account because it is incurred. Yes. Raw material purchased. SLC account debit to GLA account, correct? Like this, you need to identify what is the correct journal entry for all of this. But question says prepare only ledger accounts, so you don't have to do journals, you will have to do only ledgers. Clear? Opening balances are already here. Opening balances are already here. You will have to start with this in every ledger account. Like this, all the entries you can see. Material issued to production, simple. WIP receiver, SLC giver. So WIP control account debit to SLC. Sales return at cost, I told you just now. FG control account debit to cost of sale. Material return to supplier. This will be just the opposite of purchase. Here, sorry, I'm circling in blue. Here you have purchase and here you have return. If this is SLC to GLA, then this will be GLA to SLC. Please understand, if you get the journal entries correctly, this part of the chapter is very easy, because ledger, trial balance, I know you will do if the journal entries are correct. Then what are they saying? Manufacturing overhead charged to production. That means WIP control account to manufacturing overhead control account. They are saying charged to production. They are not saying incurred or paid. That is done here. See, I am circling in green now. That is done. Incurring is done. Now it is charging. When you incur manufacturing overhead to GLA. Now you are charging it to production, means WIP to manufacturing overhead control account. Like this, you need to understand what is the correct journal entry. After that, it is only clerical work. Open all the ledger account. You see how they have done. Open every ledger. CLC, SLC, WIP and so on. See this up to trial balance, and then that's the end of the answer. Now I have something important to discuss here. You will open all the ledger accounts, that I know, because if you know the journal entry, this you are doing from first PUC. You will open all the ledger accounts and write. Important part is, what is the order in which I should close these ledgers? Opening the ledgers is very easy. Opening balance is there in trial balance, and every transaction you get SLC to GLA, open SLC, open GLA, SLC to GLA, so debit side in GLA by SLC. This you will do. This you are learning from years now. But how do you close? In what order I should close the ledgers? That is important. Let us discuss that now. Please follow this. Please follow this. If you want, you can write also. In what way you are going to close the ledger account? The easiest way to remember that is, in what order you prepare cost sheet. What is the first item in your cost sheet? Direct material. Which is the ledger account for that? SLC. So first close SLC. Which is the second item? Direct labor. That means close wage control. I am not saying open. I know you will open the accounts easily. Closing the ledger is where the challenge is. Wage control. Correct? Then direct expense. Normally there won't be any, don't worry. Prime cost is a subtotal, so we don't open a ledger account. Then comes factory overhead. Factory overhead. Which is the correct ledger account for this? Factory overhead control account. Correct? Then you get gross factory cost, which is a subtotal. Then you adjust opening and closing WIP, and which is the relevant ledger for that. WIP control account is the relevant ledger. Correct? And then you have office admin overhead, which is the relevant ledger. Office admin overhead control account. Correct? Then you will adjust FG stock, which is the correct ledger account for FG. You have an account, name itself is correct, FG control account. Are you following? That means you just have to remember the order in which you prepare cost sheet. In the same order you are going to close the ledgers. Getting it? What comes after this? Selling and distribution, S&D overhead, and which is the relevant ledger for S&D? S&D overhead control account. Correct. When you take all of this, you get total cost. Total cost means cost of sales account. Correct. Profit will be in GLA, and then you will ultimately have sales. You will have sales. Correct. Profit and all of this is there in these two. Is there in GLA and costing P&L account. GLA and costing P&L account. That's it. This is how you are going to prepare or close ledger account. Keep GLA at the end always. Why GLA is at the end? GLA has everything. Please understand. I can say GLA is like a dustbin. Anything and everything can go to GLA. Why? When I buy raw material also, SLC to GLA, correct? When I pay wage also, wage to GLA. When I say factory electricity bill also, factory overhead account debit to GLA. When I sell also GLA, when I buy also GLA, when I pay also GLA, when I receive also GLA. Everything related to cash, bank, debtor, creditor is going to GLA. That means GLA will have anything and everything coming from any of the journal entries. Therefore, better you close the GLA at the end. Please mark somewhere, GLA should be closed at the end. Okay, now it's very easy to you. You know in what order you are going to prepare and you know in what order you are going to close. I quickly repeat, the order of opening the ledgers will be as per the question. Whatever item comes, accordingly you keep opening the ledgers. Correct? The order of closing the ledger, all this is closing the ledger by the way, yeah. Order of closing the ledger will be the same order in which you prepare cost sheet. Okay? Yes. Now all of you please make a note of it. You can write the heading as order of closing ledger accounts. Order of closing ledger accounts. So this will be first, this will be second and third and so on. Okay? Yes. How are you going to close? First, in cost sheet, direct material. That means I will close SLC. Then in cost sheet, direct labor. That means I should close wage control. Then factory overhead. That means factory overhead control. Right? Then WIP will be adjusted. That means WIP control. Then office admin overhead. That means that account. Then FG control account. Then selling and distribution. That account. Following, then total cost of sales account, then costing P&L. At the end, you are going to close GLA account. Clear to you? Yes. I hope all of you have copied this. I repeat once again for your benefit. The order in which you are going to open the ledger depends on the data given in the question. If they have given opening trial balance, you will start from there. Then transaction by transaction, you keep filling all the items. Clear? The order in which you are going to close the ledger is the order in which you prepare cost sheet. So if you remember cost sheet, convert cost sheet into ledger account. Direct material, SLC. Wages, wage control. Factory overhead control. And so on. Hope it's clear to everybody now. Yes. Let me go back. So they have completed all the ledger accounts, which you can do today after watching this session. You can do all of this, and then cost of sales, and you see here trial balance. The closing trial balance should tally. SLC, WIP, FG, manufacturing overhead. See here, manufacturing overhead control account, they have written it as closing balance. Why? It may be under or over absorption. Correct? Opening or closing, don't worry. Under or over absorption. But in the opening trial balance, this number was given. That means we understood that the policy of the company is to carry forward under or over absorption. Therefore, what we did in this year also, we did not transfer it to costing P&L. We have carried it forward to next year. Getting it? Yes. Now in this question you must observe one thing which may or may not happen in exam. Let me just scroll up. Observe this many transactions you have. I'm just erasing. Yeah, this many transactions you have. Do you anywhere see sales information? No. You have finished product, manufacturing overhead, RM, factory wage, indirect labor, cost of sale you have, total cost you have, but not sales. Material issued, sales return. Sales return, maybe last year you sold, now there is a return. So it's not sales of this year. Correct? Manufacturing overhead. That means nowhere in the question there is information about sales. If there is no information about sales, tell me which is that ledger account which you cannot prepare? Costing P&L account. Why? costing P&L account credit side will be always sales, and there is no information about sales. So what will you do? Even if you open costing P&L account, you will have cost of sales on the debit side, 875,000. Imagine this is your costing P&L account. This 875 will come and sit here. But unless you have sales, you can't write anything here. What if in exam they give sales here as 10 lakh rupee? Assume one more information, 10 lakh. Then that 10 lakh will come here. This will be GLA because it is either cash sale or credit sale, debtor account, GLA. Then you will have profit or loss as the case may be. That will go to reserves and surplus, which is GLA account. If they give sales, do it this way. If they don't give sales, then don't open costing P&L account. Is it clear to you? There are three possible cases. Let me just explain once again and you can all make a note. Three possible cases. One, sales is not given. That means the last ledger that you will do is cost of sales and GLA. That's it. No profit and loss account. No costing P&L account. Second, sales is given. Then you will prepare cost of sale. Correct? And then you will prepare costing P&L also because sales is given. And then GLA. Correct? This will show you total cost. This on the credit side will have total revenue. Therefore, you can do it. Third possibility, they will not give you sale, but they say goods are sold at 10% profit on total cost. Now, total cost means cost of sale. Total cost means cost of sale. And they are saying that goods are sold at 10% profit on this. Then add this 10%, that will be considered as sales. Now you can prepare cost of sales also, costing P&L also, and finally GLA also. GLA also. Are you following? I quickly repeat. Three variety of questions with respect to sales. One, sales is not given, no information about sales. Then you will end your answer with cost of sales account and GLA account. You cannot prepare a P&L account. In trial balance also, you will not have any impact of profit or loss. No problem. Second, sales is given like the one that I showed you just now. 10 lakh is given as sales. Good. Then take that sales on the credit side of costing P&L. Now you can prepare cost of sale, that anyway is possible. You can do even costing P&L on the credit side. You will show the revenue. And then obviously you will end with GLA. Third variety question is sales will not be directly given, but an adjustment will be given saying goods are sold at total cost plus 10% or factory cost plus 10% or cost of production plus 10%. Then take that number, in this example 8,75,000 plus 10%, that will be sales. Now you can put that sales number in costing P&L. Debit side will cost of sales anyway, that will come from your ledger accounts. Ultimately GLA. Sales not given, sales clearly given, or sales given as cost plus some percentage of profit. These are the only three possibilities in exam. Okay, in this question, the question that I discussed just now, only 8,75,000, I am marking in blue, 8,75,000 is given, sales is not given. Therefore, you see my answer will end with only cost of sales account. You can see here, my last ledger here is cost of sales. FG account 875, there is a return. And then you will just write it as balance carried down because you don't have any information about sales. So with that you will end your trial balance. And when you prepare your trial balance at the end, you must observe few things. SLC, WIP, FG, these are all stock items, correct? Inventory items, and asset, and inventory is an asset, you know. All asset accounts, you will have debit balance. This should have debit balance. In case by mistake, if you do something wrong and it comes here, then please stop and recheck. Something has gone wrong. Then overhead account can be either debit balance or credit balance depending upon whether there is under absorption or over absorption. Cost of sales, the debit balance obviously because I don't have sales information, and then GLA here, and the total of the ledger should tally. Total of the ledger should tally. Clear to you? Yes. I have taken one more problem which is similar to this, which I want you guys to practice today after watching this video. You have SLC, WAP, FG, overhead control account, and CLC, which is cost ledger control account. And then you have all the transaction, FG, manufacturing, and so on, similar to previous problem. Okay, and then the question is, look at this. This will all be for 10 marks. CLC, SLC, WIP, FG, manufacturing, wage control, cost of sale, and trial balance. Now when they say cost of sale and trial balance, that means there is no costing P&L account, basically saying that there is no information about sales. I told you 3 possible cases, right? That means this question is again falling under case 1. Sales data is not given, so our answer will end with cost of sales and GLA, right? If you want to practice the same question at home, what you can do, right? For your reference, you can add just one adjustment. What you can do here, you write one adjustment. Goods are sold at 10% profit on total cost. Take this adjustment. Now you can prepare even costing P&L. Yeah, in that case, you know what will happen? Let me just show it to you. If you plan to work out this way at home, this is what will happen. In your cost of sales account, you will not write by balance carried down 1,60,000. You will write by costing P&L 1,60,000. And then you will open a costing P&L account. Let me show it here itself. Yeah. You'll open a costing P&L account. This will hit the debit side 160,000. And then you will write by sale 160 plus 10% profit. Correct. That will be by GLA 176,000. 1,60,000 plus 10%. This 16,000 will be your net profit. That will go to GLA. You prepare this ledger and then you do your trial balance. Remember, if you make that change, trial balance will tally, but the total need not be this number. Okay, some of these balances will change. Now cost of sales won't be there. Cost of sales 1,60,000 won't be there. Accordingly, what will happen? Your GLA, this will change because 1,76,000 also will go to GLA. Profit will also go to GLA. These things will change. The total of the trial balance will tally. Need not be this 987. Keep that in mind. But total will tally. So one homework from my side to you is make this correction. I will wait for a minute. All of you add this extra adjustment. Yes, everybody make a note of this extra adjustment. Goods are sold at, make a note, goods are sold at 10% profit on total cost. 10% profit on total cost. Okay, or cost of sales. Got it? Also you make a note when you make that change. I'm sorry. Yeah, also make a note, everybody, accordingly, next line you write, accordingly, cost of sales account will not show any closing balance. I'm marking in blue now. Yeah, cost of sales will have no balance. And that amount will be transferred to costing P&L account. That amount will be transferred to costing P&L account. Right? Next you write costing P&L account will be as follows. Costing P&L account will be as follows. Now you write this costing P&L account. Debit side will be coming from COS. that is 1,60,000, correct? And credit side will be sales, and that will be GLA 1,76,000. How did I get that? 1,60,000 cost plus 10% profit, 1,76,000. Now the total will be 1,76,000, and difference will be profit in bracket GLA account. Profit, that is GLA account. Right? Next line you write, because of above additional adjustment, write down, because of above additional adjustment, trial balance total will be different, from what is given in the material, will be different from what is given in the material. Full stop, in bracket. However, the total of trial balance must tally. Total of trial balance must tally. Done? Yes. I think with that we completed the discussion on this chapter. Please understand, most important part, especially in this journal ledger discussion, is you understand those diagrams and those charts that I've given. Okay, if those diagrams for material, labor and overhead, under and over absorption, profit and sales, if those diagrams and journal entries are in your mind, all of this can be easily done. So I quickly repeat, there are two parts in the chapter. One, the reconciliation part. You remember one format which I have given to you, profit as per CA as the starting point, from there, that one thing. And then second part of the chapter is this journal ledger, etc. For that I have given three charts to you, one for material, one for labor and one for overhead, and under and over absorption of overhead. You remember these charts and the reconciliation format, this chapter will be very easy for you. Got it? Yes. Right. With that, we completed one important chapter, that is integrated, non-integrated accounting. Yes. Before I move on to next topic, some students have this question, sir, all these journal entries that you wrote, wherever you have GLA, CLA, that means we are maintaining under non-integrated accounting, correct? But sir, what if in exam they say question is under integrated accounting? This is one doubt that many students have sent me, so I thought I'll discuss it separately. What if the question says past journal entries under integrated accounting? Will GLA, CLA come if it is integrated accounting? No. Why not? See this. Why will you open a GLA account first of all? You have cost accounting records. You have financial accounting records. If you have cost accounting records and financial accounting records, there are few items which are purely financial in nature. You will not consider that at all. Example, donation paid in cash. Donation account debit to cash account. Neither donation is relevant for us. Us means cost accountants. Yeah. Neither donation is relevant to us nor cash is relevant to us. Pure financial accounting, you will just ignore it. Second one, if there is a pure cost accounting transaction like raw material issued to production, WIP control account to SLC control account, then also it will come here. You don't need a GLA. Then sir, when will GLA come into picture? Please observe, if there is one leg of the journal entry which I need in cost accounting, whereas the other leg of the journal entry is maintained by financial accountant, then only I will use this part called GLA. What is the meaning? Listen to me. Raw material is purchased by paying cash. Now raw material is SLC. I need it here in my cost accounting records. But it is purchased by paying cash, cash or bank is maintained by financial accountant. One leg of the journal entry is in cost accounting, one leg of the journal entry is in financial accounting. Therefore, instead of writing cash, I will use GLA, this intersecting point. Are you following? I quickly repeat. Pure financial accounting transaction is highlighted in yellow, this part. Pure cost accounting transaction is also highlighted in yellow, that is this part. Now you don't need a GLA for these items. Then when will you use GLA? When one leg of the entry is in cost accounting and another leg of entry is in financial accounting, then you will use this common ledger called as GLA. In simple, pure cost accounting transaction, I don't need GLA. Pure financial accounting transaction, I will fully ignore, I don't need GLA. One leg is cost accounting, one leg is financial accounting, I need GLA. Clear? This is when it is non-integrated. I have two circles. That means it is non-integrated. Tell me, how will my diagram look if it is integrated? It will be very easy. One single circle like this. Cost accounting also, financial accounting also, everything is maintained in single set of account. Correct? Now tell me. Donation paid also you should take in this circle only because it is CA and FA. Correct? Raw material issued to production, which is WIP to SLC, that also should be taken because it is single. Raw material is purchased by paying cash. Now also it will be within the circle because SLC account debit to cash account, both CA and FA is here itself. That means there will be no question of GLA when I am talking about integrated accounting system. It is already integrated. Why do you need GLA? First of all, what was the purpose of GLA? It is to bridge cost accounting and financial accounting transaction. One leg of the entry cost accounting, one leg of the entry financial accounting. To bridge that I was using GLA. And now I am saying I am maintaining books of accounts under integrated system. It's already bridged. Why do you need GLA? Now the entry will be very easy. Tell me what is the entry when I buy raw material. So far I said SLC to GLA. But if it is integrated, I can directly write SLC to cash or bank. SLC to cash or bank. I don't have to use GLA only. Correct? Wages paid. So far I said wage control to GLA. But now I will say wage control to cash or bank because wage control is also here only. Cash or bank also here only because all of us are in single circle called as integrated accounting system. In simple, this is the easiest way of maintaining books of accounts. Cost accounting also, financial accounting also. Same thing, everything will be written in same system. Now tell me, donation paid by cash, can I ignore it? No, I can't because cost accounting and financial accounting both are in the same system. How can I ignore? Cash is paid, cash account has to be recorded. So donation account debit to cash account. If it was donation account to cash account, if I am under non-integrated system, I would fully ignore it. Why, sir? Because donation account debit means GLA account debit, cash account means GLA account. Why will I pass a journal entry where GLA is debited and GLA is credited? I will fully ignore. But now that I am integrated system, whether it is cost accounting transaction or financial accounting transaction, every entry has to be passed. There is no question of leaving an entry. In case in exam, if they ask you a question on integrated system, it will be just like your first PUC, second PUC journal entry. That time, share capital also entry should be taken, debenture also entry should be taken, goodwill written off also entry should be taken because cost accounting, financial accounting both are in the same system. You can't ignore a journal entry at all. Is it clear to all of you? Right. Yes, I think with that we can complete this chapter, right? Okay, next chapter is chapter number 10, job, contract and batch costing. Chapter 10, Job Costing, Contract Costing and Batch Costing. Let us first start with job costing. Let's understand where do we use job costing. This is a technique and process of calculating total cost and fixing the selling price in all those industries where goods or services are provided as per customer's requirement. I repeat, where you make a product or provide a service based on customer's requirement, specific requirement, you use job costing. For example, invitation card printing, catering services. Here you will have to prepare a cost sheet every time a new customer comes. Why? Because not every customer will be ready to buy the product that is already available. He will come with his own requirements, his own specification. Interior decoration can be one more example. Furniture making can be one more example. Every customer comes with his or her own specifications, correct? Now you will have to prepare a cost sheet every time a customer comes. Every time a customer comes. You cannot have one cost sheet and say, look, this is the price. Whatever design, whatever material, whatever color, whatever content you have, this is my price. No, it won't work that way. Depending upon the type of material, type of design, type of artwork, type of content that you want me to do, I will tell you how much will be my price. That means every customer order will be considered as an independent job. Independent job. Bike servicing, car servicing, mobile servicing can also be few more examples. Now what are we going to learn in this chapter is how to prepare a cost sheet for individual job. How to prepare cost sheet for individual job. See, if you are selling 100 mobile phones, same variety, same feature, same color, everything is same, then the selling price will be same, correct? Say 10,000 rupee. You only have to prepare one cost sheet, correct? But if you are making product every time a customer comes and asks something else, and if you are designing it according to the requirement of the customer, remember invitation card printing was my example. Every time a customer comes, he will come with his own specifications, right? So you will have to prepare a cost sheet for every new customer. That is called job costing, right? Let's see. Here you will learn few more cost sheet preparation questions. IE Limited undertook a plant manufacturing work for a client. It will charge a profit markup of 20% on full cost, 20% on total cost of the jobs. The following are the information related to the job. Look at this. They're not saying related to a product, related to a service. They're saying related to the job. That means for this particular job, they want you to prepare cost sheet and fix the price. Will you use this cost sheet for other customers? The answer is no, right? Direct material given straight away, you can take it. Direct labor, this many hours at 80 rupee. If you just multiply, you will get labor cost. Budgeted production overheads are 48 lakh for the period. Understand, not for the job, for the whole period, and are recovered on the basis of 24,000 labor hours. That means company is following labor hour rate approach, LHR approach. Now, please understand, these two details I am circling in blue, material and labor, they said for the job. That means these two can be taken as it is when you prepare cost sheet for the job. But the overheads, they said, is budgeted overhead for the whole period, maybe for the whole month or quarter or year. So you can't take 48 lakh. 48 lakh is not for the job. Are you following? 48 lakh is for the whole period. And that is based on 24,000 labor hours. Now in calculator, if you do 48 lakh divided by 24,000 hours, you will get to know how much is the cost per hour, overhead cost per hour. And do you know how many labor hours are required for this particular job? Yes, I am circling in blue. 2,400 hours are needed. I repeat, 48 lakh rupee divided by 24,000 labor hours, you will get to know how much is the overhead rate per hour. We call it as overhead recovery rate. That's what we studied in overhead chapter. Yes. That should be multiplied by number of labor hours required for this particular job. So you understood material now, labor now, and overheads. Also, budgeted selling overheads are 18 lakh rupee for the period, again not for the job, and are recovered on the basis of total budgeted production cost. Total budgeted production cost, when they say even this is for the whole period, of 36 crores. 36 crores. Calculate the price to be charged for the job. Now when you have to fix the price, you have to prepare a cost sheet. To prepare cost sheet, you need to first find out total cost and then add the profit. When I say total cost, I need direct material given already, direct labor given already, production overhead I told you how to do. One more thing that we need to add is selling and administration overhead. Correct? Yes. Now how to do that? They are saying selling and administration overhead is 18 lakh for the whole period and it is recovered on the basis of total budgeted production cost of 36 crore. Now in simple, you have selling and administration overhead which is to be recovered as a percentage of budgeted production cost. Correct? What's the number? 18 lakh rupee. If you divide by 36 crore into 100, you will get to know the percentage, and that percentage you should apply to this particular cost sheet. Let me show it how it should be done. See here, first direct material given in the question, direct labor 2400 into 80, that also I told you. Overheads, see the calculation, 48 lakh when you divide by 24,000 hours, you will get to know how much it is per hour. You multiply that by 2400 hours, labor hours, you get production overhead. Now you have direct material, direct labor, production overhead, you get production cost or cost of production, right? Then you need selling and distribution overhead. How to do it? Look at this. 18 lakh rupees selling and admin overhead when production cost is 36 crore. This is coming from the question. 18 lakh is your selling and administration overhead when your production cost is 36 crore. Now your production cost is 1 crore 93,722. How much should the selling and distribution be? Just the cross multiplication. Or one more thing that you can do is 18 lakh divided by 36 crore into 100. You will get a percentage. Apply that percentage on 193,72,000. Then also you will get the same number. Clear? Yes. Now with this you get total cost or cost of sales. Question is to fix the price. For this you need to add the profit. What is the profit adjustment? I think in the first paragraph they gave that they are going to add 20% on full cost. So whatever is the total cost that you have got, here on that add 20% markup, you will get the price for the job. Remember, don't write selling price for the product. It is for a particular job. Will I use this price for every customer? The answer is no. We are under job costing. Did you understand? The difference between cost sheet chapter and job costing is, in cost sheet we had problems like this. Company produced 10,000 units in the month. That means all 10,000 are identical units. Same type, same quality, same size, same shape, correct? Same specification. So price will also be same. But here we are saying a new customer is expected to come, a new order is expected to come, a new job is expected to come, and that job, that order, that customer will be different from other job, other orders and other customers. In simple, you have to prepare cost sheet every time a customer comes. Got it? Yes. Let's see. Next question. A company has been asked to quote for a job. Look at this. You need to read the question to understand properly whether it's a regular cost sheet problem or a job cost sheet problem. Here they said quote for a job. That means one random customer calls me and says, sir, we have some work and this is what we want you to do. Please quote a price for that job only. Right. The company wants to earn net profit of 30% on sales. Remember here it's not on profit, it's not on cost, it's on price. The estimated cost for the job is as follows. Material 10 into 10, if you do, you will get the number. Labor 20 into 5, you will get the number. Variable production overhead is 2 per labor hour, you know that it is 20 hours. 20 hours into 2 per labor hour will be 40 rupees. Simple. Fixed production overheads for the company are budgeted to be 1 lakh for the whole year. Remember, this is for the whole year, not for the job. And you are recovering it on the basis of labor hours. This is similar to previous question. There are 10,000 budgeted labor hours every year. That means if you do 1 lakh by 10,000, 1 lakh by 10,000, you will get to know how much is the overhead per labor hour. Overhead per labor hour. Other cost in relation to selling and distribution and administration is 50 per job. Clearly given, it is not per hour. This is to confuse you. Here the production overhead will be estimated on the basis of hour. But selling and distribution is 50 not per hour, it is 50 per job. Determine the quote. Quote means selling price. Job by the company. Quote for the job by the company. This was in RTP. Very simple, easy question. This can come only for 5 marks, not more than that. Yeah. Material, labor, variable overhead, I told you 20 hours into 2 rupee. Fixed overhead, you see this 1 lakh by 10,000. This will give you per hour. Multiply by 20 hours. That's the same thing. 20 hours. Overheads are estimated on the basis of time. And then other cost, the total cost. Other cost is that selling and distribution which they gave us 50. Total cost 490. You need to add profit. Profit they are saying is 30% on sales. 30% on sales. Therefore, profit can be calculated like this. 490 into 100 by 70, which will be 700 rupee. Please understand, when they say 30% on sales, how to get this number? If sales is 100, then profit should be 30. Because it is 30 on sales. That means cost should be 70. And this is 490. 70 is 490. How much is 100? Cross multiply. That's what they have shown here. 700 rupee will be the selling price. Okay. Right. Next. Next problem. A factory uses job costing. Okay. The below data are obtained from the year ended 31st March. Now this is not for a job. This is for the whole year. Material, wages, selling distribution, admin, factory overhead and profit. So basically if you take all these numbers, you get the total cost. Correct? For that you add profit, you get sales value. Okay. This is for the year. Now what did they ask? You are required to prepare a job cost sheet indicating prime cost, cost of production, cost of sale and sales value. This is for the whole year. Now this is a very simple question. You have all the details given in the table, but they said prepare a cost sheet, you have to follow the format. Let's see how they have done it. See this. Material and wages will give you prime cost. I'm just copying everything from the first table. Very simple this is. Factory overhead will give you cost of production. Admin overhead, selling overhead, they are taking it. Now you observe, they have taken admin overhead after COP. That means they assumed it as admin overhead not related to production. So they should have given a note. You can also do it other way around. You can take it above COP and give a note that office admin overhead is considered to be related to production. Got it? Then selling and distribution will give you cost of sales or total cost. Profit is also given, show the sales value. This is simple, very, very simple. But the important question is second one. In 2018-19, factory received an order for a job. Now you see, you have the data for one full year, the historical data. And now you have received an order for a particular job. It is estimated that the material required would be 2,40,000. Labor will cost 1,50,000. Determine what should be the price for the job. Now look at this. They gave you previous year data and then they said, look, we have got an offer or an order for another job to be executed in future, for which material is 2,40,000, labor is 1,50,000. They said determine the price directly. Now I can't do price just with material and labor cost. I need to know other costs. Which are the other costs? I need to have factory overhead, I need office admin overhead, I need selling and distribution overhead. I also need to know how much should be my profit or profit percentage at least, correct? Read, here they say, if factory intends to earn same rate of profit on sales, that means you need to take the profit on sales earned in the previous year and apply the same rate. See what they have done in the answer. Here I am circling in blue. You have profit 609,000 for the previous year and 36,54,000 is the sales. Now if you take profit, divide that by sales into 100, you will get profit as a percentage of sales, and they want you to apply same profit percentage on sales even for this job. That means you will have to do one working note. It is done here. I am marking in blue, profit percentage on sale 609,000 by 3654 into 100. They have shown how much is the profit percentage. Clear? Right. Now we got the profit percentage on sales. But what else I need? Please observe, I am marking in blue. Material cost they gave, labor cost they gave, profit we understood now, correct? But in between I need three overheads. Factory overheads, office admin overheads, selling and distribution overheads. Let's see what they are saying. Assuming that the selling overheads have gone up by 15%, selling overheads will go up by 15%. Okay. The factory overhead is recovered as a percentage of wages. Important. Factory overhead recovered means estimated as a percentage of wages. That means what should I do? Take factory overhead of last year 4,50,000. Take wages of last year 7,50,000 and find out a percentage between these two. That is 4,50,000 by 7,50,000 into 100. See the working note here. Percentage of factory overhead to direct wages 4,50,000 by 7,50,000 into 100, that is 60%. Got it? Next. Okay, we are done with factory overhead also. What else you need? Other overheads, they said. Other overheads. How many other overheads I have? Office admin overhead, selling distribution overhead. They are saying we are doing it as a percentage of cost of production based on the rates prevailing in the previous year. Obviously previous year is the base. Therefore tell me, admin overhead 4,20,000 should be recovered as a percentage of COP. That means I should do 4,20,000 by 21 lakh into 100. That is your working note here. 4,20,000 by 21 lakh into 100, 20%. Got it? Selling and distribution overhead. Selling and distribution overhead. What to do? Other overheads, they said. Other overheads. That means it should include even selling and distribution. Even that should be estimated as a percentage of cost of production, but with one adjustment. What is that adjustment? I'm going up here. I'm circling in green now. It says that the selling and distribution is expected to go up by 15%. So whatever calculation you get, for that you have to add 15% or multiply by 115%, 115%. That working note is done here. You can see selling and distribution overhead 603,750. Then they have identified the percentage 28.75%. Clear? Right. Now see how the cost sheet is prepared. For that job, material and labor was given straight away. Up to prime cost is ready. Then factory overhead, we found out that it is 60% of wages. So wages 1,50,000 into 60%, you get factory overhead for that job. When you add, you get cost of production. Then admin overhead will be 20% of cost of production. So 4,80,000 into 20% will be 96,000. Selling overhead 28.75% of this number. Again you multiply 28.75% on 4,80,000, you get 1,38,000. And when you add all of that, you get cost of sales. For that you need to add profit, right? Now profit was 16.66% on sales. So they have converted it on cost. If you don't want to do it, you can keep it as 16.66% only, but that should be on sales value. So if this is considered as 100, correct, then this will be 16.66, then this will be 83.33, and then you cross multiply, you will get the same answer, or approximately this answer, 856, 800. You may have some difference because it is not exactly 16.66. It is 66666, correct? Many digits. So when you round it off to 67 or 83.34, you may have minor rounding of difference. Got it? Alright. Let's continue. What next? Contract costing. Contract costing. There are some important terms. Let us discuss that quickly before we start discussing the problems and solutions. Contractor, he is a person who takes the responsibility of construction, say X Limited, a company. Contractee, the person who gives the construction work, let us say government, right? If government is asking X Limited to construct a flyover, then government is a contractee and X Limited is a contractor, and our focus in the syllabus is on contractor. We need to learn this topic assuming we are working in X Limited and not in government. Okay? Contract account. What is contract account? Like process account, you have to prepare contract account for every contract. Debit side of the contract will have all the cost items. Credit side will have the output revenue, the results, right? Surveyor. Who is the surveyor? He is a government official who will visit the construction site normally at the end of the year. Why should he visit? What is the purpose of the visit? See, when construction is for 7 years or 8 years, you cannot expect the payment to be made only at the end of 8th year. If that happens, please understand, year 1, 2, 3, 4, 5, 6, 7, you just have to spend money, and 8th year you will get huge money, correct? And that's not fair for a businessman. So how will government release the payment? They say, look, based on the work that you complete, proportionate amount of work that you complete, we will come and settle the payment. If 100 kilometer road is the work and that is for 8 years, every year on the last day or in the last week of the year, we will send one officer called surveyor who will come to the site and do an inspection, and he will give a certificate saying 8% of work is done or 20% of work is done. Based on the amount of work certified by surveyor, government will release the payment. So this officer who comes to the site either on the last day or in the last week of the year, normally that's what it is. It cannot be last day because one surveyor cannot visit. If there are 20 construction projects happening in his jurisdiction, you cannot expect him to visit all 20 on 31st March itself. So somewhere in the month of March, he will come and visit your site and he will give a certification. Based on that certification, you can ask for money, right? Work certified. That's what I told you. Portion of the work completed and certified by surveyor. This is shown at value. Value includes profit, because once he certifies, you are sure that you are going to get money, correct? That means it can be valued at its total value, not at cost. You don't have to show it at cost. You can show it at its price or value. This is considered for payment purpose. Sir, will they give entire work certified as the payment? No. If the work certified is worth 5 crore, then they may keep some money, retention money, say 20% or 10% of work certified, and only balance is what they're going to give. That is here, cash received. I'll discuss it later. What is work uncertified? The portion of the work that is not certified, this is always shown at cost. What do you mean by this? Suppose surveyor visits your site on 25th March. He is not going to visit again, correct? What about the work that you do on 26, 27, 28 up to 31st? That is work done by you, but that won't be certified. that won't be certified in this year. Obviously next year when he comes, even that will be certified, correct? So as on this year's 31st March, this is the work done but not certified. Are you sure of receiving this money? No, you're not sure of it, because next year he may come and say, no, this work is not done as per the agreed standard, I am not certifying it. Only if he certifies, you are clear about the collection. If he is not certifying it, if he has not certified it, you are not sure whether you will get the money or not. That is why it should be recorded at cost, because there is uncertainty about collection. No payment will be made against the work uncertified, obviously. Okay, next. Cash received. Amount paid by contractee to contractor. In my example, amount paid by government to X Limited. Cash received need not be equal to work certified. I told you it will be less than that. Contractee may retain some amount before paying. That is, payment of 80% of the work certified is made, which means 20% is kept as retention. Suppose work certified is 100 lakh, and if they say we will keep 5% as retention money, that means you are going to get only 95 lakh. Right? This will come to you, but not now, only after you complete the project. Next. That is retention money. Work certified, in my example 100, cash received 95. The difference between these two, 5, is called retention money. Notional profit. It is the difference between the credit side and debit side of the contract. The word notional is used due to uncertainty. Why are we not saying profit? Why are we using the word notional profit? Please understand. Project is for 10 years and you're still in first year, second year, third year. Okay. Are you sure that you will complete the contract within 10 years? Are you sure you will earn profit by the time you complete the contract? When it is for 10 years, there is huge amount of uncertainty. You cannot predict the inflation. That to construction industry, you always have high inflation. Cement, sand, steel, all of this, all the construction related items, you will always see inflation. You never know what will be your cement bag cost after 6 years, after 8 years. So you cannot say, look, based on what I have done in this year, I will consider it as profit and distribute dividend to all my shareholders. No, not possible. You may end up completing the construction by 12th year or 14th year. You are saying you will complete in 10 years. What is the guarantee? And you guys know in India, no contract, that too if it is government contract, will never get over. No contract will get over in time. If they say 5 years, you have to add 28% GST for that and understand it as 7 years. Correct? You know what I am saying? No contract. You have hundreds of such examples in front of you. They say 3 years, it will be 5 years. They say 10 years, it will be 15 years. If they say 15, 20 years, it will never happen. Correct? That means there is high degree of uncertainty. And when you have a high degree of uncertainty, don't recognize it as profit. Wait till you are 90% done. That's what is the practice. Till you are done with 90% or 95% of the work, you keep using the word notional. Fictitious, imaginary, not very sure. Notional means not very sure in simple. That's how you can remember it. But only in the year in which you fully complete the contract, you can say, look, this year I am not using the word notional, I will use the word actual profit. This can be done only when you are done with more than 90-95% of the project, or if you want to follow conservative approach, do it only once the contract is 100% done. In our ICA material, you will use the word profit only when the contract is 100% done, not when it is 20, 30, 40, 50, even 85, you will use the word notional profit. Okay? Yes. Let us discuss some problems now. Dream House Private Limited is engaged in building 2 residential housing projects in the city. Particulars related to 2 housing projects are given to you. House project 1, housing project 2. Work in progress as on 1st April 2018. That means this is opening WIP. This will come to the debit side, which you know already. Material purchased, this will also go to the debit side. Land purchased near to site to open an office. Now, please understand, contract account is just like a profit and loss account related to the contract. If there are 7 contracts, then you will have 7 contract accounts. If there are 7 contracts, then you will have 7 contract accounts. Now, land purchased is an asset. Will you debit land purchase cost to your P&L account? In accounts, do you do that? No, because it's a asset procurement, correct? Also, brokerage and registration fee paid on the above purchase. This is also capital expenditure, should be added to the cost of land, but this will go to balance sheet. This will not come in contract account. Next, wages paid, wages outstanding. This you know, you'll have to add the outstanding item. Donation paid to local clubs. Now there is one small confusion. A donation that is paid is not to be taken in costing, which we studied in cost sheet chapter itself. But our ICI material in one place says that look, donation that you are paying is for local club. Maybe that club has agreed to allow the people who will buy the house in this housing projects to allow the facility of the club for free if you donate 5,000 and 2,500 rupee. Are you understanding? Now if you apply that logic, then this donation becomes part and parcel of the contract project, the construction, correct? It becomes part and parcel of the contract account. But you can go by normal understanding that donation is to be kept outside costing. So you can give a note, right? So either way it is possible. I would suggest to give a note and say that look, donation is not part of cost sheet. But why ICA believes that it should be taken? Because they say, look, it is given to local club. Maybe that local club will give you an ID card saying apartment owner of HP1, and that ID card will be given to those people who buy houses in this project, and those people will be later allowed to go and use the club facility for concessional rate or free, right? Therefore, they say alternatively it can be taken as a cost as well, right? Plant hire charges, rental charges, this will be debited, but it is paid for 3 years effective from 1st April. Now your contract account is prepared for the year. So whatever you have paid is for 3 years, you will have to apportion it. Next, value of material at site. This will come to the credit side. Contract price. This is the total contract price, not for this year. These two are for this year. Value of the work certified, value of the work uncertified. Now, how to identify whether the contract is fully done or not? Look at these two numbers. I am marking in blue. Total contract price is 48 lakh and what is certified is only 2050000. That means the contract is not fully done yet. If the contract is fully done as on this balance sheet date, these two numbers should be same. These two numbers should be same. And also observe one more clue. If the contract is fully done, how can there be work that is not certified? Correct? If I am saying that look, tomorrow is the inauguration of this flyover, that means the contract should be 100% done. It should be fully certified. There should be no amount which is there in uncertified column. But how can you have some numbers here and then say contract is done? No, that is wrong. When it is 16,10,000 certified, where the total contract agreed price is 36 lakh, understand only half of the work is done. 16 lakh by 36 lakh, roughly about half of the work is done. Correct? So do not consider it as profit. You will have to consider it as notional profit. Sir, when will I consider it as profit? If this is 48 lakh and this is also 48 lakh and this is 0, that means understand in that year contract is fully done. Now don't use the word notional profit, use the word profit. Clear? Right. Next. A concrete mixture machine was bought on 1st April for 8,20,000 and was used for 180 days in HP1, 100 days in HP2. Depreciation is 15% per annum. This machine can be used for other projects also. That means they said don't charge full year depreciation. For 180 days it was with HP1. So 8,20,000 into rate of depreciation into 180 days by 365 days, charge it to HP1. For 100 days depreciation, charge it to HP2. What about balance days? They said it was used in some other project. You don't worry about it. Your job is only HP1 and HP2. Right. Prepare contract account for 2 projects showing the notional profit or loss on each project as on 31st March. You see how they have answered. They have prepared it like your partner's capital account. Contract account is the heading. And then they said HP1 and HP2. You can also do this in exam. But be very careful. If it is single project and data is given for 2 years, assume house project 1 for 2019-20 and 2021, then you cannot do it like this. You will have to do contract account for 1920 separately and contract account for 2021 separately. Are you following? Same year, multiple projects, you can combine it like this. Same project, multiple years, you will have to do the contract account separately. That's why I took the example of partner's capital account. When will you write partner A, B, C, D in the same ledger? When the partner's capital account is prepared for the same year. What if there are 2 partners and 3 years? Will you prepare single partner's capital account for 3 years together? No, you will do it for year 1, year 2, year 3 separately. That's what I'm saying here also. Okay. Alright. Let's see. How is it answered? First, they started with opening WIP, right? Balance brought down, material purchased, wages paid plus outstanding. Here also, this is for this project, this is for second project. Donation to local club, as I told you, they have taken and then they have given a note, assuming donation paid to local club was exclusively for the project, hence included in the contract account. That means you can assume it other way around and keep it outside the contract account also, but ensure you give a note. Clear? Right. Plant hire charges. See, the 72,000 and 57,000 was for 3 years. So they have just done divided by 3. Into 1 by 3 means simply divide by 3, divide by 3. So that is annual hire charges. Depreciation 8,20,000, 15%, 180 days and 100 days, 60658 and 33699. On the credit side, you have some material at site. This is just like your closing stock of raw material and work in progress, certified and uncertified. You can actually do these two, a subtotal and put the number here. Both should be under the heading work in progress. Now some of you may think, sir, when it is certified, why are you still showing it as WIP? Please understand, certified or uncertified, work is still in progress. Did you complete the full project? No, I already told you how to check that. Your total contract price, your work certified is not matching. That means you are still in construction progress. You are still in the construction process. It is still happening. That means it is still work in progress. You cannot say just because it is certified, I will keep it outside WIP. No, whether it is certified or uncertified, work is still going on. That is why both certified and uncertified together will be considered as work in progress. Only difference is certified is valued at its total amount, that is cost plus profit, whereas uncertified is shown at cost. Now the difference will be notional profit, and in bracket you can write transfer to P&L account, transfer to profit and loss account. Right. Then they have given one note for depreciation. Depreciation on concrete mixture machine is charged on the basis of number of days for the project, as it is clearly mentioned in the question that this machine can be used for other projects also. This I told you. One more note they have given. You don't write star in exam. You write note 1, note 2, note 3. Land purchased and brokerage and registration fee paid for this purpose cannot be charged to the contract account, obviously, hence not included in contract account. It will be directly go to balance sheet. All right. Chalo, next. Let's see one more problem. A construction company undertook a contract at an estimated price of 108 lakhs, which includes a budgeted profit of 18 lakhs. That's okay. The relevant data for the year is given to you. Material issued to site, debit side, wages, debit side, plant hired, rental, site office cost, material returned will come to the credit side, direct expense debit side, certified, uncertified will all go to the credit side. Progress payment received means cash received. This will not go to contract account because the entry is cash or bank account debit to contractee account. Please understand, we are learning this chapter from contractor, right? When I collect money from contractee, what is the entry? Cash or bank account debit because money is coming in to contractee account. Where is contract account here? There is no contract account here. Therefore, this will not come in contract account. Next. A special plant was purchased specifically for this contract at 8 lakh rupees. After use on this contract till 31st second, it cannot be 31st second. Second means February, it will not have 31st. Anyway, that's okay. It was valued at 5 lakh. That means the difference between 8 lakh and 5 lakh is depreciation amount. This cost of material at site at the end of year was estimated at 18 lakh. Direct wage accrued means outstanding is 1,10,000. You are required to prepare contract account for the year ended 31st March. By the way, here you observe all these are rupees in thousands. That means this is 5,000 thousands, which is 50 lakhs. Yeah. Now these are in lakhs. Don't put it as it is. If you want to write entire answer in thousands, put it in thousands. You want everything to be written all digits, do it accordingly. Don't get confused. They have written the answer in thousands. You can do that. When question says everything is in thousands, your answer can also be in thousands. Material, wages, outstanding, plant rental charges, site office cost, all of this is taken, even direct expense and depreciation. Depreciation is basically the difference between 8 lakh and 5 lakh. On the other side, closing balance, material returned, purchase return, basically work in progress, certified and uncertified. The difference is notional profit or loss, right? Now, instead of notional profit, what if it is other way around? What if it is loss? Then do not use the word notional loss, use the word loss itself. Why so? Conservatism principle in account says when you are not sure of earning profit, don't recognize it. That is why I am using the word notional. But when there is a possibility of loss, recognize now itself. So don't use the word notional when there is a possibility of loss. Is that clear? If it is profit and contract is still going on, then use the word notional profit because you're not very sure of it. But if it is loss, don't write notional loss. You can write it as loss itself. Got it? Right. Let's see. One more problem on contract account. XYZ construction company undertook a contract for the construction of a stadium on 1st April 2017 at a price of 160 lakhs. Information for the year ended 31st March is given to you. Material purchased, wages, salary, direct wages, prepaid. Now outstanding is added, prepaid is deducted. This you know. Salary outstanding will be added. Return to store, this will come to the credit side. Material at site, it will come to the credit side. Payment received from the contractee 9440. I know payment received will not come, but this 9440 is important for me. Why? Because it says 80% of the work certified, which means in calculator if you do 9440 divided by 80 into 100, you will get to know how much is the work that is certified, which is coming to 11800. Are you following? 9440 is 80. Then how much is 100? That will come to 11800. Work done but not certified. This is work uncertified. This will come to the credit side. Okay, next. A plant was purchased for 12 lakh on 1st November. Dates are very important when there is depreciation. And it was in use at site up to 31st March. So from November to March, you have to charge depreciation 15% per annum. Alright. Material costing 50,000 was stolen from site. Now, when there is a loss of material like this, what to do? Observe, it says stolen from site. That means it is not a normal cost. It's not a normal loss. It is an abnormal loss. Just like any other chapter, whether it is cost sheet or whether it is material or process costing, I said normal loss is always included, but abnormal loss is taken to profit and loss account directly. Correct? Therefore, what to do? You need to take this 50,000 loss in profit and loss account, right? But sir, if that is the case, are we going to fully ignore it in contract account? No. You will have to take it on the credit side of contract account. Why is it on the credit side? Please observe. I'm explaining here. Why is it on the credit side of contract account? When you prepare a contract account, material issued to site is taken on the debit side, 100, correct? And material still at site is taken on the credit side, 20 here, example. What is the meaning of these two numbers? 100 was issued, 20 is still there. That means 80 is consumed. 100 minus 1 second. I'm sorry. Yeah, here 100 minus 20, 80 is consumed, and that's how we are going to understand it, right? What if 10 rupee worth material is stolen? If I do not take it in contract account at all, then what will people assume? The reader, 100 was issued, still 20 is there. That means 80 is consumed. But do you really think 80 is consumed? No. Out of 80, 10 was stolen. That means actual consumption, the real consumption is not 80, it's only 70. Now how do you show 70? Either you will have to deduct 10 here, correct? But in a ledger account, we normally don't do a minus on the debit side. If you have to do that, you will write it on the credit side here. Now see what is the net effect. Let me erase this. You see what is the net effect. 100 was issued, 20 is still there, and 10 is stolen. That means 100 minus 30, 20 and 10 together, 100 minus 30, 70 will be understood as consumption. And where will this 10 go? You will write here as by costing P&L account. By costing P&L account or P&L account. Basically, when you later prepare P&L account, this will go to P&L on the debit side of P&L. And what is there on the debit side of P&L always? The losses, expenses and losses. I quickly repeat, when material issued, you take it to the debit side. When material is still at site, you take it to the credit side. That means 100 minus 20, 80 will be understood as consumption. But did you really consume 80? Answer is no. Did you really consume 80? Answer is no. How much did you actually consume? Only 70. Then what about the balance 10? It was stolen. And such loss is not a normal cost. It's an abnormal cost. So how do you show it to the reader that my consumption is only 70? You take 10 also on the credit side. Now the reader of the contract account will get to know, look, 100 was issued, 20 is still there, 10 is lost. That means 70 is consumption. And where will this 10 go? You are writing P&L account. Later when you prepare P&L account, this will go to the debit side of P&L account. And P&L account on the debit side, you will always have expenses and losses. Clear? Yes. One more possibility, one more type of adjustment that you will see. They say some raw material which was not suitable was sold. Some raw material which was not suitable was sold. In that case, what you have to do? The sale value the price at which you have sold it, take it here on the credit side. Just like stolen, take it on the credit side, because when there is theft, that is taken on the credit side so that you can calculate the correct consumption. Now also you do the same thing, but this will be at sale value. This will be at sale value. Therefore, you need to take out the profit included in this sale value. So take that out on the debit side here. Profit included in sale value. Let me take an example. 100 rupee worth material issued. 20 rupee worth material is still at site. What will the reader assume? 80 is consumed. 80 is consumed. But we know that 80 is not consumed. Out of 80, there was a material which was worth 10 rupee, was sold for 12 rupee. That means if this was stolen, you would write 10 here. I showed you 2 minutes back, right? But now it is not stolen, it is sold. So what to do? Take selling price here as 12, correct? And profit you take on the debit side as 2, right? Now the net effect is 12 minus 2. This is as good as 10, right? I quickly repeat. If there is a theft, then it will be taken at cost only. See, when it is theft, it should be shown at cost only, right? But when it is sold, it will not be at cost. It will be at sales value. Simple. But the sale value includes some profit element also. Take the profit element out here. Now some of you may think, sir, instead of writing 12 here and 2 here, why can't we write 10 here only? You can do that also. But then you will have to show the profit of 2 later when you prepare P&L account, because there is a profit element of 2 which you are ignoring when you straight away write 10 here. Are you following? So either you write 12 here and 2 here, or you write 10 only on the credit side. Then when you prepare costing P&L, 2 will anyway come there and sit as profit. So this is how you will have to treat if there is a loss of material or sale of material. Clear? Right. One more possibility. Sir, what if there is loss of asset, theft of asset? One employee took some assets. Now what to do? You will have to identify the date on which such incident took place. Why date is relevant? Because on asset you charge depreciation, correct? Suppose there are equipments, tools, machines at construction site from first day of the year. On June 16th, some of the assets were lost or stolen. That means you have to charge depreciation till that date. That means date is important. Sir, you did not say this when you discussed loss of material, correct? Because loss of material or sale of material, date is not relevant because you are not charging depreciation on raw material. But if it is loss of plant, machine, equipment, tools, date becomes relevant because you are charging depreciation. What if they say plant was stolen, machine was stolen, equipment was stolen on 10th December, then from 1st April till 10th December, you will have to proportionately calculate depreciation, right? Yes. Sir, what if they don't give date? Then you will have to make an assumption. If they just say during the year, plant worth 2000 was lost, full stop. Now we know that there is a loss of plant, but we don't know the date. There are 3 options for you. Assume, you have to give a note now. Note 1, possibility number 1. Assume that the asset is lost on first day of the year itself. Then you will not charge even 1 rupee depreciation on that component. Second assumption, assume that the asset is lost on the last day of the financial year, indirectly saying that you used that asset for the whole year, then you will have to charge depreciation for the whole year. Third, in the absence of information, you can say that I am going to take average depreciation rate. So if it is 15% depreciation rate, you will do 15% into 1 by 2. Indirectly, you are assuming that the asset was lost after using it for 6 months. Because if you say on the first day itself, you are not taking any depreciation. If you say on the last day of the year, you are taking full depreciation. So what is the midway or the average point? Take it as 6 months. Right? So this is how you treat if you have loss of material, sale of material and loss of machinery. Sale of machinery also similar to sale of material. I hope it is clear to you. Right. Let's go back. Here you have only stolen, that means only cost. There is no sale value, there is no profit. You are required to prepare contract account showing the profit to be taken and prepare balance sheet showing relevant items. Now see, when there is a balance sheet, you can't prepare whole balance sheet, because for that I need share capital, reserves, bank balance, debtor, all of that. I don't have all the items. That's why they said only relevant items. So what is available, you write. Okay, let's see. Contract account is prepared here. Material purchased, wages, minus prepaid, I told you, salary, add outstanding, depreciation only for 5 months, that is November to March. Yeah. And on the credit side, material returned, work in progress, that is 9440 is 80%. 80 into 100, uncertified. Material stolen, I told you, it is at cost on the credit side, material at site. So the difference is notional profit, the balancing figure transfer to profit and loss account. Now when you prepare balance sheet, you write it as balance sheet extract, because you're not preparing the entire balance sheet. Okay, right. I would suggest in exam you show it in schedule 3 format only. Right, I know you guys find it more comfortable to do it in T format, but I prefer you do it in schedule 3. But in ICAI, in some RTPs even they use the T format. Right, yeah. So capital, we don't have the details, but we have the notional profit minus 50. What is this minus 50? The loss of material. Yes. Outstanding salary or liability. Then plant at site, this is original cost of the plant minus depreciation, work in progress, certified, uncertified. From this you will have to deduct cash received. So net number is only 2860. Now some students have this doubt. Why cash received is deducted here? Please understand. Out of 11800 which is certified, you have already collected 9440. That means you are not going to collect 11800 in future. Correct? Are you following? 11800 is the work that is certified. Out of that you have already collected 9440. So the net work in progress on which you can claim money in future is 11800 minus 9440. Obviously certified and uncertified both should be taken. That's why they do certified plus uncertified minus the cash receipt. Got it? Now some of you may be thinking, sir, this 9440 is the cash received, then that should be there in the bank balance. No, correct. But this is not a complete balance sheet question. This is only extract of the balance sheet. Therefore, they did not give you bank balance. Right. Prepaid direct wage and material that is still at site. Alright, you don't have to do the total because this is just an extract. Alright. What next? Batch costing. But before batch costing, I have one more concept to discuss, that is concept of escalation clause. Concept of escalation clause. What is escalation clause? Let's first understand the concept and then I will just show you how to work out the problems if asked in exam. Whenever there is a contract, contractee and contractor, they have to sign an agreement saying that in next say 3 years, let us take an example, road construction project. Now acquiring the land is the job of contractee, government, correct? Constructing the road is the job of contractor X Limited. Let me take this as an example, government and X Limited. And when they sign an agreement, they say government will acquire land in 3 years from today. Suppose if they are signing the agreement today, from today within 3 years they will acquire the land and hand over the land to X Limited, and from that day 7 years time will be given to X Limited to construct, to complete the work, and by the end of 10th year road should be ready and we will have a toll gate there and we will collect toll from all the users of the road and money will be shared between X Limited and government. This is agreement. Now, X Limited has to quote an amount. Revenue sharing from toll is later, but for the work to be done in these 7 years, that is from year 4 to year 10, because you are signing the agreement today. You are today standing here. Yeah. Now they will prepare cost sheet keeping the expected inflation for the year 4, 5, 6, 7, 8, 9, 10. This cost sheet is under an assumption that land will be handed over to them at the beginning of year 4. Correct? Yes. That means they would have kept inflation in mind, but that inflation would be from year 4 to year 10. Right. Now what happens? They signed the agreement today, government X Limited, both are happy, done. From tomorrow, they have 3 years time, government has 3 years time to acquire the land and hand it over to X Limited. Yeah. Government will start the process of acquiring land. And out of 100 kilometer stretch, few people will not agree to hand over the land. Because government has to acquire it from public, government has to pay market value or some compensation, and those people who have land here, they may not agree for the compensation offered by government. They may say, look, we want 5 times of market value. The people who own land, they will say that this is a very good land next to national highway. Once the project is ready, this will be out of my hand. The government will have. Government and X Limited will enjoy toll money for next 25 years. What will I get? So I want to keep this land with me for next 20 years. But you want it to be taken over today itself. So give me 5 times of market value. Some other guy will say, no, 10 times of market value. Some guy will be ready to give it at market value only. Some guy who doesn't like that land, for some reason, he says, take over. I have no problem. Whatever compensation you give, I am okay. But the problem is, you cannot have a road where some places land is acquired, some places there is a case pending, some places where people are not ready to give land. And then these people who wanted 5 times, 8 times of the market value will go to the court and say that the compensation offered by the government is not good and we are not ready to give our land to government. And then court will take its own time. Now that may be 1 year, maybe 2 years. Correct? Maybe 3 years, maybe more than that. By the time this whole process of getting clearance from court and then getting the land, paying the compensation, it may be already 6th year. Now, 6 years over, you are X Limited, you need to start the work from today. From today you will take 7 years, and that is what was agreed. But the problem is, your cost sheet was prepared keeping year 4, 5, 6, 7, 8, 9, 10 in mind. Correct? That means you kept inflation of year 4 to year 10 in mind when you prepared that cost sheet. But today, now when you start the project, you are starting it from year 7. 6 years they took. From year 7, you need 7 more years. By the time you complete the contract, it will be 14 years. And you will definitely end up spending more because inflation was considered only up to year 10 and not up to year 13 or 14. Correct? Don't you think it's a loss to X Limited? Yes. If this is what happens in every government contract, then no company, forget X Limited, no company will apply for any government tender because they know government will never acquire land within the timeline that is agreed. Therefore, we need to now think from contractor perspective. He will be suffering because of the additional inflation, correct, in year 11, 12, 13 and 14. Contractee, that is government, should reimburse any loss that is caused to X Limited because of the delay, and this is called escalation. Right. Sir, what if land is acquired in second year itself, sir, and then if they complete the project within 9 years, 2 plus 7, then there will be some savings, no? Correct. Then if there is saving, then the contractor will have to give that credit to contractee. That means he will have to reduce the contract price in that case. Therefore, in simple, what are we trying to do? If there is any delay or if we complete the work well in advance, because of that, if there is inflation or deflation, let us compensate each other. Contractee says, look, because of my delay, if you take extra time and if you end up spending more, don't worry, I will compensate that to you. This is what contractee is saying. And then contractor says, look, what if there is deflation? I will give you that credit also, don't worry. So if there is inflation, then contractee will have to pay it to the contractor. If there is deflation, then the contractor will have to pay it to contractee. Right. Now, there can be some problems in examination. There is one problem in ICA study material also. They will ask you to compute escalation claim. How much is the correct escalation claim? Now, how to work out such problems? Let me just explain. Give me 1 minute. They will give you data like this. Again, like how I told you, government entered into a contract with X Limited, etc., etc. Then they will start details like this. Standard cost or agreed cost. And then here they give you actual cost. Now the difference between what was agreed and what is actually spent is what you're going to take it for escalation, right? Then they start like this. Raw material 1, raw material 2, raw material 3, labor 1, labor 2 and so on. Here you must observe one thing. Some students go wrong here. They say 100 tons at 30 rupee. This was agreed. But actual is 100 tons at 32 rupees. Right. Now, is there an escalation claim? Answer is yes. There is 2 rupee increase. There is 2 rupee increase per kg or per ton. And 2 rupee into what? 100 tons. 200 rupee will have to be compensated. By whom? Contractee. To whom? Contractor. Clear? Yes. Second case. Raw material 2. Let me take this example. I'm sorry. Yes. 30 tons at 10 rupees. Actual is also 30, but it was only 9 rupees. Now you see, there is no inflation. There is a deflation. Deflation of 1 rupee, minus 1 rupee. Correct? Prices come down, minus 1 into 30. Now this should be adjusted. It is just like your input credit. If there is inflation, then contractee will pay the money to contractor. If it is deflation, then contractor should pay it or adjust it with contractee. Clear to you? Yes. Next possibility. This is very important from exam point of view. They say 40 tons. I'm sorry, 1 second. Yeah. 40 tons at 20 rupees. But the actual is 41 tons at 20 rupees. Will there be any escalation claim here? The answer is no. Because agreed rate was 20, actual rate is also 20. So there is no question of escalation claim at all. Now don't say, sir, instead of 40 tons, we have taken 41 ton. That 1 ton should be compensated. No. Please remember, when you have to pay escalation claim, it will be only and only based on the price and the rate. Price or the rate. 30 went to 32, I will compensate. 10 came down to 9, you will have to adjust or compensate. 20 remained 20. You consume 1 ton extra, that is not going to be covered under escalation clause. Please understand in my example, whether you construct in 4th year or you construct in 7th year, why should the number of tons change? Rate may change because of the inflation. You said in 40 tons you will complete the work, material 3, only 40 tons, but you are taking 41 tons. I am not going to compensate you for the extra ton because escalation clause will protect only rate. It will protect only price. It will not protect the quantity. You consume extra, I am not going to consider it. Okay. Sir, what if 4th material 1 second. So what if fourth material agreed was 10 tons at 30 rupees, but actual is 9 tons at 30 rupee. Now also there will be no credit. Answer is no. Why? Whenever you are talking about escalation, you have to check rate versus rate. Doesn't matter whether you consume 1 ton or 1 kg more or 1 ton or 1 kg less. That doesn't matter at all. Okay. Let's take one more example. What if, just 1 second. Yeah. What if the agreed material, say material number 5, was 20 tons at 5 rupee? And what if actual is 21 tons at 9 rupee? Will there be escalation claim? Definitely yes. Why yes? Because 5 went up to 9. That means you will get escalation claim for 4 rupee. But will the 4 get multiplied by 20? Or will it get multiplied by 21? Remember, it should be multiplied by 20 only. Why? When we agreed it was 20 tons. Whether you consume 21 or you consume 31 or you consume 9 doesn't matter to me. Are you following? That means standard quantity, agreed quantity will be kept constant. Only change in the rate is what matters to us. I'll take one last example. Material number 6, 30 tons at 6 rupee, but actual is 29 tons at 7 rupee. Will there be escalation claim? Definitely yes. Why? 6 went up to 7, 1 rupee extra I will pay you. But this 1 rupee will be paid against how many tons? 30 only. Doesn't matter whether it is 29 or 28. It should be on 30 only. That means you will have to keep this in mind irrespective of actual quantity. Irrespective of actual quantity, our escalation claim computation will be purely based on standard or agreed quantity. You just keep this in mind. This is what is relevant to me. This is what is relevant to me, and then I will have to compare rate versus rate. Correct? 30 versus 32. See, I'm marking in green now. Here I did 30 versus 32, 10 versus 9, 20 versus 20, 30 versus 30, 5 versus 9, 6 versus 7. Everywhere I am multiplying this with the standard or agreed or budgeted quantity. Actual quantity is not relevant when you work out escalation claim. Clear? Yes. There is one problem in study material. Now some students may say, sir, if that is the case, why did they give this actual quantity? I'm sorry, why did they give this actual quantity, sir? What is the use? When you prepare contract account, tell me whether the contract account is based on agreed cost or actual cost. Actual cost, obviously. So this question in ICS study material comes with second sub question stating prepare contract account also. Now when you have to prepare contract account, you will have to take the actual cost. Clear? I quickly repeat, when there is a problem on escalation claim, when you have to compute admissible escalation claim, if there is inflation, you will take it as positive number. If there is deflation, you will take it as negative number, basically a set off. First you will compare rate versus rate, and then you will multiply that with the standard or agreed quantity. What is irrelevant when you work out escalation claim is actual quantity. I said quantity, it can be labor also. In that case, it will be hours, number of hours. Now I am talking about number of tons. Because it is material, it can be number of hours if it is labor. For material also, labor also, apply the same logic. Rate versus rate with standard quantity. Rate versus rate with standard hours. Clear to you? Alright. Next part to be discussed is batch costing. We discussed job costing, we discussed contract costing, and now we are discussing batch costing. The most important concept in batch costing from exam perspective is EBQ, economic batch quantity. Formula is similar to EOQ. 2AS by C. A is annual demand for the product. This is FG. Setup cost per batch. There it used to be ordering cost. Every time you place an order, there is ordering cost. Here, every time you set up the machine, there is setup cost. And then carrying cost per unit per annum. There also you have carrying cost. Here also you have carrying cost. Then what is the difference? There it's about buying raw material. Therefore there it was carrying cost on the basis of raw material. Here it's about FG, that is production. Here it will be carrying cost on the basis of FG stock, right? Let's quickly revise EOQ and EBQ together, because logic concept broadly remains same, right? One second, I'm sorry. Yes. Point number 1. EOQ is about RM. EBQ is about FG. EOQ talks about how much of RM to be purchased, correct? So this is about purchase quantity. Whereas EBQ talks about how much should be produced, production of FG. There formula is 2AO by C. What was A? Annual RM requirement. Annual RM requirement. Here annual FG to be produced. Annual FG to be produced. What was O there? Ordering cost. What is ordering cost? The cost that you incur every time you place an order, correct? There it was ordering cost, but here it is setup cost. What is setup cost? Every time you want to run a batch, or every time you want to produce 100 units in a production run or in a batch, you have to set up the machine, correct? There in EOQ, for every order there is ordering cost. Here in EBQ, for every machine setup there is a setup cost. There you have carrying cost. Here also you have carrying cost, but there the carrying cost is on raw material. Here the carrying cost is on FG, but the way you calculate remains same. And what is that we are going to conclude at the end of EOQ? How much of RM to be purchased in one order, correct? How much of raw material should be purchased in one order. In EBQ you will get to know how many FG units will be produced in one batch. I repeat, in EOQ you will calculate how much of RM to be produced, how much of RM to be purchased in one order. In EBQ you will calculate how much of FG to be produced in one batch. There it is about raw material to be purchased in an order. Here it is about FG to be produced in a batch. I hope it is understandable now, right? Yes. There is one problem that I'll be discussing on this. X Limited is committed to supply 24,000 bearings per annum to Y Limited on a steady basis. It is estimated that 10 paise as inventory holding cost per month. You have to do it per annum. So 0.1 into 12 months, right? And that the setup cost is 324. What would be optimum run size? One run means one batch, basically EBQ. EBQ is equal to 3600. When you put the formula, what will be there in the formula? Square root of 2. If you want in calculator, you can do it. 2 into 24,000 into 324 to be divided by 1.2. What is 1.2? 10 paise, which is 0.1 into 12 months. Whatever you get, square root of that will be 3600. Now what's the meaning of 3600? Every time you start a batch, you will have to produce 3600 units, correct? In one batch, how many units am I going to produce? In simple, how to understand a batch? Whenever you go to a hotel, when you see how they make idlis, correct? Are they making one idli at a time? No. Idlis are made in trays, correct? Suppose one tray can make 20 idlis and such 4 trays are kept inside a machine. So 20 into 4, once they start in one batch, they will produce 80 idlis. That 80 is batch output. Now 3600 means what? Every time you run a batch, you have to produce 3600 units. Like 80 idlis in a batch, 3600 units. Got it? In one batch, how many units? That's the point. Second, assuming that the company has a policy of manufacturing 6000 bearings per run. One run means one batch, I told you. You are saying 3600, but they say, no, we will make 6000 at a time. How much extra cost the company would be incurring as compared to EBQ? How come they are directly saying extra cost? That means they know it will be extra cost. Yes, because EBQ is the level at which your setup cost and carrying cost will be minimum and equal. In EOQ, I said ordering cost and carrying cost will be minimum and equal. In EBQ, setup cost and carrying cost will be minimum and equal. Correct. And they are saying, if I don't follow EBQ and produce 6000 bearings, tell me how much extra cost I will incur. The only difference between EOQ problems and EBQ is there, along with EOQ, they will give you one offer. Supplier is giving an offer, 4% discount, etc. Here in EBQ, you will not have any discount because it is you who has to produce. By producing more, whom will you give discount or who will give discount to you? Correct? You already have raw material with you. You already have labor with you. You already have all the machines with you. By producing more, there is no question of you getting some discount. Right? Yeah. So now that's why they said you will end up incurring extra. Tell us how much extra. So they prepared a table. Particulars EBQ. At EBQ, that is 3600. At 6000 units, that is as per company's policy. Here is the working and here is the answer. Machine setup cost and carrying cost. 24,000 units you need. You divide by 3600. That will give you number of batches or number of runs. Multiply that by 324. You will get to know how much it is. Carrying cost will be as discussed in EOQ. It is 1 by 2 into 3600, which is Q, into 1.2, that will be 2160. Add both, you get 4320. And remember, at EBQ, these two should be same, right? On the other side, if you go by 6000 units, then 24,000 by 6000 into 324, that will be 1296. Here it is 1 by 2 into 6000 into 1.2, that will be 3600. Total is 4896. So how much is the extra cost? 4896 minus 4320, that will be 576. And you have to check, all of you must check at EOQ or at EBQ. These two should match. I'm circling in blue again. I'm sorry. These two should match. If it is EOQ, ordering cost and carrying cost should match. At EBQ, machine setup cost and carrying cost should match. Please understand, the entire concept of EOQ and EBQ is based on the logic that these two should be same. Let me explain it to you. Just give me a minute. See, the whole concept of EOQ is based on the fact that you want ordering cost to be equal to carrying cost. Only then these two will be minimum and equal, right? If you want it to be equal, please understand, how do you calculate ordering cost? It depends on number of orders. How will you calculate number of orders? Annual requirement by ordering quantity. Suppose if you want 10,000 kg and every time you are going to buy 1000 kg, 10,000 by 1000 kg will give you number of orders, 10 orders, example, into ordering cost per order, say 50 rupee. That will give you ordering cost, correct. This should be equal to carrying cost. How to calculate carrying cost? 1 by 2 average, which I already explained, into quantity that you carry with you into carrying cost, which I can write as C. Now you continue this. This is AO by Q. Are you following? and this is QC by 2. QC by 2, correct? Let's continue this. When you now cross multiply here this way, it will be Q square C equal to 2AO. Correct? Continue. Q square is equal to 2AO by C. But I don't want square, I don't want Q square, I want to know Q. Therefore it will be Q is equal to square root of 2AO by C. Are you familiar with this formula 2AO by C? Yes, this is what we studied in EOQ class, and this is what we are studying now in EBQ class. That means the fundamental principle is that the ordering cost should be equal to carrying cost. Based on this logic only, we have this formula. Q is equal to square root of 2AO by C, and that will happen only and only when OC is equal to CC. Is it clear to you? That is why I want you to check in exam. Whenever you get these numbers, ensure that these two are matching. In EOQ, ordering cost and carrying cost should match. In EBQ, machine setup cost and carrying cost should match. Right. There is one more question, sub question C. What is the minimum inventory holding cost? I told you at EBQ you will have minimum inventory holding cost or carrying cost. Minimum carrying cost is the cost at EBQ, that is 2160, this number. Right? Yes. That's all. Yes, I think with that we completed this chapter of job costing, contract costing and batch costing. And I don't want you to leave any of this. Please understand, leaving batch costing because it is small is not a good idea. I know some students will do this. Just because job costing looks small, they leave it. Please don't do that. If you cannot study full chapter, at least study these questions that I am discussing, right? Question and answers both are with you. If you can't study full chapter because you don't have time one day before exam, at least you can watch this. I have covered 4 or 5 questions on every concept. Only EBQ, because it is similar to EOQ, I am not discussing too many sums. Even if a chapter is very small, leaving that and going to exam hall is not a good decision. If you don't have time to read entire job costing, at least 2-3 sample questions which I discussed, that you have to go through before you go to exam hall. Clear? Even if there is a smaller topic, that should not be ignored. I hope it is clear to all of you. Right? Yes. Chalo. We will now start the next topic, that is chapter 11, budgets and budgetary control. Chapter 11, budget and budgetary control. Before we start discussing problems and solutions, let us understand few basic concepts before we get into problem solution mode. Because without knowing these concepts, if you start solving the problem, you will not understand why a number is getting multiplied, why a number is getting divided. Let these concepts be very clear, and then we will go and discuss all the problems. First important point, variable cost per unit remains same. Variable cost in total fluctuates along with level of activity. Example, direct material, direct labor, direct expenses. Prime costs are always considered as variable costs in nature. When they say per unit it remains same, what does it mean? Per unit, if variable cost is 3 rupee, that 3 will remain same. If you produce 100 units, total will be 100 into 3. 300 units, 300 into 3. 0 units, 0 into 3. But 3 remains same. Clear? What if it is fixed cost? It will remain same in total, but it will change or vary per unit. What does it mean? Rent will remain same, 10,000 rupees. Whether you produce 1000 units, 2000 units, 5,000 units, total rent will remain same as 10,000 rupees. How will it change at per unit level? Let's take an example. 10,000 rent, when you divide by 1000 units, it will be 10 per unit. 10,000 rupees, when you divide by 2000 units, it will be 5 rupee. 10,000 unit, if you divide by 5,000 units, it will be 2 rupee. 10,000 rupees, 10,000 units will be 1 rupee. So total, the numerator 10,000 remains same, but per unit it keeps changing. Which are the two important points for us to remember here? Variable cost per unit and fixed cost in total. This is going to remain same. The other two items will anyway fluctuate, so it's not so important for us. What we should keep in mind, variable cost per unit remains same, fixed cost in total remains same, assuming there is no inflation, no deflation. Alright, what if there is semi-variable cost which has a part nature of fixed cost and part nature of variable cost? You need to segregate the semi-variable cost into variable cost and fixed cost. How to segregate? There is a formula. Variable cost per unit is equal to change in cost divided by change in activity. I repeat, variable cost per unit is equal to change in cost divided by change in activity. Once you identify variable portion, the balance portion will be taken as fixed. Is that clear to you? Whenever you find a semi-variable cost in the question, segregate that into variable and fixed. Variable cost per unit will be change in cost by change in units or change in activity, change in volume. Once you get variable portion, the balance will be fixed in nature. Now some of you may be thinking, sir, in a question how will I identify which is variable, which is fixed and which is semi-variable? Remember this. First check whether the cost has remained same. For example, they may ask a question in exam like this. At 800 units, at 1000 units, they'll give you base data like this: material, labor, repairs, depreciation, rent and so on, all the numbers. And then they say prepare a budget for 900 units. Now you have two levels of activities with you. I'm marking in blue 800 and 1000, and your 5 cost items. How to identify which is variable, which is fixed, which is semi-variable? For example, see this number, compare it with this number. Is it same in total? If yes, then it's a fixed cost, because fixed cost in total should remain same. Correct. If these two numbers are same, that means they are fixed cost. For 900 also, in your answer you will take the same number. Got it? Right. What if these are not same? Then check how much is per unit. How to check per unit? This rupee you divide by 800 units. You will get to know per unit. Correct? And then this rupee you divide by 1000 units. You will get to know per unit. If per unit is same, that means it's a variable cost. I repeat, when the totals are not matching, that means they are not fixed in nature. Then check, is it matching at per unit level? Suppose if this is say 10,000 rupee and this is 12,000 rupee. I'm just taking some example. 10,000 by 800 will give you per unit. 12,000 by 1000 will give you per unit. Just check whether per unit and per unit is same. If yes, then understand here variable cost should remain same at per unit level. Understand that's a variable cost. Multiply that by 900. Right? I quickly repeat. Is the total same? If the answer is yes, then it's a fixed cost. If the total is not same, check whether per unit is same. If per unit it is same, then it's a variable cost. What is the third possibility? Total is also not same. That means it's not a fixed cost. When you calculate per unit also, it's not same. That means it's not a variable cost also. That means it should be what cost? Semi-variable cost. Therefore, whenever a budget question is asked, when they say prepare budget for 800 units, 1000 units, 2000 units, first thing that you should do is identify which is fixed, which is variable, which is semi-variable. How to identify? Is the total matching? If the answer is yes, it is fixed in nature. Is per unit matching? If the answer is yes, then it's a variable cost. If total is also not same, per unit is also not same, then it's a semi-variable cost. Segregate that into variable and fixed. I told you the formula. Once you get the variable portion, the balance will be fixed portion. The variable portion will vary, the fixed portion will remain same. Clear to all of you? Right. Variable portion will fluctuate along with activity, fixed will remain same. So this is one type of problem that they can ask in exam about cost calculation, profit calculation at 80%, 90%. I will discuss two problems like that. Okay. Second type of problem that they can ask in budget chapter is problems on production budget and purchase budget. You can take it as even sales budget. Yeah. How to solve these kind of problems? See, what is the normal flow in which goods move? Please follow my explanation first. You will buy raw material, you will consume raw material, you will produce FG, you will sell FG. Correct? This is the flow. I repeat, you will purchase raw material, you will consume raw material, you will produce FG, you will sell FG. But in exam, you know what they do? They will give you sale of FG. They'll give you sales data and ask you to work out purchase data, reverse order. What happens first? See here. First, you will always do RM purchase. Next, RM consumption. It's not greater than, it is the order flow. Then you will produce FG. Then you will sell FG. But most of the problem in exam need to be solved in reverse order. What do I mean by reverse order? They will give you sale of FG. You observe most of the questions. They will give you sale of FG. They want you to work out purchase. Now how to do? From sales you can't come to purchase directly. How to do it? See here. From sale of FG you calculate production of FG. Reverse order. Go this way. From production, you can calculate consumption. From consumption, you can calculate purchase. Reverse order. Normally what happens? Purchase first, consume next, produce and sell. But in exam, they will give you sales. So from sales, find out production. From production, find out consumption. From consumption, find out purchase. Sir, how to find out? Is there a formula? See here. Remember the below. How to find out production? I said from sale you need to find out production. Yeah. Production of FG is equal to sales plus closing stock minus opening stock. How much you want to sell, say 10, plus how much you want to keep it with you, that is 3 closing stock, minus how much you already have. 10 plus 3 minus 1, that means you need to produce 12. Is that clear? Now see, this is not a new formula for you to mug up. We know this formula already. You know what? We have already studied this. Where? How will you find out closing stock of FG? By the way, what is the formula that you know? Sir, that is opening FG plus whatever I produce minus whatever I sell. How to find out closing FG? Opening FG plus whatever I produce minus whatever I sell. Correct. Now I want production. So what to do? Shift all those items this side. Sales plus closing stock minus opening stock will be production. And that's the formula here. Sales plus closing minus opening. Clear? Using this formula, you will find out how much should be produced. How much should be produced. This is FG. Once you know how much to be produced, next thing to find out is how much should I consume. This is easy. Tell me, when will you consume raw material? Is it when you sell FG or is it when you produce FG? It is when you produce FG. That is why production quantity into raw material required per unit. Suppose if they say 4 kg is required per unit, that means 10,000 units to be produced into 4 kg, 40,000 will be consumed. Clear to you? Now tell me what all we did. From sale of FG, we calculated production of FG. From production of FG, we calculated consumption. From consumption, we have to go back to purchase. How to do? purchase is equal to consumption plus closing stock minus opening stock. But this is all RM, this is FG, please remember that. Sir, is this a new formula again? No, we know this formula. How to calculate consumption of RM, by the way? Opening stock plus purchase minus closing stock. Now I need to know purchase, therefore what I will do, I will take consumption plus bring closing stock this side minus opening stock, that will be equal to purchase, and that's what I am doing here. Consumption plus closing stock minus opening stock. These are the two varieties of practical problems that they can ask from this chapter. Number one, preparing budget based on variable cost, fixed cost and semi-variable cost. Second variety, either they can ask you to do production budget or consumption budget or purchase budget. Sir, can they ask even wage budget? Yes. Just like how you do purchase of raw material, you will have to do wage calculation. There also, from sales, you will find out production. Correct? From production, you will not find out consumption, you will find out number of hours required, labor time required. Then you will multiply that with the salary per hour. Because you don't have stock adjustment, correct? Because it is labor, right? Let's see. Let's discuss few problems. As I told you, first I'll discuss few problems on budget preparation, where the focus is on variable cost and fixed cost. And then we'll discuss few problems where you have production, sales, consumption, etc. KLM Limited has prepared its budget for 50,000 units. Okay, for the year 2019-20, rupees per unit given, material, labor, variable overhead, direct expenses, then selling, factory, admin, distribution, and then total. Prepare an expense budget for 35,000 and 70,000. Now, you must observe, for these items, I have something in bracket. 20% fixed, which means balance is variable. 100% fixed, that means nothing is variable, all that you have. But nothing is given for these four items. Why so? Because direct material, direct labor, direct expense, variable overhead, all of these are variable cost. I told you already, prime cost elements are always variable in nature. Overheads can be variable or can be fixed or can be semi-variable. Clear? Right. Now some of you may be thinking, sir, when they say 20% fixed cost, I am marking in blue, 20% fixed cost, that means 80% variable, that means this is a semi-variable cost. Are we going to use change in cost by change in activity formula? No, you can't use. Why? Because to be able to use change in cost by change in activity, you need minimum 2 activity levels. In the question, they have given the data only for 50,000. They did not give you data for 50,000 and 60,000. Please understand, when I say change in my salary, I should have the salary of January, I should have the salary of February, then only you can use the change formula. You have only salary of January, now how can you use change formula? Correct? Right. That means what to do? Out of 25, 20% is fixed. Correct? 25 into 20%, 5 rupee, then the balance is variable. So what is fixed? In total it will remain fixed. What is variable per unit will remain variable, will remain fixed. Variable cost per unit will remain same. Yeah. Question is to prepare a budget for 35,000 and 70,000 units. What data you have in the question? 50,000 units data. And what they want you to do? 35 and 70. Now tell me. I'll mark in green one by one. Let me first explain and then we'll see the answer. All these variable cost items, direct material, direct labor, variable overhead, direct expenses, you will just have to multiply that by number of units. Correct? Because they are variable in nature. What about the balance? Say selling expense. Out of 25, 20% is fixed. How much is 25 into 20%? That is 5 rupee. Now 5 rupee, should I multiply 5 into 35,000, 5 into 70,000? No. Fixed cost should not change along with level of activity. Correct? Now when I said out of 25, 5 rupee is fixed, that is based on 50,000 units. Sir, how do you know? Because the question says KLM has prepared the below table keeping 50,000 in mind. That means when they said 5 per unit fixed, what was in their mind was 50,000 units. That means 50,000 units into 5 is fixed portion, that will remain fixed. 50,000 into 5 is 2,50,000. Here also 2,50,000. Here also 2,50,000. Got it? Yes. Out of 25, if 5 is fixed, then balance 20 is variable. Correct. And that will be multiplied by 35,000 and 70,000 because the nature is variable. Name and nature both are variable, so you should understand that it will vary along with level of activity. Correct? Factory and admin, they say 100% fixed. So this 15 into 50,000, 8 into 50,000 will remain same. Distribution, they said 85% variable, that means balance is fixed. Again, segregate and multiply. Variable portion fixed, calculate it for 50,000, write same number everywhere. You see how they have done? Though question is for only 35 and 70 in their answer, they have worked out for 50,000 also. You can also do it because this will give you base. Correct? Your base will be ready. From here it is easy for you to multiply things. Yeah. Observe all these items 1, 2, 3, 4. All these items 125 remain same. Based on number of units, they are calculating the total. Everywhere 50, 50, 40, 40, 15, 15. Correct? And then selling expense variable, selling expense fixed, factory fixed, admin fixed, distribution variable, distribution fixed. So variable, they first calculated 20 rupee, then 20 they kept same, number of units they changed. Fixed 50,000 into 5, 50,000 units, 5 rupee per unit, 250, 250, 250 everywhere. Same way, factory anyway fixed, so 15 into 50,000. Admin anyway fixed, 8 into 50,000. Distribution variable portion 17 into 50, 17 into 35, 17 into 70. Only 17 remains same. Number of units are changing, so the cost is also changing. Distribution fixed 3 into 50,000, 1,50,000, 1,50,000, 1,50,000. In total, it should remain same. These numbers, and this is your total cost. Total cost. Got it? Whatever I discussed is there as working note. You should also present this. Right. Chalo, next question. S Limited has prepared a budget for the coming month. Product A and product B. Production and sales quantity given. RM cost per unit, labor cost per unit, variable cost per unit. All these are variable in nature. Fixed overhead, though they have given per unit, I should know that variable cost per unit makes sense. Fixed cost per unit doesn't make sense. Are you following? Variable cost when they give something as per unit, it makes sense to me. But fixed cost when they give something per unit, I know it doesn't make sense. It should be in total. Correct. Selling price is also given to you. Alright. After some marketing efforts, the sale quantity of A and B can be increased by 1,500 and 500 units respectively. That means I'll just go up. I'm marking in blue. As of now, 6,000 and 9,000 is what is there in your mind. But if you do some marketing, then you can increase this by 1,500 and this by another 500. Okay. But to do this, variable overhead and fixed overhead will be increased by 10%, 5% respectively for both the products. Now how much is variable overhead now? 12 and 6. This 12 will go up by 10%. This 6 also will go up by 10%. Variable cost. And what about fixed cost? It is going up by 5%. But do not calculate 5% on 8 and 5% on 4. Why? Though mathematically you will get the correct answer, whether you do 8 into 6,000 plus 5% or you do 8 plus 5% into 6,000, you will get the same answer mathematically. But logically speaking, a fixed cost is always shown at total level, never shown at at per unit level. Variable cost is always shown at per unit level. Therefore, I am saying better way of presentation would be variable cost per unit plus 10% increase multiply by number of units. Fixed cost, calculate in total and then add 5% more. Though they have presented it as per unit, you can present it in total. What is that they want you to do? You are required to prepare flexible budget for both the products. What is flexible budget? When you have two different possibilities, multiple possibilities, before marketing efforts, after marketing efforts. I have discussed the theory of fixed budget, flexible budget in my theory videos, which you can watch it whenever you want. But here the focus is on practical sum. So let's directly go to the answer part. Product A and B, 6,000, 9,000. All of this is before marketing. That is why I can keep number of units as 6 and 9. Sales, that is selling price. Per unit, you multiply, you get total. Raw material, labor, variable overhead. Fixed overhead, as I told you, better you first fill the total and then you divide. Okay, total cost and profit. This is easy because there is no adjustment to be taken care. But after marketing efforts, when you do, see number of units are changing. Correct? That has to be increased. Sales, selling price, raw material, direct labor. Till this, per unit is all same. You will multiply with number of units. Variable cost, how did they get 13.2? Whatever you have now plus 10% increase. Let me scroll up. How much is your variable cost now? I'm marking in blue. 12 per unit, and that should go up by 10%. Therefore, they said 13.2. But fixed will go up by 5%. That also they have shown it at per unit level, which I don't prefer. As I told you, you do it in total. You do it in total and then divide by number of units to fill this number. How much was the total fixed cost here? 48,000. That should go up by 5%. So in calculator, 48,000 plus 5% more, 50400. Correct? And then you divide that by 7,500, you will get this number. The way of doing is variable cost you increase at unit level, then multiply. Fixed cost you increase at total level and then divide by number of units. Clear? Yes. Here is the final answer. So this is one variety of question, that is variable cost, fixed cost. Second variety of question, as I told you, is preparation of production budget, purchase budget, consumption budget and so on. I have taken some big detailed problems. I want you to go through these discussions even one day before exam. Okay, because these are the most repeatedly asked and very important questions, and if you are able to solve this question, because it has everything, sales, production, consumption, purchase, you will be able to solve the easier questions. Yeah. An electronic gadget manufacturer has prepared sales budget for next few months. In this respect, following details are available: month and units to be sold, quantity. January, February, March, April, May, you have the sale quantity FG. To manufacture one unit, standard cost is 1,500 and you are selling it at 2,000 rupee price and there is a discount of 15%. That's okay, 15% you can apply on 2,000. 2 units of batteries are required to produce one gadget. That means gadget can be understood as FG. Battery is a kind of raw material, though it is not a raw material as such. Correct? For our understanding, we can keep that as raw material. And how much is what is company's stock policy? They want to keep 30% of next month's consumption in hand always. Battery, as I told you, can be understood as RM. And gadget, they want to keep 25% of what they are going to sell in the next month. Right? So, raw material, in this question battery, 30% of what you are going to consume in next month, you want to keep it ready. Which means as on 31st March, you want to keep 30% of what you will be consuming in April. Are you understanding? as on 31st March, closing stock of raw material should be equal to 30% of what you are planning to consume in April. As on the last day of April, 30% of what you are going to consume in May, and so on. Correct? That is for RM. What about FG? 25% of next month's sale. That means I need to know how much will I be selling in April. 25% of that I want to keep FG ready with me on 31st March. So if I am talking about April sales, 25% of April sales should be with me on 31st March. If I am talking about July, 25% of July sale should be with me as on the last day of June itself. Following, next. 3250 units of battery, which is like RM, 1200 units of gadget, which is like FG, is already with you on 1st January. This is opening stock, right? You are required to prepare production budget for Jan, Feb, March, April, and also purchase budget again for Jan, Feb, March, and also calculate the profit for the quarter ending March. That means Jan, Feb, March quarter, right? What is the first question? Production. How to find out production? I have already discussed in detail, correct? Production is equal to sales plus closing stock minus opening stock. What do you produce, RM or FG? FG, correct. So FG, see here, Jan, Feb, March, April, sales given in the question, add 25% of next month sale. Understand, I am still talking about FG, don't get confused. It's not 30%. 30% is for RM. Now 25% of next month sale means what? February 6000 into 25% will be this number. March sale into 25%, April sale into 25%. Understood why I had to take May column? So that I can do April column properly. Okay. Minus opening stock. The first month opening stock is given in the question. Correct? Afterwards, whatever is the closing stock of January, that becomes opening of February, closing of February, opening of March, and so on. Correct? Now you have sales, you have closing stock, and you have opening stock. Finally, you will get production. Did we answer first sub question? Yes. What was first sub question? See here. Prepare production in units for the month of Jan, Feb, March, April. What next? Purchase. But now we should be careful. From production, I can't directly go to purchase. Why? I produce FG, but I need to purchase RM. That means from production, I should first calculate consumption. From consumption, I can calculate purchase, right? See here. Jan, Feb, March, April, consumption is equal to 2 units per gadget. Now you have already calculated number of units to be produced in this table. You see I am marking now in blue. 5300 units you want to produce, and each unit requires 2 units of RM. Each gadget requires 2 units of battery, 2 batteries. Same way, 6250 into 2, 7125 into 2, 7625 into 2. So you got consumption. For that you need to add closing stock of RM, 30% of next month, not production, next month consumption. Consumption is with you. Consumption is with you. How much is consumption for February? 12,500. Do it in calculator. 12,500 you will consume in February into 30%, 3750. You have to keep it ready now itself. I will repeat. Let's take March. You will consume 14250 in March. Do it in calculator. 14250 into 30% you want to keep ready. So 4275 should be with you as closing stock. Understood why April is worked out, so that you can calculate this number. Are you following? Yes. Now I have consumption, I have closing stock minus opening stock. This opening stock, the stock for first month, is given in the question. Afterwards, all the numbers will come like this. This will be here, this will be here. That's it. Only this is given, other two you can calculate. Now you see what all you have. Consumption is ready, closing stock is ready, opening stock you deduct, you get purchase of battery, which is raw material. Okay. Now from sale we calculated production, from production we calculated consumption, from consumption we calculated purchase. Good. One more thing they wanted us to do is statement showing profit. Jan, Feb, March, because they said the entire quarter and then the total. Sales, this is already given in the question. Selling price minus discount, all these details are given in the question. Correct? And standard cost is also given in the question. So what to do now in calculator? 2000 price minus 300 discount, that will be net selling price, minus 1500 cost, profit will be 200. I am marking in blue. Profit, profit and profit. You have, that should be multiplied by number of units. 5000 units into 200 will be 10 lakh rupee. Same way, 6000 into 200 will be this. 7000 into this will be this. Do the total. This is the answer for the whole quarter ending March. Clear to you? Yes. Mark this as one important question, and I want you to go through this one day before exam also. Lot of students have challenges while working out this production, consumption, purchase related. So if you understand the flow properly, sales to production, production to consumption, consumption to purchase. If this is registered in mind, the flow will be very easy. And be very careful. If first step goes wrong, if production goes wrong, consumption will go wrong, consumption goes wrong, purchase will go wrong, correct? All the answer will go wrong. So you have to be very careful. If you understand, if you have the clarity, and in exam, whenever you see a question like this, don't directly start with the heading, computation of production. You see what is asked and you see what is to be done at the end, and then you decide the flow. Let me give you an example. When a student gets this kind of question in exam, the one that I saw just now, he should understand that look, sales data is given and they're asking me purchase. Sales is what is given, purchase is what they want from me. Now how will I go from sales to purchase? Okay, from sales I will do production, that will be first working note. From production I will do consumption, that will be second working note. From consumption I can do purchase, that will be third working note. This answer, the structure of the answer should be ready in your mind. Then only you should start working note 1. I know some students, they will directly start the heading, computation of production. You have to see whether that is really needed. So when you read a question, what is given one side, what needs to be presented at the end, the other side. Now how will I go from what is given in question paper and what they want from me in answer paper? They have given sales in the question paper. They want me to present purchase in the answer paper. How will I do that? Okay, sales to production, first working note ready, production to consumption, second working note ready, consumption to purchase, third working note. That means I am very clear in my order. Now when I write working note 1, I clearly know I am doing this working note to find out production. Next I will do working note to find out consumption. Next working note I will do to get the purchase. This clarity should be there as to how I am going to present my answer. Keep this in mind. All practical papers, you have to keep this logic, keep this flow, keep this in mind. What is given in question, one side. What is to be written in my answer, the other side. In between, what are the working notes or what is the flow in which I'll present the answer. This should be ready in your mind, then only start the answer. Don't start with something as working note and then you realize that, oh sorry, this is not the correct working note, then you erase it, then you do correct working note, and then you realize what you erased was also correct. This will take a lot of time unnecessarily. Let the answer be visually ready. Correct? You should have that picture in front of you that this will be my step 1, this will be step 2, this will be step 3. Once you get this clarity, then you start. Got it? Yeah. So I'll be discussing one more problem on this production, consumption and purchase, because many students, they said that they'll find it confusing at times, so I thought I'll do one more problem on this. V Limited produces and markets a very popular product called X. The company is interested in presenting its budget for the second quarter of 2019. Following information is made available for this purpose. It expects to sell 15,000 bags of X. X is the FG and they're selling it in bags. Okay. During second quarter, selling price is given. Alright. Each bag of X, each unit of FG requires 2.5 kg of Y and 7.5 kg of Z. You observe the difference between previous problem and this problem. In previous problem, one FG took only one raw material, but here one FG, which is X, is taking or consuming two raw materials, Y and Z. Correct? Stock levels are planned as follows: beginning and ending. That means you have what? Opening stock, and then here what you have? Closing stock. Particulars: finished bag. Finished bag means FG, RMY, RMZ, empty bag. Now what is empty bag here? They said you are going to sell 50,000 bags of X. That means whatever you produce has to be filled in a bag. That means even bag has to be kept. Right. Sir, how many bags? Common sense. 1 kg, 1 bag? No. Yes. 37,000 bags, 28,000 bags. That means, indirectly you can understand this as 3 inputs. Y, Z and empty bag. I repeat, one saleable FG called X. For that you need 3 items. You need Y, and how many Ys you need? You need 2.5 kg of Y, and you need 7.5 kg of Z, and you need one empty bag. Right. Stock details are properly given. Next. Raw material Y will cost you 120 rupee. Raw material Z will cost you 20 rupee. Empty bag will cost you 80 rupee. Okay. It requires 9 minutes of labor to produce and fill one bag of X. Labor cost is 50 per hour. Observe, this is 9 minutes. Okay. So when you calculate number of bags, number of X into 9, when you do, you will get answer in minutes. Divide that by 60 minutes. So your answer will be in number of hours, because salary is per hour. Okay. Variable manufacturing cost is 45 per bag given. Fixed manufacturing cost 30 lakh per quarter. When they only say per quarter, just take it as it is. Variable selling and admin expense will be 5% of sales, and fixed admin and selling will be 20 lakh 50,000 per quarter. You are required to do what? 4 questions. Prepare a production budget. Prepare raw material purchase budget. Compute budgeted variable cost to produce. Prepare a statement of budgeted net income, means profit, for the said quarter, and show both per unit and total data. Okay, let's discuss one by one. What is the first thing they want me to do? Production budget. For that, I should first find out production quantity. How to find out production quantity? Sales you have, plus closing stock. By the way, all stock adjustments are easy. They have given in one simple table. Copy from there. Minus opening stock. Here they have done a subtotal. If you don't do this also, it's okay. Yeah, right. So sales plus closing stock minus opening stock, that will give you production. Right. But question is production budget. So you need to estimate the cost also. Right. How to do? They have done raw material purchase budget. Why they did, you will get to know. Production requirement 2.5 kg, 7.5 kg and 1 empty bag. To make 1 unit of X, you need this many things. Requirement for production. You have decided to produce, I am circling in red, 46,000 bags. Correct? So 46,000 into 2.5. 46,000 into 7.5, 46,000 into 1. This is what you are going to consume. Requirement means consume. If you want purchase, tell me for consumption what you should do. Add closing stock, that is given in the question. Deduct opening stock, that's also given in the question. You will get quantity to be purchased, correct? And rate is also given in the question. Multiply cost per kg, you will get cost of purchase. Done. Next, third sub question, they want you to compute budgeted variable cost of production of one bag. Now to produce one bag of X, you need 2.5 kg of material Y, 7.5 kg of material Z, and one empty bag, and that cost is all given 120, 20 and 80, that is taken here, correct? Plus labor. How to calculate labor? 50 rupees you will pay, correct? And one bag of X will take 9 minutes, right? So 9 by 60 minutes will give you number of hours. That into 50 is 7.5, right? What is asked in the question? Variable cost of production. Cost of production. That means material is correct, labor is correct, but you need to take one more cost. What? Manufacturing cost. But the question I am marking in blue, question says only variable. That's why I took only variable manufacturing overhead. I am not taking fixed manufacturing overhead. Only 45. Now some of you might get this doubt. Sir, there is one variable selling and distribution cost also. No, where is it? Sir, you please scroll up. Yes. Sir, here variable selling and admin is 5%. Why are you not taking this number, though it is variable in nature? I am not taking because the question says compute budgeted variable cost to produce. Why do you need selling and other expenses when you are talking about production? Correct? That means you need to stop only up to, you need to do it only up to manufacturing overhead. You should not be taking variable selling and admin overhead, right? So you have material cost, you have labor cost, you have variable manufacturing overhead. That will be variable cost of producing, right? Sir, that means are we going to fully ignore that sales, selling and distribution data? No, you will take it. Where? Next question. When you do profit or net income calculation, how to do it? How to calculate net income? You need sales. From that you will deduct all the costs. You need sales and you will deduct all the cost items. See here, sales value. How much you want to sell? 50,000 bags. That is given in the question. Selling price is also given. Take the sales. Minus, you need to deduct all the cost items. Variable cost, production cost. This is coming from previous table. Here it is 582.5. This number, multiply that by number of units, right? Admin and selling, 5% of sale price, budgeted contribution. What is contribution? Sales minus variable cost. If you don't do it also, it's okay, no problem. Then fixed expenses, manufacturing and admin and selling is taken here. Then by doing this, you will get budgeted net income. Got it? Yes. So we have now calculated sales minus all the cost. One thing that you can ignore in your answer is this contribution, because question is only net income. So you can start from sales and deduct variable cost and fixed cost. You observe here, first we deducted variable costs here, variable, and then we deducted fixed cost. So this is enough. The contribution in between is not needed. So sales minus the cost. Got it? Yes, I think we answered all 4 sub questions. With this, we completed budget chapter. Right. I quickly repeat 2 important areas. 1, estimation of cost with variable cost and fixed cost. Variable cost and fixed cost. 6,000 units, 10,000 units and so on. And also the second variety of question that they can ask from this chapter is production, consumption, sales, labor cost budget, like this. I told you about semi-variable cost, but in the problem that we discussed, we did not have anything with semi-variable cost. If in case they ask in exam, this is how the question would be. Okay, they'll give you two levels of activity, say 600 units and 1000 units. And then they'll give you some cost, say repair and maintenance. Repair and maintenance. And then they say 1100 rupees, 1500 rupees. Now, let's identify. Is the total matching? No. That means it's not a fixed cost. Is per unit matching? Let's check. Do it in calculator. 1100 when you divide by 600. 1100 when you divide by 600, you will get 1.833. Correct? If you multiply that with 1000, you will not get 1500, you will get a different number. If the per unit is going to remain same, then when you cross multiply, it should match. 1100 divided by 600, if you multiply that with 1000, it should match with 1500. Is that happening? No. That means it's not a variable cost also. It's neither a fixed cost, you observe now, neither a fixed cost nor a variable cost. That means it should be what cost? Semi-variable cost. Following? Now, what to do with semi-variable cost? I told you, you will have to segregate. How to segregate? There is a formula. What formula? Variable cost per unit is equal to, what did I say? Change in cost. How much is change in cost? You observe 1100 went up to 1500. That means change in cost is 400 rupees. Are you following? This should be divided by change in units. How much is change in units? 600 units. This was quantity, by the way. Yeah. 600 units went up to 1000. That means change in units is also 400. Now 400 rupee by 400 unit is 1 rupee per unit. 1 rupee per unit. What is 1 rupee per unit, by the way? Variable cost. Then how to find out fixed cost? Do it in calculator. 1100 is the cost, correct? At 600 units. And how much is variable cost? I just now calculated. Variable cost is 1 per unit. In calculator, 600 units into 1 rupee will be 600. What is 600 here? Total variable cost. If this is 600, now out of 1100, 600 is total variable cost, then the balancing figure should be fixed cost. How much is that? If you deduct this, you will get 500. Are you following? Let's check whether our answer is correct or not. How to check? Please observe. Variable cost is 1 per unit. Let us do that for 1000 units also. In total, it will be 1000 into 1000. And out of 1500, if you deduct 1000, fixed cost will be same 500. Now you observe what is happening. Variable cost per unit remained same as 1 rupee. Fixed cost in total remained same as 500. That means our calculation is correct. Hope you are following. Now tell me, in case in exam if they ask you, work out repair and maintenance. I'm highlighting repair and maintenance cost for 700 units. How will you work out? Cost for 700 units will be, I'm writing here on top, variable portion will be 700 into 1. Correct? Fixed portion will be same 500. So 700 plus 500, 1200 will be your final answer. Are you following? What if they say 10,000 units? 10,000 into 1 plus 500. What if they say 0 units? 0 into 1 plus 500. 1 per unit will remain same. 500 in total will remain same. That's all. Is it clear to you? How to identify? Check. See here I have marked. Is the total matching? No. That means it's not a fixed cost. Is per unit matching? Is the cross multiplication working? No. That means it's not a variable cost. That means it's a semi-variable cost. Then use this formula to find out how much is variable cost per unit. Once you find out variable cost per unit, if you multiply that with number of units, you will get total variable cost. Out of total cost, you first take out total variable cost, balance has to be total fixed cost. The fixed cost will remain same irrespective of number of units. Variable cost will vary along with number of units. Got it? This is how you need to work out the problems. I think with that we completed the discussion on budget chapter. Right? Yes. Chapter 12, Marginal Costing. As most of you know that this chapter has a couple of formulas that you'll have to remember. I have listed all the formulas in one place so it can help you during your revision. So this is how you prepare an income statement under marginal costing. Under marginal costing, you break the cost into variable cost and fixed cost, and that's the most important part of marginal costing. Marginal cost itself means variable cost. So this chapter is all about study of behavior of variable cost, right? So sales, you normally take quantity into price. Variable cost is again quantity into variable cost per unit, and you should know that these two numbers should be same quantity. Yeah. The difference between sales and variable cost will be your contribution minus fixed cost will give you profit or loss or earning before interest and tax. Suppose in the question if they give that you have to pay interest also, then after EBIT you will deduct interest. EBIT minus interest will give you EBT, earning before tax, correct? From there, if they give tax also, then deduct that as well. Deduct that. So EBT minus tax will be EAT. Therefore, sales minus variable cost is contribution minus fixed cost is EBIT. Majority of the focus in costing is up to EBIT only, but they can always ask questions below EBIT also. What comes after EBIT? Minus interest, EBT, minus tax, EAT. Alright? Yes. Now, what is contribution? How are you going to calculate it? Sales minus variable cost, which you know here, or sales into profit volume ratio or PV ratio. First of all, why do we call this as contribution? What is the relevance of this word contribution? Please understand, every unit that I sell in my business, every unit that I sell will contribute some margin to the company. I repeat, I am selling a product at 3 rupee. Variable cost is 2 rupee. That means that one unit will contribute 1 rupee to company. Correct? That's why I am using the word contribution per unit. So such 100 units if I sell, 100 into 1 rupee which is contributed by each will be total contribution 100 rupees. 100 units into 1 rupee, 100 rupees. From that total contribution, I will have to pay off all my fixed expenses, fixed costs like rent, salary and other things. Following, that will give me profit or loss. The reason why I use the word contribution is each product will contribute some amount to the company's overall fund, so that using that overall fund, company can recover its fixed cost. What is the other way to find out contribution? I said sales into PV ratio or profit volume ratio. That is explained here. PV ratio is equal to contribution by sales into 100. Please understand the concept. When I do contribution by sales into 100, if I get 30%, 30%, what's the meaning of this? From every 1 rupee sale that I make, I will get a contribution of 30 paise. From every 10 rupee sale I make, 3 rupee, 30% of 10 rupee, 3 rupee is the contribution that I get. When I multiply that by 100, I get the percentage which is 30%, right? The other formula is change in profit by change in sales into 100. Change, when I say, they should give you data for 2 time periods. Quarter 1, quarter 2, first half of the year, second half of the year, first month, second month, or this year, next year. Only when you have 2 years data, you can use the formula of change in profit by change in sales. Therefore, tell me when to use this formula, fifth formula, when the question is talking about single period. When to use sixth one, when the question is talking about, correct, 2 time periods. But remember, the 2 time periods which you are going to take should be of same size. It should be quarter to quarter, month to month. It cannot be month versus quarter. Then you cannot say that is change. That is not correct way of calculating change. Alright, come back. What is break-even point? Something that most of us know. These are easy things, simple things, so I'm not taking too much time on these things. It is a level of sales at which profit is equal to 0, that is total revenue, that is total income is equal to total cost. Correct. What will happen above break-even point? I will earn profit up to break-even point. Till I reach break-even point, I will be under loss. At BEP, it's no profit, no loss. Break-even point in units, break-even point in rupees. Now there are two formulas to find out BEP. One in units and one in rupee value. Both numerators are fixed cost to be divided by contribution per unit or PV ratio, and PV ratio I already discussed. Right. Should we mug up all these formulas? See, if you understand the connection, break-even point in units, if you find out, and if you multiply that by selling price, you should get break-even value in rupee. I repeat, BEP units if you find out and then multiply by selling price, you should directly get BEP in rupee value. So you don't have to remember both the formulas. One, if you know, the second one can be found out. But why it is necessary that you should learn all of this is, what if contribution per unit is not given in the question? Then you have to do using this formula only. Correct. So it is better to know all of this. Right. Chalo, next. Fifth and sixth I discussed already. Then comes what? Margin of safety. Again you have two formulas for MOS. Which one to use? That depends on the data given in the question. Margin of safety is the sales in excess of break-even point. That is, if my break-even point is 5 lakh and actual sale is 6 lakh, that extra 1 lakh which you have sold in excess of break-even is called MOS. See the wording, margin of safety. When as a businessman will you feel that you are in a safe position in your business? Only when you are making profit. You cannot say, I am suffering from huge loss, I have a lot of losses in my books, but that's okay, I am safe. No, that's not going to happen. Only when you are making profits, you can say, look, now in my business I am safe. That means you have to observe properly here. Any question where MOS is given, you should immediately understand that the company is currently making profits. I repeat, any question where you observe that MOS is given, that means company sales is already above BEP, and above BEP you will definitely be making profits. Correct. Second formula is profit by PV ratio. When I discuss problems, I will discuss all of this again. Cash BEP is similar to normal BEP, but the numerator fixed cost which you take should be only cash fixed cost. The fixed cost which is numerator should be understood as cash fixed cost. That means depreciation etc. should be taken out. Okay. Break-even chart, class notes. This is something that you all know very well. Break-even chart, if you want, I can quickly write it. So this is your quantity line. This is your quantity line and this is your rupee line. Correct. Fixed cost is something like this. Fixed cost will be a straight line. Correct. Total cost will be something like this. Total cost. Because in this portion is all variable portion which keeps increasing along with level of activity. And revenue line, if you start from here, from 0, it should be, this is your total revenue line. A point where your total cost and total revenue will be meeting, that point is called break even. From here, if you come down, you get your BEP units, and if you go here, you will get BEP in rupees. Simple. Below this, understand, below break even, your revenue is low. See this, revenue is here, cost is here. More cost, less revenue, you are under loss. Cost is here, sorry, revenue is here, cost is again at a higher point, loss. Here also you observe revenue is less, cost is more. But here you see revenue is more, cost is less. That means you have profit. The angle that is formed at BEP, is called angle of incidence. AOI, angle of incidence. Wider the angle, higher will be the profits. Understand? Wide angle means what? There is a higher gap between revenue and cost. there is higher difference, higher gap between revenue and cost. And if you have high difference between revenue and cost, when you cross BEP, revenue will go up at a faster pace compared to cost. Good for you. More revenue, less cost will give you more profit. What if angle of incidence is very narrow? Then understand the difference between revenue line and cost line is very narrow. When the difference, that line is very narrow, the profit margin will also be very less. Got it? Right. If you want, you can quickly make a note of this chart. All of you first draw fixed cost line, which should be a straight line. I have shown here, I'll highlight it now, this line, the straight line. First draw this, yeah, and then total cost line, which should start from fixed cost, because even when the number of units are 0, at least fixed cost will be incurred. And I'm writing total cost, that means total cost includes fixed and variable portion, correct. And then draw revenue line, which should start from 0, and draw it in such a way that at some point it should hit your total cost line. Total cost line, and that point, which I'm circling now in green, that point where your revenue and cost lines are going to meet, that point is called as break even point. Draw one dotted line from there to x-axis. This will give you break even point in quantity, and this side if you go, you will get break even point in rupee value, BEP in rupee value. Okay, yes, let's continue. Angle of incidence, I told you this is the angle formed at BEP. Wider the angle, higher the margin. This I told you already. Next, desired sales. There are two formulas. Now, where will I use desired sales? If a businessman comes to me and says, sir, look, I want to achieve 1 lakh profit in the coming year. Tell me how much should I sell? He has a target profit in mind. To reach that number, he wants to know how much should be sold. Correct? That means you have a fixed cost that you will have to incur, plus you have to earn your desired profit, divide that by PV ratio. That is what you have to sell in rupee term. If it is quantity, observe fixed cost plus desired profit divided by contribution per unit. Now, don't think there are too many formulas and it is difficult to remember. You must observe, let me just erase it, give me a minute. You must observe the similarity between these formulas, then it will be very easy for you to remember. Yes, listen. If you see break-even point formula, both rupee and units, fixed cost by contribution per unit, and here you see desired sales also. When it is in quantity, you are using same fixed cost. Here also fixed cost, here also fixed cost. Denominator, here also contribution per unit, here also contribution per unit. What extra are you adding here? Desired profit. Here you are not adding. You know, even if you want to add here, it will be 0. Why? Because you are talking about break-even point. At the break-even point, how much is the profit? 0. Simple. Therefore, same way, look here also, BEP in value, same fixed cost, same fixed cost, same PV ratio, same PV ratio. Then what is the difference? Only profit extra you need to add because you want to achieve some profit. Correct? That means BEP and your desired sales can be understood together. BEP will be fixed cost by contribution per unit. No, you want some profit, is it? Then fixed cost plus the profit that you want divided by contribution per unit, that will be the desired sales. Got it? Next, what is shutdown point? Shutdown point is the level of operation below which it is not at all preferred to continue the business. That is, closing the business is better than continuing such business. That's why name is shutdown point. Suppose, what is the interpretation? Suppose shutdown point is 600 units. What's the meaning of this? If your sales are going to be below that point, below 600 units, it is better to close your business than continuing that business. It is better to close your business than continuing that business. Got it? Here again, avoidable fixed cost by PV ratio if it is in rupee, quantity, avoidable fixed cost by contribution per unit. What is avoidable? Total minus unavoidable. Sir, what is the meaning of avoidable and unavoidable? See this. If I have already signed the rent agreement and I have agreed that I will be paying this much of rent for next 12 months, I cannot cancel that rent agreement in between. I have to pay the amount. Now this is unavoidable fixed cost. Correct? Second example, I have hired 4 security guards and I'm paying them fixed salary of 20,000 per month. Now I am thinking, do I really need 4 people? Can I continue with only 2 of them, and can I ask 2 of them to quit the job? If 2 of them can leave and if I can still survive, that means this is an avoidable. It is avoidable fixed cost. Out of 4, 2 security guards you always need, that is unavoidable. The other 2 can be avoided, that is called avoidable fixed cost. What can be avoided by your decision making? That is called avoidable. What cannot be changed irrespective of what decision you take? That is unavoidable. Suppose you have hired one employee and you have signed a contract that you will not remove him for 1 year and you will have to pay him 30,000 salary per month. Now can you do anything about it? No. It becomes unavoidable fixed cost. Got it? Right. Let us discuss a small concept called key factor. Key factor is also called as limiting factor. Anything where I have less than what I need, that becomes key factor. For example, I want 30 hours in a day. I have only 24 hours. That means time is a key factor. I want 10 machines to run my factory, but I can afford only 6 machines. Now machines will be considered as key factors. I want 10 employees. I have only 8 employees. Labor is key factor. Anything which is in short, basically where I do not have enough that I want, is called key factor. Example is given: shortage of material, restricted labor time, power cut, limited capacity, etc. Right. Let us start with some problems. MNP Limited sold 2,75,000 units at 375 per unit. In marginal costing, you must understand one thing. A problem can be worked out in different ways. I repeat, a same problem which will give you eventually same answer can be worked out in different approaches. So one approach is what I will be discussing, but if you think it can be done using reverse working, or you think we can start it with X and make an equation and work out, you are totally free to do so. There is no restriction from my side that you have to work out in the same way in which I am discussing now. Every marginal costing problem can be worked out in different ways. Let that be very clear at the beginning. I may discuss in one way, but that's not the only way. As long as the final answer is same, different way of working is fine for me. Okay? Yes. Now when I am doing marginal costing problems, I should observe every information. When they say 2,75,000 units, 375 per unit, if I multiply these two, I will get sales value total. Correct? These calculations I should be making back of my mind. Variable cost is 175, manufacturing 140, selling 35. That means 375 minus 175 if I do, I will get contribution per unit. Are you following? These things I should be doing, these calculations I should be doing back of my mind when I read the question only. 375 minus 175, which is 200, that will be contribution per unit. Okay. Fixed cost is incurred uniformly throughout the year, 3 crore 50 lakh, including 1.5 crore of depreciation. There is no beginning or ending stock. Okay. Compute BEP sales quantity and cash BEP. What is the difference between BEP and cash BEP? This depreciation. Now what is the formula? Fixed cost, how much is it? 3 crore 50 lakh. See the answer. 3 crore 50 lakh divided by contribution 200. 1,75,000 units. How to do cash BEP? Same thing in the numerator. Instead of 3 crore 50 lakh, you have to take only 2 crore because 1.5 crore is depreciation. Contribution is same 200 rupee. I think it's not printed here. Yeah, 200 rupee. This will give you the answer. One thing is done. Right. What is the second question? PV ratio. Very simple. What is PV ratio? Contribution by sales. You can do contribution is 375 minus 175, 200. 200 by 375 into 100. That's it. See here, 53.33%. Sir, should it be total contribution by total sales or contribution per unit by selling price per unit? Either way you do, no problem, because whether it is per unit or in total, you are going to multiply both sales value, variable cost by number of units. So whether you take per unit, both numerator and denominator, or you take total, both numerator, denominator, my final percentage will be same. Following? Right. Let's see. Compute the number of units that must be sold to earn EBIT, basically profit of 25 lakh. Now this is about desired sales. They have already given you the target profit which they want to achieve, and they're asking you how many units must be sold. Let's see how to work that out. Desired sales is equal to fixed cost plus desired profit or EBIT divided by contribution. All the numbers are available in the question. Right? Last one. Compute the sales to achieve an after tax income, profit after tax of 25 lakh if 40% is the income tax rate. We have done till EBIT. From that I told you I should deduct interest. Is there any information about interest to be paid in this question? No, there is no information. When there is no information, EBIT itself will be EBT. EBIT itself will be EBT. From there you will have to deduct 40%. Right? Now tell me, if 100 is EBIT, 100 is EBIT. There is no interest, so let me write it as EBT. Tax will be 40. Correct? Then EAT, earning after tax, also called as PAT, profit after tax, that should be 25 lakh. Now cross multiply. If this is 25 lakh, how much should be EBT or EBIT? See what they have done. Same way. 25 lakh is 60. Then how much is 100? 4166 667. Then use the same formula. Fixed cost desired EBIT by contribution. 3 crore 50 lakh 4166 667 divided by 5333, that is 0.5333 or 53.33%. You get the number. Clear? Next. Gaurav Private Limited is manufacturing and selling two products, black and white, at a selling price of 20 and 30. The following sales strategy has been obtained for the financial year 1920. Sales planned in rupee value is given. Now again I told you, the moment you see this rupee, and as you already know selling price, you should immediately divide this number and this number. 81 lakh by 20 will give you number of units. 54 lakh by 30 will give you number of units. Correct? The selling price of black will be reduced by 10%. That means 20 will come down by 10%. 20 minus 10% will be 18 rupees. White will come down by 20%. 30 rupee minus 20%, that will be 30 minus 6, I think 24 rupee. Okay. Break even sale is 70% of total sales. So if your total sales is 100 unit, at 70 units you will achieve BEP. Profit for the year to be maintained is 826,200 in case of black and 745,200 in case of white. This would be possible by reducing the present annual fixed cost of 42 lakh, which is allocated as 22 lakh to black and 20 lakhs to white. That's okay. That is there in second sub question. First sub question, number of units to be sold of black and white to break even during the year 1920. How to do this? See this. Particulars black and white. Sales value given, selling price given. If you divide 81 lakh by 18, you will get number of units. Divide this, you will get number of units 4,50,000 and 2,25,000. See, I am not taking the old price, I am taking the new price. Hope you are observing. I did not take 20 and 30. I took the new price, revised price. So number of units to be sold is given. But we know that break even will be achieved at 70% of this. So you don't have to sell 4,50,000. If you sell 315,000 units also, that's more than enough to hit BEP. See what is asked in the question. I'm marking in blue now. Question says number of units to be sold of black and white to break even. And question is about units. That means here is the end of the answer. Even if you don't do this, it's okay. Because you don't want it in rupee value. Correct? Second, amount of reduction in fixed cost product wise to achieve desired profit mentioned at 4 above. Where is fourth adjustment? Yes. Profit for the year to be maintained is given. Now see the reverse working. They have given profit for you. They have given profit for you. They have also given how much is the existing fixed cost, 22 lakh and 20 lakh. They are saying if you want to achieve this much of profit as given in fourth adjustment, we have to reduce the fixed cost by some amount. How much should that amount be? That's what they want you to work out. See how is it done. It's basically a reverse working question. Profit to be maintained, right? Here, this is given in the question. Margin of safety, 70% of sales. How did I get that number? By the way, break even sales is here. Total sales is here. So total sales you have, break even sales you have. If you take that out, the missing figure will be MOS. Total sales minus MOS is BEP. That means total sales minus BEP is MOS. Correct. And profit by MOS into 100 will be PV ratio, because one of the formulas for MOS is profit by PVR. You shift denominator to this side and left hand side to denominator. This will be the formula. You get 34% and 46%. And then contribution, from there you deduct the profit, that is this number again. You will get to know how much should be the revised fixed cost. But how much is the present fixed cost? 22 lakh and 20 lakh. That means the difference is what I should try and reduce. By the way, this problem can be worked out in another way also. What's the other way? Let the fixed cost, new fixed cost be X. Okay, keep that as X and write the profit. Then contribution will be profit plus X, that number. And then you know the PV ratio. From there you can make an equation and then also you can work out. You will ultimately get X as 1927,800. Presently we have 22 lakh. 22 lakh minus 1927,800 will be the reduction in fixed cost that is required. Correct? In simple, target fixed cost is 1927,800. But as of now, fixed cost is 22 lakh. That means we have to try and bring down the fixed cost by 2,72,200 rupees. And same way for the other product, 261,200 rupees. Okay. As I told you, you don't have to work out this problem in the same manner. You can do reverse calculation as well. Right. Let's continue. Another problem. A manufacturing company is producing a product A which is sold in the market at 45 rupee per unit selling price. Company has the capacity to produce 40,000. They're not producing as of now. They have the capacity. The budget for the year 2018-19 projects a sale of 30,000 units. The cost of each unit is given to you. Material, labor and overhead. MOS is also given. Good. And MOS is in rupees. See, here you have the selling price and here you have the cost and here you have MOS also. You are required to find out fixed cost and BEP. How to do fixed cost here? Tell me what all details you have. MOS you have, correct? Selling price you have, sales units you have, correct? I think this should be very easy. You have number of units of sales, that is 30,000. You have selling price. If you multiply 30,000 into 45, you will get total sales. Correct? From that, if you take out MOS, that should be BEP. See how they have presented the answer. As I told you, it can be presented in a different way. MOS is equal to, they have used the formula method, profit by PV ratio. Profit by PV ratio. And this number is already available, 412,500. How much is the profit? We don't know. Divided by how much is PV ratio? PV ratio is contribution by sales. So contribution will be sales minus all the variable cost, 12, 9 and 6. Correct? Divided by selling price 45. And then when you work out the equation, you get profit as 1,65,000 and PV ratio as 40%. Here you must observe, they said cost of each unit, material, labor and overhead. When they say cost of each unit and then in the question they say find out fixed cost, that means you should understand that this overhead is purely variable overhead. Correct? This is not variable plus fixed overhead. This is only variable overhead. How do I know? Material and wages is always variable in nature. That I have already told you. Correct. And here they said that cost of each unit. When they say something as cost of each unit, every unit, it has to be variable cost. That is one clue for you. The second clue is, in the question they are saying find out fixed cost. That means this 6 does not include any fixed cost. You have to calculate it separately. That means all this is variable cost. Clear? Now 45 selling price minus variable cost will give you contribution per unit. If you divide contribution per unit by 45, which is selling price, into 100, that will give you PV ratio. Hope all of this is clear. Right. What is the next thing they want you to do? Calculate the volume of sales. When they say volume of sales, they are talking about number of units to be sold. Number of units to be sold. To earn a profit of 20% on sale. Now again, this question either you can use formula and work out, or you can keep number of units as X. Okay, from there you can prepare the income statement and your profit will be 20% of sales value, right? And then equation, find out the value of X. That can also be done. Either formula or reverse working or equation with the missing figure as X, anything is fine. Marginal costing problems can be worked out in different ways and I'm totally okay. Even the validators are totally okay if you use different approaches. There is no compulsion for you to remember or mug up all the formulas and write the answer using formulas only. No compulsion. Okay. However, let's see how they have done it. They calculated fixed cost and then, okay, here it is. Sorry. Yeah. Let's assume sales volume as S. See, I told you, you can assume it as X. They have taken it as S. By the way, previous answer is still here. Yeah. They have taken it as S and then they said 45 S. S is quantity. 27 S is equal to 18 S. And contribution will be 18S is equal to fixed cost plus desired profit 9S into 20% of 45S. Basically 20% of 45S is 9S, right? And then 18S minus 9S and then you work out, you will get the answer here. So 18,75,000 rupee sales are required to earn a profit of 20% on sale. Answers are with you. You can work out later also. I'm only telling you that the same problem can be worked out under different approach also, right? What is the next question they have? Question number 3. If management is willing to invest 10 lakh rupee with an expected return of 20%. Now how much is 20% on 10 lakh rupee? That will come to 2 lakh. Calculate the unit sold to earn this profit. You see how it is done here. I'm sorry. Yes, see here. They're saying contribution is equal to fixed cost plus desired profit. How much is desired profit? The return on investment. How much is return on investment? 20% on 10 lakh, which is 2 lakh rupee. You have contribution, you have fixed cost. Again, S will be the number of units, and then you work out, you get 31,945 units approximately. That's what you have to sell if you want to earn a return or profit of 2 lakh rupees. Right. Let's see. I think we have one more sub question there. Yeah. Management expects additional sales if the selling price is reduced to 44. How much is the present selling price, by the way? Let me scroll up. It says 45. Correct? They're planning to bring it down to 44, 1 rupee less. Calculate the units to be sold to achieve the same profit as desired in above sub question 2. Now see what is happening. You want to achieve same profit as you are earning before, but you are bringing the selling price down by 1 rupee. Think and answer. If selling price comes down, will the variable cost come down per unit? No. If selling price comes down, variable cost will not come down, it will remain same, but contribution will come down because selling price is less by 1 rupee. Contribution also will get impacted by 1 rupee. Okay. Now you want to achieve same profit. Somehow you will have to compensate the loss of 1 rupee per unit. You will have to sell more units. You have to sell more units so that you can compensate the reduced contribution. How is it worked out? You see here. They said revised contribution will be 17S. Why is it 17S? Earlier it was 18S. See here. That 1 rupee when you reduce, 45 will become 44. 1 rupee reduction in selling price will result in reduction in contribution also. 17S is equal to 3,75,000 plus 2 lakh S. And then from here you work out the equation, you will get the answer. Okay. Alright, what else? Just give me a second. Yes. Yeah. Next problem. Following figures have been extracted from the books of RST Limited, financial year 16-17 and 17-18. Sales given to you, profit or loss given to you, both the years, and what is asked in the question: PV ratio, fixed cost, BEP, sales and MOS. See, 5 marks question, 5 things they want you to solve. Now these are the questions that will normally come in compulsory category. I hope all of you know the question paper format, the pattern. You have a compulsory question at the beginning, 4 questions of 5 marks each. 20 marks in total. And whenever you see something like this, 5 things to be calculated, please understand 1 mark is allotted for every question. Even if you cannot answer, say for example this question, suppose in case you can't answer, no problem, at least do these 4 and come, you will still get 4 marks. Don't be under the impression that you'll either get 5 out of 5 or 0 out of 5. Okay, even if 3 answers are correct, you will get 3 out of 5. If 2 are correct, you will get 2 out of 5. So how much ever you know, do and come. Leaving is not the good option just because you don't know the whole answer. See, you observe the answer is only this much: 1, 2, 3, 4 and 5. I think that's all. That's all, only this much. For this you are getting 5 marks, and all the numbers you can see, just one formula, one line, one simple calculation. Marginal costing, if it comes in compulsory category for 5 marks, you should not leave that at any cost. Because 5 marks, 5 small things is very easy to do. Getting it? Even if you can't do the entire answer, no problem. At least PV ratio and fixed cost you can do. Do that and come, you will get 2 out of 5. Correct? Yeah. Whenever you see a question like this, keep in mind, whether costing or any practical paper, wherever you see 5 ledgers to be prepared, like this, 5 numbers to be worked out, 4 differences to be written, and see the marks, you will get this 1:1 ratio. When they say 5 ledgers to be prepared, if you have 10 marks, understand it is 1:2. Here 5 things to be calculated, 5 marks, 1:1. They say write any 4 differences between 2 concepts and 4 marks is allotted. That means every difference will get 1 mark, which means even if you cannot work out the entire answer, no problem. Even if you cannot work out the entire answer, no problem. How much ever you can do, that you do and come. Can you do 2 out of 5? No problem. Do 2 properly and come. Don't think in practical papers you will get 8 out of 8 or 0 out of 8. That won't happen. Even if all working notes are correct and final step is wrong or final calculation is wrong, for 8 you will still get 6 or 7. Working notes will give you marks. So wherever you see 4 differences, 5 types, 10 points, like this 5 numbers to find out, understand each step will have some marks weightage. Don't leave and come. You know what some students do? They know PV ratio and they know BEP and they don't know anything else. And they leave this and come. And that too, if it is a compulsory question, what will you get by leaving? Correct? You can do 1 and 3, first sub question and third sub question. At least do that and come. Leaving it completely is not a good option. Okay? Yes. Let's discuss the answer now. What is the first question here? PV ratio. Now how to work out PV ratio? You have 2 periods in this question. First year, second year. Yeah. That means you can use change in profit by change in sales. But when you take change in profit, 15,000 loss, 15,000 profit, 15,000 negative, 15,000 positive, change is not 0. Don't do that mistake. 15,000 minus 15,000, sir, it will be 0. No, it was 15,000 loss. Now it is 15,000 profit. If I draw a timeline, your number was here, minus 15,000. You are at loss. And now you are here, plus 15,000. How can you say no change? You have traveled from here till here, no? Correct? That means change will be 30. Change will be 30 from here to here. Are you following? Yeah. Some students do this. Change means what? 5 lakh minus 4 lakh and 15,000 profit minus 15,000 loss. No, it is 15,000 minus of minus 15,000. Correct? Minus of minus 15,000 is plus 15,000. So 15 plus 15 will be 30,000. So change in profit is 30,000 divided by change in sales, that is 1 lakh. See the answer here. Difference in profit by difference in sale into 100, 30%. To do this, you are getting 1 mark. What is the difficulty in this? Just to do this, you will get 1 mark. You should not leave these kind of questions. Specifically marginal costing, if it is in compulsory category, you have to do it. Okay? Right, let's see. Second one, fixed cost. What is the formula for fixed cost? Sir, we don't have a formula directly for fixed cost, but we can prepare income statement. How? Sir, I will just show the answer here. This is how we can work this out. Observe what I am writing. Now for both the years, you have got sales with you in the question. Correct? And you have got profit in the question. Profit or loss, that's okay. You've got the number. You have calculated PV ratio. And from sales, if you multiply sales into PV ratio, you will get contribution number also. Correct? Difference between these two will be variable cost. Difference between, I'm highlighting this number and this number, this number and this number is variable cost. Now difference between this number and this number, difference between contribution and profit, that will be fixed cost here. And remember, these two fixed costs should remain same. First year or second year, the fixed cost should be equal. That means instead of using formula, you can prepare an income statement and answer this question. This is your year 1. This is your year 1. This is your year 2. From here also you can start. Put the sales given in the question. Correct? And PV ratio, if you multiply, you will get the contribution numbers. Profit or loss is already given. Between these two, you have variable cost. Between these two, you have fixed cost. One point that you should check, the fixed cost here and here should be equal. That's it. Correct? But in what way they have presented? See the answer. They have done it using formula. Contribution for 2016 will be 4 lakh sale into 30%. Add back a loss, correct? You will get fixed cost, right? Because contribution is equal to fixed cost plus profit. If you move fixed cost this side, then you will have to add back the loss, right? Okay, chalo, next. Third one is break even point. Now, is it BEP in units or BEP in rupees? Observe in the question. Let me erase all this. Yeah. Can we calculate BEP in units here? To calculate BEP in units, I need numerator fixed cost that I have calculated here. This number I can take. But if I want BEP in units, my denominator should be contribution per unit. Be careful. Do you have contribution per unit anywhere in the question? No. There is no data or information which will help me in calculating contribution per unit. I can calculate total contribution, agreed. But can you calculate contribution per unit? No. That means you cannot use this formula. Here the BEP should be understood as BEP in rupees. And what is the formula for BEP in rupees? Fixed cost divided by PV ratio. Use that formula. Fixed cost by PV ratio. Clear? See what is done in the answer. Fixed cost by PV ratio. 135 by 30% means 0.3. I also told you why fixed cost, why BEP in units cannot be calculated, right? Okay, sales required to earn a profit. This is desired sales. Fixed cost you already have plus the desired profit divided by PV ratio. Last one, MOS, profit divided by PV ratio. 2017-18 profit you have, divide that by PV ratio. All the numbers are given here. Fixed cost plus desired profit by PV ratio. MOS, you can do it even this way. Yeah, actual sales minus BEP sale, or you can do profit by PV ratio. There can be different ways of working out the same number. Done? Okay. Chalo, next. PH Gems Limited is manufacturing ready-made suits. It has annual production capacity of 2000 units or pieces. The accountant has prepared following information for the year to the management. Sales given 1500 pieces. This is the selling price. Direct material, direct labor, overhead, in that something is fixed. That means balance is variable. Out of 1197,000, 40% is fixed, 60% is variable. Correct. Then the net profit. Basic data is available. Evaluate the options. First one. If selling price is increased by 200 rupee, I am marking in red. What do you mean by increasing the selling price by 200? As of now, we are selling it at 1800. Add 200 to this. Make the selling price as what now? 2000 rupee. Correct. If you do that, the sales will come down to 60% of the total annual capacity. How much is total annual capacity here? 2000. 60% of 2000 will be 1200. As of now, we are selling 1500. But if you increase the price, they are saying your quantity will come down to 1200. Should the company increase its price? That's the question in front of you. What you will have to do? You have the net profit with you already, correct? You work out another income statement and find out net profit if they sell 1200 pieces at 2000 rupee. 200 plus I said, so 2000 rupee. What will happen? Sales value will change. All variable items will change. Why variable items will change? These items are for 1500. All these variable items are for 1500 pieces, correct? Following, when you bring it down to 1200, your variable cost also will change, but the fixed portion 1197,000 into 40%, the fixed portion will not change. The variable portion will change in total, and then you will have a profit. Based on that you can take a decision. See how they have worked out. They said new selling price will be, as I told you, 2000, and new sales quantity will be 1200 pieces. So then they did sales 1200 into 2000 and all the variable overheads. You see how they did? 56,94,000 divided by 1500 pieces. That will give you cost per piece into 1200 units. Same way, labor also, present labor cost divided by present quantity. That will give you cost per unit into 1200. Variable, out of 1197,000, 60% is variable. That you divide by 1500, 1500 into 1200. That will give you variable overhead. So once you bring all of this, you have contribution, fixed cost you observe, that will remain same. You have the profit. Is the profit increasing? Yes, because earlier you are making 466,300, correct? But you are expected to make 517,200. There can be two different views. One, the decision is improving the net profit, hence it is viable. Alternatively, there can be one more interpretation. Look at this. If the price is increased by 11.1%, that is 200 on present 1800, sales will go down by 20%. That is, it is decreasing by 300 on 1500. Change in demand is greater than change in price. You are increasing the price by 11% and your quantity is going down by 20%. This is not a good sign. Since the variable costs are still same, correct, per unit, the profit has increased to 517,200 in spite of high elasticity of demand. The company would not be able to sustain this policy on account of change, if any, in variable cost. They are saying, look, this is a good decision, but you are increasing the price by 11% and because of which you are losing sales quantity by 20%, 20%. That means on one side you are compensating, correct, 20% is the loss of market demand, but you are only getting 11% extra in terms of price. If your variable cost starts going up, then it will be very dangerous because first of all you have lost quantity demand. Second, you have increased the price because there is a chance in future more customers may reject your product because the price has gone up, and in case variable cost goes up, you will be in a dangerous situation. This is an alternative way. Okay, right? You can write both in exam, nothing wrong. What else? There is one more sub question. The company can earn a 20% profit on sale if they provide a type-in with suit. As of now, it's only suit. If they give a type-in, then profit can be 20% on sales. The cost of each type-in is 18 rupee. Calculate the sales to earn profit of 20%. See how they have done here. Sales 1800, rather selling price 2000 has come down to 1800. Direct material 396. Cost of type-in, correct, that should also be taken now. Labor, everything is divided by 1500, so you can get per piece or per unit, right? Then the contribution, then the PV ratio 34%. Now sales required to earn a profit of 20% means what? Sales is equal to 4,78,000. What is 4,78,000? By the way, this was the fixed cost here, correct? Desired sales, I am circling in blue now. Please observe, desired sales is equal to fixed cost 4,78,000 plus desired profit. How much is desired profit? 20% of sale divided by PV ratio, and then you work out the equation, you will get the answer. Got it? Yes. And then you have the explanation given here, right? Okay, next question now. CT Limited manufactures and sells a single product X. Selling price is 100, variable cost is 60. That means contribution is 40. This you should do back of your mind immediately when you see selling price and variable cost. Fixed cost is 24 lakh. Okay. Annual sales are at 60% of margin of safety. That means 40% is BEP. Correct. Calculate the rate of net return if the tax rate is 40%. When they give you tax rate and then they use the word net return, that means they are talking about profit after tax, right? What is that they want you to find out? Calculate the rate of return on sales. See how it is done. Selling price given, variable cost is given. I told you contribution is 40. Break even point is fixed cost divided by contribution per unit, 60,000 units, correct? And they said margin of safety is at 60%. That means BEP is at 40%, correct? So if this is 60,000, 60,000 is 40, which is BEP. How much is 100 when you do? You will get 15,000. I repeat. Let me scroll up. They are saying that the annual sales are 60% of MOS. Sorry, annual sales are at 60% MOS. That means if 100 is the sale, 60 is MOS. If 60 is MOS, balance 40 is BEP. Correct? Now, using the formula, you have calculated BEP to be 60,000. Now, that BEP is 40. How 40? Because 60 is MOS, that means 40 is BEP. If 60,000 is 40, which is BEP, how much is total sale, which is 100? Cross multiply, you get 1,50,000. And if you are selling 1,50,000 units, take the selling price, deduct variable cost, you get contribution, minus fixed cost, you get profit. But the question says net return, therefore let us deduct even tax rate. 40% if you take out, net return or profit is 21. Profit after tax is 2160,000. But the question is the rate of net return, that will be 2160,000 divided by sales 1 crore 50 lakh into 100, you get 14.4%. Clear? Yes. What next? See this. For the coming year, it is proposed to add another product line Y. As of now, you are selling a single product called X. Now you are planning to add another product called Y. Selling price is given, variable cost is given. 150 minus 100, 50 is contribution. The total fixed costs are estimated to be 28 lakh. As of now, 24 lakh. Now once you are adding a product, maybe you are buying one more machine to produce that, the depreciation has got added here. So total is 28 lakh. Sales mix will be 5:3. Compute BEP for both the products. Now how to do BEP? Sir, easy. Total fixed cost 28 lakh divided by what? Contribution per unit. Which one will you take? Will you take the contribution per unit of X or will you take the contribution per unit of Y? If you take contribution per unit of X, I am writing here, that will be 40 rupee. Here 100 minus 60. If you take the contribution of Y, it will be 150 minus 100, that will be 50. And you are saying denominator is contribution per unit, but which unit? You have two different units, two different products. Sir, we will take average, sir, 40 plus 50 by 2. No, you can't take average. When can you take average? If you are selling at equal quantity proportion, but the weightage is 5:3. That means you can't take 40 plus 50 by 2 as simple average. You will have to take weighted average. Now this is called combined BEP. How to do? See here. X will be 5 out of 8. Why is it 5 out of 8? Because ratio is 5:3. 5 out of 8 will give you 40 rupees. Plus 3 out of 8 will give you 50 rupees. Are you following? I am repeating. I will mark in green. 5 units out of 8 units will be product X, and that will give you 40 rupee. Plus 3 units out of 8 units will give you 50 rupee. If you add both, you will not get just the average contribution, you will get weighted average contribution per unit. and that will become your denominator. You see the answer here. They have done selling price, variable cost, contribution. 40 and 50 composite contribution will be, see this, 40 into, or rather 40 by 8 into 5, same thing, 5 by 8 into 40, 3 by 8 into 40, then they got 43.75. So overall break even will be 28 lakh divided by 43.75, 64,000 units. But the 64,000 is not for X or Y, it is for the total company. But the question says show it for X and Y separately. Out of 64,000, you know X will be 5 and Y will be 3. So 5 by 8 and this will be 3 by 8. That's what they have done. 64,000 into 5 by 8. 64,000 into 3 by 8. 40,000 of X, 24,000 of Y. If you sell, your company will break even. Did you understand? Right. That's all. I think with that we completed the revision of marginal costing. Okay. Yes. Next chapter is standard costing. Let us start chapter 13, standard costing. As you know, standard costing is about comparing the standard cost with actual cost, correct? Standard costing chapter for Inter, CA Inter is all about comparing the standard cost with the actual cost and calculating the variance, and also analyzing the variance, basically trying to understand what went wrong or what caused the difference. If standard cost is less, actual cost is more, understand? Standard cost is less, actual cost is more, that will be adverse variance. The difference between standard cost and actual cost is variance. If standard was less, actual is more, then there is adverse variance because we have spent more. If standard was more and actual is less, that means we have spent less than standard. That means we have saved some money to the company. That will be favorable variance. Clear? Now, to understand this topic, we need to divide the topic into three parts. One, material cost variance. Second, labor cost variance. Third, overhead cost variance. Overhead cost variance can be further segregated into variable overhead and fixed overhead variance. Let us first begin with material cost variance. I know most of you have studied standard costing using lot of formulas. Let us learn it in a different way today. I will be using table instead of formulas, okay? And I will still explain it to you how my table and the formula that ICI book uses are one and the same. And I leave it to you. If you are comfortable with remembering all the formulas and doing it in that way, please continue. If you think the table is easier than the formulas that you already know, then go by the table. Okay. Finally, you will get the same answer, not to worry. Whether you go by table approach or you go by formula approach. Once I complete my discussion using the tables, I'll tell you why formulas and tables are one and the same, how they are same, why there won't be any difference at the end of the answer. Okay, yes. For material cost variance, this is how we are going to calculate using the table. I made 4 columns, column 1, 2, 3, 4. Assume there are 2 raw materials. If you have 3, then you will add 1 more row, material A, B, C, D, so on. In first column, in column 1, I will fill SQ, column 2 RSQ, column 3 AQ and column 4 AQ. What is SQ? Standard quantity to be consumed. When I say standard quantity, this is the quantity I was supposed to consume. Standard means what I was supposed to, correct? What is the standard set? And what is actual quantity? What I actually consumed. What I actually consumed. What is RSQ? RSQ is revised standard quantity. This revised standard quantity will come into picture only if you have 2 or more raw materials. I repeat, revised standard quantity will come into picture only if you have 2 or more than 2 raw materials. It means if in the question we have single raw material, then this column 2 will be removed from your table. It will be column 1, column 3 and column 4. Right? How to calculate RSQ? Let me take an example. We were supposed to complete a production. Using 10 kg of A and 20 kg of B. Standard quantity. 10 kg of A and 20 kg of B. But we have actually consumed 15 kg of A, and say 35 kg of B. 35 kg of B. So totally how much did we consume? 50 kgs. Now first of all, we have consumed more total because I should have completed the work with just 30 kgs. But look what happened. I have consumed 50 kgs. 50. First of all, I have consumed more. That means yield variance will be adverse because I have consumed more. But okay, you consumed 50. Did you at least consume it in right proportion? What do you mean by right proportion? Material A 10 kg, material B 20 kg. That means the right proportion is 1:2. 1:2. Did you at least consume total 50 kg in the correct ratio? If you distribute it in the ratio of 1:2, you will get 16 and 33 or 34 approximately. This 16 and 34 is called as RSQ, revised standard quantity. Now you may be thinking, what is the use of this? Please understand. Suppose I have 2 raw materials. Okay. One, let me mark it as a costly raw material. Give me a minute. Yes. Suppose I have 2 raw materials. One is a very costly raw material. And another is a very cheap raw material. Costly, CS, cheap, CH. And this was 10 kg and this was 20 kg. Costly material, say 100 rupee, and cheap material, say only 30 rupee. This is how I should have mixed these two. 10 and 20. 10 will be at 100 rupee, 20 will be at 30 rupee. That means totally I should take only 30 kg to complete this work. Correct. But in reality what happened? I actually consumed 40 kg. Now what will be your first question the moment you get to know that I have consumed 40 kg? You want to know what is the proportion. Suppose if I say, don't worry, costly material I took 10 kg only, but cheaper material I took 10 kg extra, then you will blame me for taking 10 kg more for sure. But you will not blame me so much because the extra 10 kg that I have consumed is a cheaper material. 20 kg I should have consumed, but I have consumed 30 kg. That extra 10 kg which I have consumed is a cheaper material. You will scold me for taking more, but you will not scold me a lot because the extra kg which I consumed was cheaper material. Instead of this, imagine if the actual was something like this. I said I took 40 kg, but if I say I took 20 kg of costly material and 20 kg of cheap material, now you will scold me for 2 reasons. Reason number 1, in total I consumed extra. Reason number 2, I took extra of costly material, 100 rupee this is, and I am consuming extra. Correct? Now, which means, please understand, the 40 kg in total at least should have been mixed in the correct ratio. What is the correct ratio? 1:2 ratio here, 10:20, that means 1:2 ratio. This is 13 and this is 26 or 27. Now 30 versus 40 is yield variance. Whether we have mixed it in correct ratio or not is mixed variance. Now you understood why I said RSQ will not come. RSQ will not come for a single raw material, because for a single raw material there is no ratio, correct? There is no distribution like this. Therefore, RSQ will be necessary only if you have multiple raw materials, right? And here also AQ the same number, AQ and AQ. Last column I am multiplying by rate, AR, actual rate. All other columns I am multiplying by standard rate. There is something for you to observe. Leave the numbers. Once I start problems, you will get to know how to work out. Let us understand the table first. In all the three columns here, rate is same, correct? That means any difference that I'll get between 1 and 2, 2 and 3, 1 and 3 should be purely because of quantity. I repeat, column 1, column 2 and column 3 rate remains same. That means if there is any difference that is going to come when I do 1 minus 2, column 1 minus column 2, or column 2 minus column 3, or column 1 minus column 3, anything that I do will be only and only because of quantity, correct? But observe here, my column number 3 and column number 4 is AQ and AQ constant, and rate is changing. That means any variance that I get between column 3 and column 4 will be due to rate or price, correct? Now what I should do, see my next computation, I am doing 1 minus 2, that means column 1 minus column 2, whatever I get will be material yield variance. If it is positive, then favorable. If it is negative, then adverse. 2 minus 3, that is this minus this, will be mix variance. And when you add these two, suppose this is 10 adverse and this is 5 adverse, when you add both you get 15 adverse. This subtotal is called material usage variance or volume variance or quantity variance. Now, sir, what if there is single raw material in the question? Then what to do? This mix variance won't be there when you have single raw material. Apply common sense. For single raw material, how can there be a mix variance? You can mix only if you have 2 or more than 2 raw materials. Then yield variance itself will be your usage variance or volume or quantity variance. Okay. Next, 3 minus 4. You observe 3 and 4 when I compare, quantities are remaining same. Only rate is getting changed. That means anything that I get between 3 and 4 has to be price variance, price or rate variance, one and the same. Then when I do the grand total, that is, this is 15 adverse, say this is another 3 adverse, then the grand total will be 18 adverse. Clear? How to remember the table? Column 1, 2, 3, 4. 4 columns I have. SQ, RSQ, AQ and AQ. Last column is multiplied by AP or AR. All other columns are multiplied by SR, standard rate. I quickly repeat. I want you guys also to repeat with me. SQ, RSQ, AQ, AQ. You are in last column. Multiply that with AR. All other columns are SR. Now some of you may be thinking, sir, we can remember it as SQ into SR, RSQ into SR also. No. Why are you saying this way? There is a reason why I am saying this way. Later when I do labor variance, the table will remain almost same. Quantity will become time. That time SQ will be SH, RSQ will be RSH, AQ will be AH, last column AQ will be AH. So it will be easy for you to memorize in that way. Okay. Yes. One last time. Let's repeat this. So table will have 4 columns: SQ, RSQ, AQ and AQ. Standard quantity, revised standard quantity, actual quantity, actual quantity. Last column is actual rate, AR. Other columns are SR, that is standard rate. Clear? SQ, RSQ, AQ, AQ. Last column is AR. Other columns are SR. 1 minus 2. Yield variance, 2 minus 3 mix variance, that subtotal usage variance, 3 minus 4 price or rate variance, grand total cost variance. That's all. That's all. Now sir, what is the meaning of SQ? Tell me. SQ is standard quantity, that is long form, that I also know. What is the meaning of SQ? Standard quantity. See the note given to you. SQ is standard quantity for actual production. What do you mean by this? It's not confusing. Please understand. Standard quantity for actual production. If they say to make 1 unit, we need 3 kg and during the month we made 30 units, then your SQ will be 30 into 3, 90 kgs. Basically, standard quantity SQ is for actual production 30. Getting it? Standard quantity is for actual production. Next, RSQ. What is RSQ? I told you already. Total of AQ distributed in standard ratio, that is SQ ratio. Clear? AQ total in SQ ratio. What if you have single raw material? See here, single raw material problem, no mixed variance. So remove column 2. When you remove column 2, you will have column 1, 3 and 4. This 2 won't be there here. It will directly be 1 minus 3. That is yield variance. That itself will be usage variance. No question of mixed variance. Are you following? When I work out the problems, you will get to know this better. I'm just explaining the formula now. Note, last note is, if AQC is different from AQP, then column 3 will be altered as 3.1 and 3.2. So what is this? AQC means actual quantity consumption. Actual quantity consumption. AQP means actual quantity purchase. Sir, can there be difference between these two? Obviously. If you have stock, opening stock and closing stock, tell me, actual quantity consumption, actual quantity purchase can be different? Correct. Now why is it relevant? Please understand, yield, mix and usage variance happens at the time of consumption. Yield, mix, usage happens at the time of consumption. Correct? But price variance happens at the time of purchase. At the time of purchase, this is about rate. At what rate you are supposed to buy from supplier versus at what rate you are actually buying. That is rate variance. Correct. Therefore, in exam, purchase quantity and consumption quantity is different, then understand. When I say SQ, it is standard quantity to be consumed. Revised standard quantity to be consumed. This is also consumption, this is also consumption. As of now, this is my table. As of now, this is my table. But if they say that look, what we consumed is different, what we purchased is different, then this column 3 will be bifurcated into 3.1 and 3.2. How will it look? See here. See this? Just give me a second. Column 1, column 2, column 3.1, 3.2 and column 4. Okay, this is SQ, RSQ, AQ, but this will be AQP, actual quantity purchase. Last column is also actual quantity purchase. Remember, everything else will remain same, just that the column 3 will get further bifurcated into 3.1 and 3.2. That's all. That's all you need to remember extra. Okay. Now what will happen, sir, by doing this? You observe. This is SQ, standard quantity to be consumed. Revised standard quantity also to be consumed. This will be actual quantity consumed, but this will be actual quantity purchased. Last column is AR. That you register in your mind. All other columns will be correct. Standard rates. Now look what will happen. Please observe. You will put all the numbers. You will put all the numbers and then you will start doing column 1, or rather let me highlight here. Column 1 minus column 2 will be material yield variance. Okay. Column 2 minus column 3.1 will be material mix variance. Then you will do the subtotal. But for price, you will not take 3.1. You will rather take 3.2, 3.2 minus 4. Why are you doing 3.2 minus 4? Look at this. Here AQP and AQP are same. That means purchase is kept constant. What you are comparing is only rate versus rate. When you want to know the variance caused by rate, you need to keep the quantity same. If you do 3.1 minus 4, look at this. This is consumption, this is purchase. There is already a difference. And then this is rate, this is also another rate. So you have two different rates and two different quantities. You can't work out the variance. Therefore, what you have to do, if in case, when I do the problem, you will get to know, don't worry, just have patience. If in case in the question, AQC and AQP are different, then your column 3 will become 3.1, 3.2. I will show all these workings when I discuss problems in detail. As of now, just try to understand my explanation. Sir, what if nothing is given? Then simple, column 3 only, consumption is equal to purchase. That's all. Got it? Let's see. What will happen when I prepare labor variance table? You must observe whatever is SQ is written as SH. Standard quantity will be standard hours. Revised standard quantity, revised standard hours. Actual quantity, actual hours worked. Actual hours paid is the extra thing. There you must observe in my material table, I had three variances. Which three? Yield variance, mix variance, rate variance. Leave the subtotal and grand total. Main variances are only three: yield, mix and price. For three variance, my table had 4 columns. But now in labor, I will have yield variance, correct? Gang variance, this is just like mix variance, but we don't say labor mix variance. We could have actually said labor team variance or labor group variance, but I don't know, for some reason Institute uses the word gang variance. Gang is basically group of people. We can also call it as team variance, but that's okay. Institute is using the word gang. Let us also use the word gang. There also in material, what I did, yield plus mix was usage. Here yield plus mix means gang. Yield plus gang is efficiency. But here I have one more thing. What is one more thing? Idle time. What is idle time? That is column 3 minus column 4. Look at this. Actual hours worked, actual hours paid. Rates are same. I am marking in blue. Rates are same. Standard rate, standard rate. So leave this part. Anyway, that is same number. That will not cause any difference when you do 3 minus 4. What will cause the difference then? This is actual hours worked. This is actual hours paid. I am paying you salary for 10 hours, but you are working for only 8 hours. Now the difference between time for which salary is paid and time for which you are working is to be considered as idle time. Correct. This is 3 minus 4 idle time. Now 4 minus 5, as you know, last will always be rate variance. Correct. Observe what is happening in 4 and 5. AHP, actual hours paid. AHP, this is remaining same. But here, this is standard rate, this is actual rate. That means any difference is caused only because of rate, that is labor rate variance. Then grand total, labor cost variance. How to remember the table? SH, RSH, AHW, AHP, AHP. Last column is multiplied by AR. Everything else is multiplied by SR. Did you understand why I want you to remember it in this way? Right? I will not scroll up. Can you repeat with me what was material table? SQ, RSQ, AQ, AQ. Last column was AR. Other columns were SR. What is happening with labor now? SH, same thing. You keep material table in mind and then rework this. SQ will become SH. RSQ will become RSH. AQ will become AH. But AH will be two types. AHW and then AHP. Last column also AHP. There in material, last column is multiplied by actual rate. Here also actual rate. There in material, everything else was multiplied by standard rate. Here also everything is by standard rate. Simple. I quickly repeat the labor table once again. SH, RSH, AHW, AHP, AHP. Last column is multiplied by AR. Rest everything is multiplied by SR. 1 minus 2. There also yield. There means material. Yeah. There also yield. Here also yield. 2 minus 3. There it was mix. Here I don't use the word mix. It is gang. Then I did a subtotal there. That was material usage. Here it is labor efficiency. Then there we directly write rate variance. But here we'll have to do one more thing in between. That is idle time variance and then rate variance and then the grand total. 1 minus 2, 2 minus 3, subtotal, 3 minus 4, 4 minus 5, grand total. Got it? Now, see here again similar explanation. There SQ, standard hours, there it was SQ, here it is SH. There I said standard quantity is the quantity required for actual production. Here also 1 unit requires 4 hours and we produced 100 units. How many hours we should have taken? Correct, 400 hours. 400 hours. That will be SH. Correct. RSH, how did we calculate RSQ there? AQ total in SQ ratio. Here it will be AHW total in SH ratio. Simple. Then single labor problem, no gang variance, so remove column 2. There I said single raw material, no mix variance, remove column 2. Here I am saying single labor problem, no gang variance, remove column 2. Right? Note 4. If actual hours worked and actual hours paid, AHW and AHP are same, then there will be no idle time variance. Why? Idle time variance is 3 minus 4. You see here, what is there in 3 minus 4? AHW is getting compared with AHP. Rate is anyway same. And if AHW and AHP are same, then 3 minus 4 will be 0. 3 minus 4 will be 0. And what do we write here? See the note. If AHW and AHP are same, then there will be no idle time. Sir, shall we then remove the column? No, please don't remove the column. Let the answer be shown as nil. Because too many columns, if you keep removing, you will get confused. That's why I want you to register this column in mind and write the same number. Getting it? Yes. Can we quickly repeat the labor table? SH, RSH, AHW. If you want me to scroll up. Yeah. Here it is. Yes. Let us repeat from column 1. SH, RSH, AHW, AHP, AHP. Last column always multiplied by actual rate. Other columns are multiplied by standard rate. 1 minus 2 yield variance. 2 minus 3 gang variance. Then comes subtotal. 3 minus 4 idle time variance. 4 minus 5 rate variance. Then comes grand total. Done? Yes. Material is done. Labor is done. What next? Overhead. But overheads are to be separately learned, variable and fixed. This is very simple. Overheads are estimated on the basis of time. You first read note. Overheads are estimated on the basis of time. That's what we studied in overhead chapter. Correct. We call it as hourly rate. Therefore, the table is prepared based on time. That means when I say SH, it is the same SH that you take in labor. Same SH that you take in labor table. AHW, same AHW taken labor table. Same AHW that you take in labor table. Here also same thing. But rate will be different. Why? Here it is actual rate of variable overhead. There it was actual rate per labor hour. Are you following? See this. If hours is not available in the question, then table can be worked out on the basis of days. Then it will not be standard hours, it will be standard days, actual days actual days. In that case, it will be actual rate per day. As of now, it is actual hours. As of now, my basis is hours. That means rate is also per hour. What if the base is days? Then rate will be per day. What if it is units? Then it will be per unit. This is the very simple table. Only 3 columns. One, SH. Second, AHW. Third also, AHW. Last column, as you all know, is always multiplied by actual rate. Other columns are standard rate. Sir, here we don't have gang or mix. No. 2 raw materials you can mix. 2 labor you can ask them to work in a team. But 2 overheads will not be incurred together. Therefore, for every overhead, you will have to do separate table if they ask you to do in exam. Correct? There is nothing called as overhead mix variance or overhead gang variance. No, we don't have anything like that. Clear? Yes. Easy. SH, AHW, AHW. Last column is AR. Other 2 columns are SR. So now you can only do 1 minus 2 and then 2 minus 3. There can't be subtotal also. See here, 1 minus 2 is efficiency, 2 minus 3 is expenditure. Sir, why is it called efficiency? Observe, I am marking in blue. Between column 1 and column 2, you observe here, rate is remaining same. That means 1 minus 2, whatever you get is not because of rate. Then it is because of difference between SH and AH. Correct? SH is number of hours you should have taken. Suppose say 90 hours you should have taken to complete some work. But actually you took 93 hours. And suppose rate is 1. So into 1, this will be 90, this is 93. Now we will get a negative number, 3 adverse. Now why is it adverse? You should have taken 90 hours, that is standard, but you actually took 93 hours. You took 3 hours extra. That means you are inefficient, you are slow, you don't know how to do the work. That is why I am using the word efficiency variance, and that is adverse. Are you following? Now why is this called as expenditure? Observe again. What is there in column 2 and column 3? Please focus. In column 2 and column 3, time remains same, 93 hours. But the standard rate was 1 per hour, but actually we have spent 1.5 rupee per hour. Now, whatever difference you get, you're going to get a negative number because column 3 will be more than column 2. Is it because of time or is it because of rate? Only because of rate. If there is a variance and that is because of rate, then should it not be called as expenditure? Correct? That's all. So 1 minus 2 efficiency, 2 minus 3 expenditure. Do the grand total directly. Done. Okay. Before I go to fixed overhead, I want to quickly revise all 3 variances that we have discussed already. Okay. Repeat with me. Material SQ, RSQ, AQ, AQ. Last column is AR. Other columns are SR. 1 minus 2 yield variance, 2 minus 3 mix variance, subtotal, and then 3 minus 4 price variance or rate variance, and then grand total. Then in labor, SH, RSH, AHW, AHP, AHP. Last column always multiplied by actual rate, other columns standard rate. 1 minus 2 yield variance, 2 minus 3 gang variance, then comes subtotal. 3 minus 4 idle time, 4 minus 5 rate variance, and then grand total. Then comes the variable overhead, only 3 columns, SH, AHW, AHW. Last column again is multiplied by AR, other 2 columns are standard rate, multiplied by standard rate. 1 minus 2 efficiency, 2 minus 3 expenditure. That's all. Last thing is fixed overhead. Now fixed overhead variance will be little different from other variances. Why? Because other 3 items are variable in nature. Material cost, labor cost, variable overhead. These are all variable in nature. Whenever we produce, we spend. Whenever activity is more, we spend more. Whenever activity is less, we spend less. Correct? It is directly connected to the activity. But what we need to discuss now is fixed overhead, and this has got nothing to do with units that you produce, correct? Like rent, following depreciation, fixed salary, some employee salary has to be paid, right? How do you estimate or calculate the variances? See the table. First, let us understand the table. When I solve the problem, I will explain the concept to you again. Don't worry. Don't try to understand the entire logic of table now only. I'm still discussing the formulas. We will discuss enough problems. Yeah. 5 columns you will have: BH, RBH, AH, SH, AH. Again, last column is AR. Everything else is multiplied by BR, or you can write it as SR also. So see this, note 2. I'm marking note here. Budgeted rate can be written as standard rate also, nothing wrong. But as it is a fixed overhead, these are budgeted well in advance like rent. So it is preferred to take BR, budgeted rate. It's the same thing. You can write BR or SR, nothing wrong. And then overhead name. Now you will get the numbers here. By the way, what is BH? Budgeted hours. RBH, revised budgeted hours. AH, actual hours. SH, standard hours. AH, actual hours. Last column AR, everything else is by BR. The logic, the concept, why am I multiplying, why am I doing 1 minus 2 or 2 minus 1, you will get to know once we solve the problems. Okay, this is a summary sheet for you. One day before exam, instead of mugging up 25 formulas, it is easy for you if you can go through these 4 tables. Okay, yeah. Now 2 minus 1, 3 minus 2, 4 minus 3. You observe it is in reverse order. Reverse order. It is not 1 minus 2, 2 minus 3, 3 minus 4 like what we did for other 3. It's reverse. 2 minus 1, 3 minus 2, 4 minus 3. Why is it reversal? But again then you see 1 minus 5 is in correct order this way. But these 3 are coming back in reverse order. Why so? Please understand. Once I sign a rent agreement, I have to pay the amount that is agreed. Correct? Suppose if monthly rent is 10,000 rupee to my factory, I have to pay 10,000 rupee whether I make 100 units, 1000 units, 1 lakh units or 0 units. That means 10,000 is agreed, 10,000 has to be paid, no question about it. Now the only thing that I should focus is how well I can get this 10,000 back. Sir, what do you mean by getting this 10,000 back? I am paying 10,000 rupee to landlord as rent, the owner of the building. If I work for all 31 days, then I can say my paisa vasool, correct? Yes or no? We say paisa vasool. It's not about how much I am paying. I know I am paying 10,000 rupee. But if I run my factory for all 31 days, I feel okay, this month I can say I fully used my building. This month I can say I did a paisa vasool of my rent, correct? That is called calendar variance, number of days. Then, all 31 days you used your factory, you should also use it for maximum time possible. Suppose if you use all 24 hours, now think of this, all 31 days you are keeping your factory open and you are using it for 24 hours every day. Don't you think it's a double paisa vasool now? Why? 31 days also, 24 hours also. Full capacity of that building you have used. Fantastic. That is called capacity variance. Then those employees who came and worked for 31 days for 24 hours. Understand, 24 hours should not be understood as an employee will work for 24 hours. Maybe 3 shifts of 8 hours each. Right? But as a factory building, you are using it for 24 hours. Yeah. Then comes efficiency variance. All those employees who came for all 31 days, all 24 hours, they worked above 100% efficiency. They were very fast. They produced more than what was planned. That means now triple paisa vasool. Tell me why? All days you run the factory, all hours you run the factory, and everybody is working at a high efficiency. Don't you think you really feel the amount that you are paid is worth. Correct? Now please observe, why is it in reverse order? Now when I say more number of days, more number of hours, higher efficiency, I am not talking about what I am paying. I know what I am paying, 10,000 rupee, but I am talking more about what I am recovering, what I am getting back. You know, when I pay 200 rupee for a movie ticket, and when I come out and if I say really good movie, it's worth watching. When I use the word worth, I am not talking about 200 that I have paid. I am talking about the benefit that I got by paying 200 rupee. Correct? I enjoyed the movie like anything. It was worth 200. That means it's not about 200. It's the enjoyment that I got. Same, observe here, 200 rupee was the rent in my example. 200 rupee was the rent. All 31 days, good. All 24 hours, fantastic. Very good efficiency. That means this month you can say entire rent money that you have paid, you have taken that back. How? By using it for all 31 days, by running the factory for entire 24 hours, and by working at a very high efficiency. When payment is in this direction, 1 minus 2, 2 minus 3, 3 minus 4, what I discussed so far, recovery should be opposite. Therefore 2 minus 1, 3 minus 2, 4 minus 3. And then the subtotal volume variance. Then only thing is about spending, expenditure, that is 1 minus 5, and then grand total. When I solve problems, I will be using all these tables. Don't worry, that time also you will get to know the concept once again. What is BH? BH is budgeted hours, and that is for budgeted production. Then what is SH? SH is standard hours for actual production. Sir, what is the difference between BH and SH? Please observe. If you say, sir, tomorrow I am planning to study for 10 hours and I will complete 10 chapters. Fantastic. I said, okay, very good. Please do that. I met you 2-3 days later and then you said, sir, you know what? I could complete only 9 chapters, but I took 11 hours. Then I said, look, when you said 10 hours for 10 chapter, for 9 hours, you should have taken only 9 hours. Correct? Now please connect this to your subject. What was 10 hours? Budgeted hours. What was 10 chapters? Budgeted production. Correct? Yeah. What is 9 chapters? Actual production. And what is 11 hours? Actual hours that you took. And what was this 9 that I was talking about? That is what you should have taken. That means it is standard hours. I hope you are making a note of this example. 10 hours was budgeted for 10 chapters and you did 9 chapters using 11 hours. But then I asked 9 chapters you should complete in 9 hours only. That means 9 hours is standard hours for actual production, whereas 10 hours is budgeted hours for budgeted production, whereas 11 hours is actual hours for actual production. I hope it is clear now what is BH, what is AH and what is SH. I quickly repeat. BH is for budgeted production, SH is for actual production. AH is obviously for actual production, that we all know. Okay, if you want, just quickly make a note of the example that is there on the screen right now. Okay, next, RBH, revised budgeted hours, is equal to budgeted hours by budgeted days into actual days. How to use it? Once I discuss problems, you will get to know. Note, overheads are estimated on the basis of time. This is the same note that I told you there also for variable overhead. Yeah. Therefore, the table is prepared based on time. If hours are not available in the question, then table can be worked out using day. If that is also not possible, then do it using unit basis. Alright. I think with this we completed discussion on all the formulas and tables. Now let us work out some problems. Before I discuss problems and solutions, I want all of you to keep a notebook and pen and calculator ready, because standard costing, as you know, there are two ways of solving it. One, the formula approach, correct? And other one, the table approach, which I explained it to you in last 40-45 minutes. What I have done in my book here, I have given solutions as given by ICAI, okay? And that is all based on the formulas. See here, actual quantity into standard price minus actual price. I think this is the formula that some of you already know. What I will be doing, why I asked you to keep pen and book ready, is I will be showing the answers in the table format, in the format in which I discussed so far, okay? And I want you to copy that answer along with my explanation, okay? And at the end, you will get to know the answer that you get using table, and the answer that is there as per the formula is same. You will get to know, not to worry, okay? And after that, I will still give you the independence to decide whether you want to go by table approach or you want to go by formula approach, okay? Yes. Let us see. Question number 1. JVG Limited produces a product and operates a standard costing system. The information related with the product is as follows. Particulars: direct material, direct labor, cost is given. Per unit you need 30 kg, standard rate is 350 rupee, 5 hours and 80. When I read the question, I should understand one thing here, that this is a problem with single raw material. When there is single raw material, there will be no mix variance. If there is no mix variance, then I don't need RSQ column, correct? Same way labor also, there is only one type of labor. You don't have skilled, unskilled, semi-skilled, or men, women. You don't have team A, team B, etc. That means you will not have RSH also. Clear? Next. What information is provided to me? The budgeted and actual production is 1000 units. Alright. Direct material data, direct labor data is given. Material data: 5000 kg raw material you had at the beginning of the month, opening stock. Closing stock is 10,000 kg. Purchases are made at 365 rupee per kg. This will be your actual rate. Actual utilization means consumption of material is 7200 kg more than budgeted quantity. This will be your AQ. But I want you to observe something here. Actual quantity consumption is 7200 kg more than budgeted quantity. And how to find out budgeted quantity? They have said 1000 units. 1000 units of FG, correct? And here they are talking about kg. And 1 unit requires 30 kg, correct? Which means to produce 1000 units, you should have consumed 1000 into 30, 30,000 kg. Now that becomes your SQ. Now some of you might think, sir, standard quantity is the quantity for actual production, but this 1000 is budgeted production. No, see this. The budgeted and actual production is 1000. Correct? That means 1000 units into 30 will give me SQ. I should have consumed 30,000 kgs. Correct? But how much did I actually consume? See here, I am circling in blue now. Please observe. Actual utilization is 7200 more than budget. Budget and actual is same in this question. They have said clearly. So if 30,000 is standard quantity, actual quantity will be 30,000 plus 7,200, 37,200. That is your consumption. Actual quantity consumption. And then I said, in every question you have to check whether actual quantity consumption and actual quantity purchase, are they same? This is something you need to check. How to check? See here, 5000 kg opening stock, 10,000 kg closing stock, 37,200 kg consumption. That means purchase and consumption will not be same. When purchase and consumption is not same, what should I do? I'll just scroll up. I explained it to you. see this here. If AQC is different from AQP, that is if actual quantity consumption is different from actual quantity purchase, then column 3 will be broken into two parts as 3.1 and 3.2. Clear? You will get to know once you start working out this answer. Okay, let me go back to the question. Yes, here we are. And then direct labor, time is given, cost amount is given. They want you to work out material price variance, usage variance. Only two variances are possible, right? Mixed variance is not possible because it's a single raw material question. Yield itself will be usage because there is no mix, correct? That means we can prepare a table. Labor, rate variance and efficiency variance they are asking. What else is possible? Gang variance, and gang is not possible because you have single type of labor, correct? Sir, idle time is possible. For idle time, they should provide in the question that there were 5 hours, 8 hours, 10 hours of abnormal idle time, machine breakdown, etc. And that data is not there. That means idle time variance will also be 0. Okay, let us start. Are you ready with notebook and pen to write? Yes. What is the first thing we are going to do? Direct material price and usage variance. So all of you write the heading. Write the heading material cost variance table. You have the table here. Yes, material cost variance table. How many columns? Column 1. No column 2, there is no RSQ. Column 3.1, column 3.2. Why am I doing 3.1 and 3.2? Because observe here, actual quantity consumption and actual quantity purchase are different. Okay. Last column is actual quantity purchase, that anyway you know, because last column is used for price variance or rate variance, and rate or price variance will be computed based on what you have purchased, not what you have consumed, right? Then start filling. SQ, do it in this order. SQ, no RSQ, AQC, AQP. This is column 3 only, but segregated into 3.1 and 3.2. Last column is AQP, correct? Last column is multiplied by AR, actual rate. All other columns are multiplied by standard rate, SR. Okay, right. Let us begin filling it one by one. And by the way, if you are not very comfortable in writing as well as watching the video, then you can now just watch the video. This video will be there, okay, on the same YouTube channel. You can watch it later again and copy down your notes. I am fine with that. Yeah. Now, what are the things I need to fill? Let's begin from SQ, correct? That's the first thing I need. How to fill SQ? In the question, let me just erase all this so it will be much easy for us to pick the correct number. Tell me, how many units did we actually produce? 1000 units. I am marking 1000 units, correct? And each unit requires 30 kg. That means if you do 1000 into 30, you will get to know how many kgs you should have consumed. So 1000 into 30 will be 30,000. That is your SQ, 30,000 kg. 1000 into 30, 30,000 kg. Then you need AQ. I will always do quantities first and rate later. I need actual quantity consumption. How to find out? Go back to the question. In question they clearly said actual utilization is 7,200 kg more than budget, and 30,000 is both budget and actual production, correct? Budgeted consumption will also be 1000 into 30. Standard also will be 1000 into 30. Yes. So that will be 30,000 plus now 7,200 more. So I will add that. It will be 37,200. 37,200. Clear? Next. Then I need AQP, actual quantity purchase. How to find out purchase? We know this formula, consumption is equal to opening RM plus purchase minus closing RM. We already know 37,200 is consumption, this number is available, correct? Opening stock and closing stock is also given in the question. You see here 5,000 kg opening, 10,000 kg closing. So fill it here, 5,000 kg opening, 10,000 kg closing, right? And then the missing figure will be purchase. When you do it, you will get 42,200. 42,200. Correct? Fill it here. Column 3.2. 42,200. Last column is also AQP. Fill the same number. These two will be same numbers. Alright? Yes. We are done with quantity columns. Now I need rate columns. Correct. Let me mark in blue. I need standard rate. Where is standard rate? In the question here they have mentioned clearly 350 rupee per kg. You are working out material cost variance. That means everything will be worked out per kg. Correct. So 350 rupee will go to column 1, column 3.1 and column 3.2 because everywhere it is standard rate and standard rate, same number. Done. Last column you need actual rate. Go back to the question. Actual rate is given as 365. I am marking in red, you see here. See this? Purchases during the month were made at 365. That means actual rate is right away given 365. You put it here. That's all. From here everything is calculator work. 30,000 into 350, this number. 37,200 into 350, this number. Here this number and this number. And what is our formula? 1 minus 2, but there is no 2 now. 1 minus 3. That itself is yield variance. 25,20,000 negative, which means adverse. That itself is subtotal. You don't have to show it. Yeah. Then 3 minus 4 will be material price variance, which is 633,000 negative. Column 3 total minus column 4. That is also adverse. Sir, you have not done the grand total. Not necessary. Why not necessary? In the question, see what they have asked. Calculate price and usage. That's all. In fact, even this subtotal, even this yield variance, if I don't show, it's okay because question is only usage and price. Correct? So how much is my answer? 25,20,000 and 6,33,000. What's the answer given here? Check. They have done all these workings and then they got price as 633,000 adverse and usage 25,20,000 adverse. Same answer? Correct. Let us continue. What is the next thing we should be doing? Labor rate variance and labor efficiency variance. Correct? For this, we will prepare labor cost variance table. Labor cost variance table. Okay. Again, you have single labor. Let me go back to the question. See here. Yes. I am erasing so that your focus will be on what I am talking about. Yeah. Now I need to work out labor. You see here there is only one type of labor. When you have one type of labor, you will not have gang variance. Correct? That means you don't need column 2. And there is no information about idle time. There is no information about idle time. That means even if you do column 3 and 4, it will be same number. I leave it to you. You can either write 3 and 4 numbers will be same, or you can even skip that. AHW, AHP will be same anyway, right? I am anyway writing it. You see my table. I have done SH, AHW, directly column 3. Yeah, AHP, AHP. Clear? Last column is AR. Everything else is multiplied by SR. Okay. What is the first thing I need? I need SH. I need SH. See here. Please focus on whatever I am marking. Answer is already there. I have produced 1000 units and each unit requires 5 hours. That means 1000 units into 5 will be 5000 hours. That is what I should have taken. Fill it as SH 5000 hours. Done. Then I need AHW, actual hours. They have given in adjustment C, direct labor 5300 hours utilized. So copy it here, 5300, 5300, 5300. AHW, AHP will be same because there is no information about abnormal idle time. Okay, right? Then you need rates. Standard rate you need. Where is standard rate? Here, clearly given 80 rupee per hour. See, when you are doing material, it is per kg. When you are doing labor, it should be per hour. Standard rate you can fill here, here and here. Correct? What is the last thing you need? Actual rate. How to get actual rate? Actually, in this question, you don't have to worry about actual rate. Why? See what I am circling in blue. Adjustment C, they are saying direct labor 5300 hours at a cost of 434,600. Amount is straight away given. If you still want to do 434,600 divided by 5300, you will get that rate per hour. Instead, what I would suggest, anyway this number actual payment is given to you. Why don't you just copy 434,600 here? Okay. Now if you really want to show the rate, you can divide it here. 434,000 divided by 5300, you will get 82 as the answer anyway. Clear? Even if you get 82, you are going to use only 434,600 in your calculator for next step. When they have already given, take that and then don't leave anything blank. 434,600 by 5300 will be 82. Clear? I think with this we filled all the columns. From here, as you know, calculator work. 1 minus 3 directly, subtotal, and then 3 minus 4, 4 minus 5. 24,000 adverse, that itself is efficiency, no idle time, rate variances 10600. Let's see what is their answer. Here, let me just go down. Yes, 24,000 adverse, 10,600 adverse. My answer is also same thing as you can see here. 24,000 adverse and 10,600. Though they have not asked, I have actually done extra. If you don't do also, I am fine. I am fine. Clear? So whether you do table or you go by formula, the final answers will match. Not to worry about final answer. Clear to you? Right. If any student is not able to copy, then I told you, watch the videos later again and copy the answers. Right. Next problem. This is purely on labor. You see at the end, they've asked everything. Labor cost, labor rate, efficiency, mix, idle time, 10 marks. That means each variance will give you 2 marks. Okay. Let's see. A gang of workers normally consist. When they say normally consist, this is your standard composition. Standard composition. You will have 30 skilled workers, 15 semi-skilled, let me call it as SS, semi-skilled, and 10 unskilled US. So 30 skilled, 15 semi-skilled, 10 unskilled workers, S, SS and US. They are paid at a standard rate. Okay, standard rate is directly given per hour. Good for our table. In a normal working week of 40 hours, they are expected to produce 2000 units. What do you mean by normal working week? Please understand, I am marking in red now. If 40 S, 15 SS and 10 US, if they all work for 40 hours per head, then in total, they're saying gang, that means in total, they're supposed to or expected to produce 2000 units. Are you following? 30 plus 15 plus 10 workers, all of them per head, if they work for 40 hours, they're expected to produce 2000 units, right? During the week ending 31st March, the gang consisted 40 skilled, 10 semi-skilled and 5 unskilled. Now this is your actual workers, not actual hours, actual workers. This was supposed to be the composition 30, 15 and 10, but actual composition is 40, 10 and 5, right? Actual wages are also given to you. Look at this, 75, 60, 52 per hour respectively. Good. This will go to our last column. 4 hours were lost due to machine breakdown, that means abnormal idle time, and 1600 units they produced. Calculate the following variances showing clearly adverse or favorable, basically all labor variances, right? Yes. Let me explain the answer to you. Just give me a minute. Yes. Now this has some workings. I would suggest you focus on my explanation. You can copy later also. Listen to me. Visualize the table. What is the first thing that I need in my table? SH, standard hours. How to calculate standard hours? See this. If 30, I'll just zoom a bit more. Yeah, I think this is enough. Yes. If 30 skilled, 15 semi-skilled and 10 unskilled, if they work for 40 hours each, in total, they were expected to work for 2200 hours in a normal week. Correct? You can even do it as 30 plus 15 plus 10 into 40 in total. You will get same number. Correct? This 2200 hours is allocated or set as standard to produce 2000 units. Sir, how do you know this? See in the question what they said. I am marking in blue. They clearly said in a normal working week of 40 hours, the gang means this only, 30 plus 15 plus 10, they were expected to produce 2000. Correct. They were expected to produce 2000. So, how many hours they should have taken to produce 1600 units? Sir, why are you taking 1600? See this. At the end they said they have actually produced 1600 units. Why am I taking that? Please observe. 2200 hours were set as standard to produce 2000 units. Correct? But you've actually produced 1600 units. Then tell me how many hours you should have taken. Correct? Remember my explanation about the chapters. For 10 chapters, 10 hours. For 9 chapters, how many hours you should have taken? I explained it already to you. Correct. Now you see, you have to cross multiply. That cross multiplication I have shown here. 2200 by 2000 into 1600, you will get 1760. Sir, what is 1760? Standard hours in total for 1600 units. Yes sir, thank you, we got SH. No, this SH 1760 is not useful to you. Why? When you prepare table, you need to fill standard hours for skilled, semi-skilled, unskilled separately. Correct? You see the table format here in the bottom. You need to fill skilled, semi-skilled, unskilled SH numbers separately. But as of now you have got 1760. This is in total. Correct. What to do? This 1760, see I have explained here. This 1760 is total SH. Total standard hours. we need individual standard hours. What to do? Distribute this 1760 in the standard workers ratio, because 1760 is total SH and I need to break this into skilled, semi-skilled and unskilled. I have the standard workers ratio 30, 15, 10. When you do that, you get 960, 480 and 320. Where will this go? See here. I am marking in red now. This is where it is going. 960, 480, 320. Done. First column SH is done. What is the second column you need? RSH. See this. How to get RSH? RSH is AHW total in SH ratio. We know this. That means now I need AHW total. How to get AHW total? Let me go back to the question. Do I know how many actual workers came to the factory, by the way? Yes, sir, we know. Where is it? Sir, here. During the week, gang consisted 40, 10 and 5. Correct. Did they work for 40 hours? No, they did not work for 40 hours. Why? 4 hours were lost due to machine breakdown. That means all of them worked for only 36 hours. 40 minus 4. Correct. That means how to get actual hours worked now? 40 skilled, 10 semi-skilled, 5 unskilled workers in total multiplied by 36 hours. Or one more way, 40 into 36, 10 into 36, 5 into 36. Correct. Sir, 36 is AHW, actual hours work. But are we going to pay them for 36? No, you will still pay them for 40 hours only, because machine breakdown is the fault of the company. You have to pay salary to your worker. Actual hours worked will be based on 36, but actual hours paid will be based on 40 only. You have to pay them for 40 hours, but they work for only 36. Got it? Let's see. How is it done? 40 into 36, 10 into 36, 5 into 36. That will come to 1980. This will be AHW here. When you do 40 into 36, you get 1440. 10 into 36, 360. 5 into 36, 180. But I am talking about RSH now. How to get RSH? This 1980, you should distribute in SH ratio. Sir, where is SH ratio? Here, 96, 48, 32. Or 30, 15, 10, anything is fine. It is anyway ratio. You will ultimately get 1080, 540, 360. Fill it here. RSH is done. Correct? SH ready, RSH ready, AHW is ready. Then you need AHP and AHP. AHP should be easy for me. Sir, how is it easy? How many workers? 40 workers. And how many hours you are going to pay them for? 40 hours. You can't say 36, I told you. So 40 into 40, 1600. Sir, what about next? Here you have 10 into 40, 400. And this will be 5 into 40, 200. If you want to show this also as one working note, you can show. Why I did not show is, see what I am circling in blue. I have already shown this 40, 10 and 5 here. Instead of 36, it will be multiplied by 40. That's all. That is why I did not show. Hope it's fine. Right. Now I have AHP also with me, and this AHP will be filled here as well as here, both column 4 and column 5. Done? Yes. With this, I completed all time-based data: SH, RSH, AHW, AHP, AHP. What next? Sir, rate you have to fill. Correct. Rate should be very easy. Sir, why are you saying so? Go back to the question. They have given rate so neatly. Sir, where is it? 70 rupees, 65 rupees, 50 rupees standard rate. Correct. Actual rate 75 rupees, 60 rupees, 52 rupees. What more you want? correct? That means 70, 65, 50 will go to SR, column number 1, 2, 3, 4. Last column is AR, that will be 75, 60 and 52. Go here and see 70, 65, 50, 70, 65, 50, 70, 65, 50. Here also, whereas the actual rate is 75, 60, 52. If you fill this much, rest everything is calculator work. Multiply and add all of them. Multiply every row and add all of them. Then you know what to do. 1 minus 2, labor yield. 2 minus 3, gang variance. Then subtotal. And then idle time, rate and cost. Correct? Before we go and check the answer that is given there, they can ask you to present this variance for each type of worker. What do you mean by this? When I say I am marking in green now, when I say 14300 adverse, this is the yield variance for the entire company, correct? What if they say, tell us how much is yield variance of only skilled workers, then what to do? Please observe what I am marking in green now. Please observe. 960 into 70, column 1, minus 1080 into 70, column 2. Instead of taking total versus total, you will have to take individual versus individual. Got it? So in case in exam, if they say show the variances for skilled, unskilled, semi-skilled separately, then instead of doing total minus total, you write here itself. I'll just show you how to present the answer in that case. Instead of writing the total here, don't do this. Okay? You write skilled and then semi-skilled and then unskilled. Okay. Now skilled will be what? 960 into 70. Whatever you get, that number, minus 1080 into 70, that number, that difference you fill here. Correct, sir. What to do for unskilled? Same way. 480 into 65 minus 540 into 65, fill it here. Semi-skilled, sorry. Unskilled, again, as I told you, 320 into 50, 360 into 50, fill it here. And then if they want total also, then you fill the total here. Basically, which you have filled here, you shift here. Only if they ask you to show skilled, semi-skilled, unskilled separately. If the question is only about showing the totals, then what I have written here is more than enough. This is more than enough. Okay, right. Let us see the answers. Where is it? Here we are. Okay, one by one. Labor cost variance, they are saying 40,000 adverse. Is that correct? Yes. Let me just tick one by one. 40,000 adverse. Correct? Next. Second, they are saying rate variance will be 6400 adverse. Where is my answer? 6400 adverse. Correct? Yes. Here it is. 1 second. Yeah. Next. Third answer is efficiency variance 18800 adverse. Where is my answer? Efficiency 18800 adverse. Correct. Then mix variance or gang variance 4500 adverse. How much we got? 4500 adverse. And then idle time variance 14800 adverse. How much we have got? 14,800 adverse. I think that's all in their answer, but we have worked out one more. We have worked out one more, that is 14,300. Even yield we have done. In excess of what they asked, we have done. Okay? Yes. Clear to everyone? Let's continue. Question number 3. Yes. This is one question that is confusing to many students. I have received a lot of doubts when I said we will do this revision video batch, they said, sir, this is one problem we want you to do or discuss. So I thought I'll discuss this. This is only material and labor, but students are getting confused because of the normal loss or standard loss adjustment. Okay, let's see. ABC Limited had prepared following estimations for the month of April. Material A and B, skilled, unskilled, quantity given, rate given, labor hours given, rate given. This is actually not of great use to us. Anyway, normal loss was expected to be 10% of input and idle time is 5% expected. When they say normal loss is expected, idle time is expected, understand this is standard, normal, known well in advance. You cannot avoid it, you cannot reduce it. Are you following? It is not abnormal loss. It is part and parcel of the activity. I've been telling you this from cost sheet chapter. Normal loss should be adjusted as part of the cost. Abnormal loss only will be taken as loss in P&L account. That means when you set the standard, you have to keep 10% in mind, you have to keep 5% in mind, and then only set the standard. You have to keep 10% and 5% in mind and then only set the standard. Clear? Because it is normal loss expected. See, in previous problem there was 4 hours of machine breakdown. Is it expected loss? Is it expected waste of time? No. Correct? But when they say 5% is expected, that means it is known well in advance. This should be considered when you work out variances. Right? Next, you will get to know once I start the answer. So this is 10%, this is 5%. At the end of the month, the following information is collected. They actually produced, actual production is 1480 by consuming what? Material A and B kg given, rate given, skilled labor, unskilled labor, time given, rate given. Again, this may not be of use to us. What is that they want us to calculate? Almost everything. Material cost, price and mix and yield, all variances. Labor cost, efficiency and yield. Only thing they are not asking is idle time, because there is no idle time here. Sir, we have no, sir, 5%, and I told you that is normal idle time, and that is part and parcel of it, part and parcel of my standard. Only one thing that they could have asked and they did not ask is labor gang variance, because you have skilled and unskilled. That means they could have asked gang variance, but they did not ask. That's okay. Let's see how to work this out. Yeah. Let me just... Here we are. Answer to question number 3. Let us first focus on material cost variance. Whenever you need to prepare table, you need to first visualize my first column, second column, third column, and then decide working notes. What is my first column? SQ. What is my second column? RSQ. Do I need RSQ in this question? Do I have more than one material? Yes, I need. What is my third column? AQ. Is it 3.1 and 3.2? No, sir. Why not? Sir, in this question, there is no adjustment on, I'm sorry, there is no adjustment on actual quantity consumption, actual quantity purchase. Sir, that means it is only column 3, no 3.1 and 3.2. Okay. That means column 1, column 2, column 3, column 4. That's all. Yes. What is column 1? SQ, standard quantity. How to decide standard quantity? Let me go back to question for a minute. See here. We had set a standard to ourselves as I will use 800 kg of A and 600 kg of B, and I know in that 10% will go as loss. Correct? That means I can say it is 800 out of, don't say 1400. Why I should not say 1400? You shouldn't do 800 plus 600 and say 1400. In 1400 I already know 10% will go as a loss. That means it is 800 out of 1260. How did I get 1260? 1400 minus 10%. Correct? So 800 out of 1260, how much is for 1480? Are you following? 800 kg of X, sorry, A, 800 kg of A out of total 1260, then how much should be out of 1480? Because standard quantity is always for actual production. See here, 800 out of 1260, 800 out of 1260, how much is out of 1480? This is 1480 by the way, yeah. 940 kg. Same way for B, 600 out of 1260, denominator is same. How much is out of 1480? This is 705. Clear to you? Yes. This will go here, 940, 705. Now some of you might be thinking, sir, if I add 940 and 705, I will get 1645. Is that correct? Let me just check. 940 plus 705, I will get 1645, sir. But sir, we got only 1480, correct? Out of this, 10% has gone as loss. You do minus 10%, you will get 1480 only. Clear now? Yes. 1480.5, that's okay. The decimal rounding off difference. Okay, SQ done. Then I need RSQ. RSQ is easy. AQ total in SQ ratio. Where is AQ, sir? See here in the second table, they have given, I'm circling in red, 900 plus 650. If you add both, you will get AQ total. That you should distribute in SQ ratio. What is SQ ratio? Sir, 8:6. 800, 600 is 8:6. Correct. See here, 900 plus 650, 1550 kg to be distributed in SQ ratio 8:6. That will be 886, 664. This is your RSQ. Done. Then AQ. AQ is anyway given in the question. Copy from there. Over. Right, sir. Done. What next? Sir, rates. I need standard rate. Very easy. Sir, why so? See here. Standard rate is given in the question for both material and labor. As of now, let me concentrate only on the material part. 45 and 30. Sir, what about actual rate? 43 and 32.5. Straight away given. You don't have to worry at all. Copy this here. 45 and 30. I'm sorry. Yes. I'll mark in red. 45 and 30, 45 and 30, 45 and 30. Actual rate 43 and 32.5 given in the question. That's it. From here, calculator work. Do the total. And then 1 minus 2, 2 minus 3, subtotal, 3 minus 4, grand total. This you can anyway do. Correct? Let's check the answers. See the answers. They have also done using some tables. Anyway, yeah, here it is. This is ICI answer. I did not make any change. Cost variance is 3625. Is that correct? 3625 favorable. Okay. Price variance 175 favorable. 175 favorable. Okay. Mix variance 210 adverse. Is that 210 adverse? Right. 210 negative. So adverse. Then yield variance 3660 favorable. 3660 favorable. I have done one extra. The subtotal. All answers are correct? Okay, done. Let me go back to the question. They have asked one more thing. What is that? See here. I did material related workings. Next thing to do is labor related workings. Let's see how to do this. Okay. Let us first focus on the working notes. First of all, visualize the table. Do you have two varieties of labor? Yes, see here in the question. See here. Let me just erase all of this. So let's now focus only and only on labor. Okay. Yes, everybody. How many varieties of labor we have? Sir, skilled and unskilled, two variety. That means RSH is needed. Okay. See what I have done. SH, RSH, AHW, AHP. Though they have not asked, I have done AHW, AHP, AHP, which I told you if you want you can skip also. That means what is the first thing I need? Sir, you need SH. That is the first column, right? How to do? Sir, same way, sir. 1000 plus 800 will be your denominator. So numerator will be, sir, 1000 divided by 1800. Sir, no, it's not 1800. You showed us it should be 1800 minus 5%. Correct. So 1800 minus 5% will be 1710. Correct. Yes, but see the working. Computation of SH. How much is total standard output? 1260 kg. Sir, why is it 1260? That I have already told you. How did I get 1260? By doing these two numbers, no? 800 plus 600 minus 10%. So that is 1260 kg. And total standard labor hours is 1710. How did I get 1710? See this. Just now I showed you how I got 1000 plus 800 minus 5%. Correct. So this is 1710. Now, I need to first find out total standard hours. How to find out? See this. 1710 was set as the standard for 1260 kgs. 1710 was set as the standard for 1260 kgs. But actually you have produced 1480 kg. That means how many hours you should have taken? Cross multiplication. Are you following? 1710 hours for 1260 kg. Then how much you should have taken for 1480 kg? When you do that, you get 2009. But this 2009 is total standard hours. Because when I said 1710, I have added both, no? Correct? 2900 is total SH. How to get individual SH? Simple. You have the ratio. Skilled and unskilled. 1000 out of 1800. Then how much out of 2009? Correct? 800 out of 1800. How much is out of 2009? Or you can even do it as 2009 into 10 is to 8 now. So 10 by 18 you will get 1116. 10 is to 8 ratio. Same way, one more thing. 2009 into 8 by 18 you will get 892.88 in calculator, which I can write as 893. Done. You got SH. Let me circle in green. You got SH. What next you want? Sir, RSH. Okay, RSH you want. How to get RSH? Sir, AHW total in SH ratio. Do you have AHW total? Yes, sir. Given here 1200 plus 860. 1200 plus 860. That will give me AHW total. See here. 1200 plus 860. This should be distributed in standard ratio, which is 10 is to 8. Correct. That will give you 1144 and 916. Right? Fill it here. RSH done. Then AHW. AHW, as I told you, is already given in the question. 1200, 860. You don't have any abnormal idle time. So AHP will all be same. AHW, AHP, everything is same. Done? Yes, sir. What next? Sir, we need rates. Which rate you want? Sir, standard rate per hour and actual rate per hour. Okay, let's see. Do you have standard rate per hour? I'll circle in green. Yes sir, we have 37.5 rupee per hour and 22 rupee per hour. Okay, standard rate you have. Do you also have actual rate? Yes sir, 35.5 rupee per hour, 23 rupee per hour. Just copy paste. This will go to column 1, column 2, column 3, column 4 because this is SR. This will go to column 5 because this is AR. Okay, let's see. 37.5 I am marking in red. 37.5 and 22 here also, and here also. But last column is AR, which is 35.5 and 23. If this much of work is done, you know what will I say now? Balance is just calculator work. 1 minus 2, 2 minus 3, subtotal, 3 minus 4, 4 minus 5, grand total. And here you have all the answers for you. You can work out later, cross check later, understand now. Let's check with the answer. They have done so much of workings, and I know why many students have doubt in this answer, because this working note is so confusing. I'll tell you which is that. If you have also worked out this problem, then you'll understand what I'm saying. Some students have worked this out. This working note is what is complicated. Okay, 0.95 into 1000 by 0.9 into 1400. They don't know why it is multiplied. Most of the students. Anyway, I have clarified it now. You have understood. Okay. Let's see the answers. They're saying cost variance is 884. Is that correct? Yes, sir. 884 adverse. Then efficiency 2424 adverse. Is that matching? Yes, sir. 2424 adverse. Then sir, yield variance 1556 adverse. Is that correct? 1556 adverse. In addition to what they have asked, I have given them even gang variance. They did not ask, but we gave. Rate also they did not ask, we gave. Okay? Yes. In exam, once you complete all these tables and all these workings, I would suggest at the end of the answer, okay, you write all that they have asked in the same order in which they have asked. Sir, why so? Please observe. The order in which they have asked the question and the order in which we have answered it is little different. Sir, what are you saying? See this. They are asking us to present the final answer in this order. I am marking in green. First they want cost variance. But in my answer, first is yield variance. Then they want price variance. In my answer, it is mix variance. Are you following? So the way in which they have answered, they have asked, and the way in which we have answered is different. Therefore, the better way is at the end of the answer, you write all this once again and you write the answer, and then in bracket you can write, say, refer table 1, refer table 2, refer table 3. If they want the details, let them go and check. So at the end of the answer, please present the answer in the order in which they have asked. Clear? Yes. All our answers are matching. Okay. Now, we did 2 problems on material and labor, and all combined I did. I did not solve individual, only material, only labor. No, we are doing revision. Therefore, I directly took material and labor combined 2 problems, and that too 2 big problems, 2 tough problems to many students. I don't know why it is so tough. I hope they have understood it now. Therefore, overhead also, let us work out 2 problems. Okay? Yes. Let's see. Here is the question. A manufacturing concern has provided the following information related to fixed overhead. Question is about fixed overhead. Output days fixed overhead amount. Compute fixed overhead variance, expenditure variance, volume variance, efficiency variance. 5 marks. They want you to work out 4 variances. Question is purely on fixed overhead. Okay. Now, fixed overhead table that we have studied, it will start from BH, correct? Budgeted hours. But the problem is, You do not have any information about time. BH is not possible at all. There is no information about BH. What to do? Let me just take you back to the table that I discussed. Okay, just give me a minute. Where was it? Here. All of you, please observe this note. This overheads are estimated on the basis of time, that is hourly rate. Therefore, the table is based on time, that is hours. If number of hours are not available in the question, then the table can be worked out on number of day basis. If that is also not available, then you can do it on number of units basis. That means in what order you will check in exam. First check whether you have BH, budgeted hours. Not there. Check you have days. If that is also not there, then you can take units. Got it? Now, let me go back to the question. 1 second. In this question, I have the details provided in number of days. See this? Yeah, I am marking in blue. They have given budgeted days and actual days. That means I can work out the answer on the basis of days. Sir, that is okay. But column 1 is BH. Column 1 is BH. How to change that, sir? You need to change BH as BD. Budgeted hours will become budgeted days. Now your entire table, instead of doing it on hourly basis, you will do it on day basis. Let's see how it should be done. All of you see the table here. Budgeted days. I hope this is enough. Let me zoom it further. Yeah. 1 second. Right. Budgeted days. Now I don't have BH, therefore I started with budgeted days. BD. Now when I multiply with BR, tell me, is it budgeted rate per hour? No. When this is budgeted days, this is budgeted rate per day. Are you following? This is budgeted rate per day. Okay. Budgeted days, revised budgeted days, actual days, standard days and actual days. Everything is changed to days. Okay. Now how to fill these columns? And then rates, I told you all rates are per day now. Okay, let us start. First I need to know budgeted days. How to fill budgeted days? Go to the question. They have clearly given, I have already circled 25 days. Correct? 25 days here. Okay. Sir, how to do RBD? There was a formula for RBH. I will not again go back. You can see it later after the session. The formula for RBH was budgeted hours by budgeted days into actual days. But here the problem is you don't have budgeted hours at all. Correct? So there is no use of doing that. You just write RBD as 25 only. Sir, what is this RBD first of all? See, I said revised budgeted days. Think practically. We plan for the next month. Sitting now. Suppose I am in January, I plan for February. I am in February, I plan for March. Suppose I am in April, I budgeted for May that I will work for 25 days. I deducted Sundays and I said 25. Then suddenly there was a curfew for 1 day. Then what will happen? I will have to revise that month's budget for only 24 days. Now also you can't say no, even if there was curfew, we should have worked for 25 days. No, it was not possible. There was a curfew. Therefore, I had to revise my budget to 24 days. Such information will be given in the question. Sudden holiday declared. Government declares one day off, one day holiday. Then you will have to deduct that when you write RBD. Here you don't have anything. Therefore, BD and RBD can be same. Okay. Then you need actual days. AD you need. Do you have actual days in the question? Yes, I have circled already. 23 days. Copy here. Sir, can I copy this AD actual days in 5th column also, because that is also AD? Yes, please do it. Right. Last thing is SD, standard days. Sir, how did they get 24? See this. Observe what I am marking. Your plan was to work for 25 days and produce 5,000 units, correct? That means you need 25 days to produce 5,000 units. Budgeted days for budgeted production. But how much did you actually produce? Only 4,800 units. Then tell me how many days you should have taken. Again, remember my budgeted chapters, budgeted hours example. 25 days you said you will work and produce 5,000 units. But you actually produce only 4,800 units. How many days you should have taken? When you cross multiply, you will get 24 days. Done? Okay. You can show this as a working note, by the way. Okay, next. Sir, all days are done. Now I need rates. What rate it is? Is it budgeted rate per hour, or is it per day, or is it per unit? Sir, it is per day. How to find out per day? Again, go back to the question. Half of the data, if you understand the question, half of the answer is over. Data will be there in the question only. You have to correctly pick. You need budgeted rate. How to calculate? You budgeted 5 lakh rupee to be your fixed overhead. Correct. For how many days? 25 days. That means if you do 5 lakh rupee by 25 days, you will get to know how much was your budgeted rate per day. Are you following? 5 lakh was budgeted for 25 days. That means if you do 5 lakh by 25, you will get to know how much is the rate budgeted per day. 5 lakh by 25 will be 20,000 rupee per day. See in the answer, 20,000 budgeted rate. You please show it as working note. I have directly written the numbers here. 20,000, I'll circle in blue. 20,000, 20,000, 20,000, 20,000. Fantastic. Almost everything is done, sir. Perfect. Sir, I need last one column. What? AR. Actual rate I want. How to get the actual rate, sir? Actual rate can't be found out, but actual overhead amount is already given as 4,90,000 in the question. Correct? When actual amount is given, why don't you just copy? Because ultimately this is actual into actual. 4,90,000 is actual cost. Just copy that 4,90,000. Okay. Sir, then how did they fill this AR? Just divide now 4,90,000 rupee, which is actual amount. Divide that by 23 days. 21304. But this number is useless for me. Why am I saying so? Anyway, you are going to take 4,90,000 no when you calculate. Right. But because you have started the table, you can't leave it blank. Please fill that. Done. You know what I'll say now. From this, everything is calculator. Multiply all these numbers, and then 2 minus 1, calendar 0. Tell me, why is calendar variance 0? 25 days you thought, 25 days you did. Where is the question of calendar variance? Correct. Capacity, adverse, efficiency, volume, expenditure and cost. We have worked out everything. Okay. Now, I want you to understand the logic also. Don't just be happy with the answers. Please understand, why is it 0? Let's discuss why. Anyway, this is calendar variance. 25 days we planned, 25 days we worked. Therefore 0. Okay. Why is capacity coming to adverse? See whatever I am marking now. All of you, please focus on what I am marking. Numbers, tables, formulas is one side. You need to understand the logic also. Why is capacity variance adverse? This is 3 minus 2. That means I am comparing these two columns. Correct. Leave the rate. Rate is anyway same. You had revised your budgeted days as 25. That means you told me, when you met me, you told me that, sir, next month I will work for 25 days. But did you fully use your capacity and work for 25 days? No, sir. I was lazy. I worked for only 23 days. 2 days I did not go only. When you don't go, that means you are not fully utilizing your capacity. Sir, you are talking about my efficiency. No, please understand. Working more is capacity. Working fast is efficiency. I repeat, working for more number of days or less number of days will measure your capacity. If I say I can work for 8 hours, another guy says he can work for 9 hours, you are measuring our capacity. But if I say in 8 hours I can produce 100 units and this man takes 9 hours and produces only 55 units, I am more efficient than him. His capacity is more than me, but my efficiency is more than him. Are you following? Here, 25 days you said you will work, but only 23 days you work. That means you did not fully utilize your capacity. When you don't fully utilize your capacity, capacity variance will be adverse. Okay, sir. Efficiency is favorable. Why so? Why is efficiency favorable? Look at this. How much was the standard set, by the way? Sir, standard was 24 days. What is the meaning? That means you should have taken 24 days to produce 4,800 units. I repeat, you should have taken 24 days to produce 4,800 units. But how many days you took? Only 23. Very good. Where you should have taken 24 days, you took only 23 days. You are very fast. You are very efficient. When you are efficient, the efficiency variance has to be favorable. See this? Are you following? So your capacity is adverse, but your efficiency is favorable. This is what is the case with most of the students. They are lazy. Capacity is always adverse. Capacity variance is adverse. They can study for 10 hours, but they don't use their capacity. Only 6 hours they study. But whenever they study really well. Correct, sir. Efficiency favorable, sir. Perfect. Are you following? Then the expenditure is favorable. Why so? For this you don't need the answer. See the question. How much was your budgeted fixed overhead, by the way? Sir, that was 5 lakh rupee. Correct. How much you actually paid? 4,90,000. That means you saved 10,000, no? When you save money, is it favorable or adverse? Sir, favorable. See this 10,000 favorable is what you have here. Expenditure variance 10,000 favorable. There is a logic behind everything. Don't just mug up the table. There is a logic behind everything. Done? Yes. Any working note, if you think necessary, you can show additionally. I think with that we completed this problem also. And here are the answers based on their formula. 10,000 adverse, 10,000 favorable, 20,000 adverse, 20,000 favorable. You can check the answers later. I know all those answers are correct. Next. One last problem. Here we learn fixed and variable overhead including semi-variable cost adjustment. Okay, I did material labor combined 2 problems. Now overhead variable fixed combined 2 problems. This includes semi-variable overhead. Yes. In a manufacturing company, the standard units of production of the year were fixed at 1,20,000 units for the whole year, by the way. 1,20,000 units for the whole year. And expenditure is estimated as follows: fixed, variable and semi-variable. Remember, all of this is for the whole year. Good. Actual production during April was only 8,000 units, and don't get confused, this number is only for 1 month. This 1,20,000 is for the whole year. Yes, please don't compare this with this. This is for the year and this is for a month. Each month has 20 working days. That means this will be your budgeted days. Okay. But during the month, there was one extra public holiday. Now you understood what is revised budgeted days. Budgeted days is 20. Revised budgeted days will be 19. 20 minus 1. Actual overhead amounted to. Now these numbers are for a month. Remember, you can't compare these two straight away. First table is for the year. Next table is for the month. Sir, fixed okay, variable okay. What to do for semi-variable? They have given the adjustment. Semi-variable charges are considered to include 60% fixed, 40% variable. Good. That means whatever is the number, break this. 60% add it with fixed, 40% add it with variable. Okay. And what is that they want you to do? 10 marks question. Okay. Overhead cost variance. Look at the wording. They said overhead cost variance. They did not tell you which overhead. That means they want you to do total overhead cost variance. Sir, total overhead cost variance means how to do? You will first do one table for variable overhead cost variance, and then you will do one table for fixed overhead cost variance. Add both. Final answers of both you add, you get total. Okay. Sir, fixed overhead cost, variable overhead cost, that you will anyway do in the table. Fixed overhead volume, fixed overhead expenditure. Yes. Calendar variance. Sir, they are only saying calendar variance. Is it fixed overhead calendar or variable? No, you should not even ask that question. Why? Do you have a calendar variance in variable overhead? No. Calendar variance is there only in fixed overhead. That means you have to understand calendar variance as fixed overhead calendar variance. 10 marks is this question for. Okay, and see what they have done. All the formulas and then all of this, and the working note goes almost for a page. All these are working notes. See this, all of this, right? But we are doing with the table. Chalo, let us start. Where is the question? Okay. Let me just erase all this. See what I have done in my answer. First, I did variable overhead cost variance. How many columns you need? Sir, 3 columns we need. Which 3? Sir, it is standard, hours, actual hours and actual hours. Okay. But the problem is, even in this question, you don't have number of hours. You see here, there is no information about, I'm very sorry, 1 second. Yes, there is no information about number of hours. Only thing you have is number of days. Therefore, I had to change it to standard days, actual days, actual days. Okay, yes. How to get standard days? You see here, company's budget was to produce 1,20,000 units per annum, and they have a plan of working 20 days every month. That means if you do 20 days into 12 months, you will get 240 days. Correct? Now you see, if 240 days are required for 1,20,000 units, how many days are required for 8,000 units? Are you following? 240 days are required for 1,20,000 units. How many days are required for 8,000 units? Because standard hours is always for actual production. Same way, standard days will also be for actual production. Yes, see this. 240 days is needed for 1,20,000 units. How many days are needed for 8,000 units? That will be 16 days. That is going here, standard days. Clear? Next. Sir, I need actual days. I think actual days is available. Sir, where 20 working days, but this month had one holiday. That means 20 minus 1. That will be what? 19. This 19 is taken here. Actual days, actual days. Got it? Right. So now I need rates. Standard rate per day. How to do? See this. You have 6 lakh rupee variable cost, and out of 1,80,000, some amount is variable. See this, 60% fixed, 40% variable. That means out of 1,80,000, 40% is variable component. Right. See what I have done. 6 lakh rupee plus 40% of 1,80,000. And this is for the whole year. This is for the whole year. Whole year means how many days? We already know, sir, 240 days. Correct. See the answer. This is the amount for 240 days. If I divide, I will get to know how much it is per day. Are you following? 6 lakh pure variable. 1,80,000 into 40% is the variable component of total semi-variable cost. That is for the whole year. 1 year means 240 days. When you divide it by 240 days, you will get to know the overhead rate per day. And that comes to 2,800, which I have taken here and here. Getting it? Yes. What next? Sir, we need actual rate. You actually don't need actual rate. Why, sir? Actual amount is with you. Sir, where is it? 48,000 variable plus 40% of 19,200. Correct. Sir, should I divide it by 240? No. You are calculating per month. So 14,800 plus 40% of 19,200. That number will first go here. I have taken it as given 55680. How did I get this? Let me go back. 48,000 variable cost plus 19,200 into 40%. You add both, you will get 55,680. Now 55,680 by 19, you will get the actual rate. That's one useless number, but because we have prepared the table, let us fill it. Okay, right. And then from here the calculator work. 1 minus 2, 2 minus 3. See the answers. Efficiency, expenditure, adverse, and total is adverse. Now let us ask, why is efficiency variance adverse? Obviously it should be adverse. Why, sir? You should have taken, standard days means what you should have taken, 16 days. But how many days are you taking? 19 days. 3 days extra you took. Obviously efficiency will be adverse. Correct, sir. Sir, expenditure is also adverse. Why? Tell me, standard rate per day you are supposed to spend only 2,800 rupee per day. But actually you have spent 2,930 rupee. You have spent more. Every day you have spent 130 rupee more. Obviously this will be adverse. Done. Add both, you get total. Right, sir. Next. We also have to do fixed overhead part. Yes. Let us see how this is done. Let me just erase this. Let now our focus be fully on fixed overhead table. Yes, everybody focus here. Okay. What all you need? Sir, budgeted hours. But I already told you don't have budgeted hours. It has to be budgeted days. Correct? Then you need RBD. Revised budgeted days. Then actual days, standard days, actual days. Budgeted days 20. We already know. That was our plan. Revised budgeted days 19. Because 1 day extra holiday. Actual days also 19. Nothing is given. That means except that one holiday we have worked for 19 days. Okay. Then standard days 16. Sir, how did you get? This is coming from the previous working note. I have still shown it here. Working note 1. standard days is same as above. 240, 1,20,000, 88,000. This is already done. 16 days will be here. Last is actual days 19. That's also done here. Clear to you? Yes. All the days are done, sir. Okay. What else you need? Sir, rate. Which rate you need? Budgeted rate or standard rate. How to do? In the question, please focus. You have already budgeted. 12 lakh rupee plus 60% of 1,80,000 rupee together for how many days? 240 days. I repeat, 12 lakh rupee plus 60% of 1,80,000. That was for 240 days. So if you divide that by 240, you will get to know how much was it per day. See this, 12 lakh plus 60% of 1,80,000. This is for the whole year. Divide by 240 days. This is per day 5450. This is your standard rate or budgeted rate. See this, 5450, 5450. Here also 5450 and 5450. Okay. So last thing we need, sir, actual rate. Instead of that, can you get this number directly? Yes, sir, possible. How? Sir, if you go back to the question, okay, I am in the question. What should I do? Tell me. Sir, actual fixed overhead is already given, sir. Where? Sir, this number, 1,10,000. Is that the only thing? No, sir. For that you have to add what? Sir, in this 19,200, there is this 60%. Okay. So 1,10,000 plus 19,200 into 60%. If you add these two, sir, you will get the actual fixed overhead. I have done that and I got 121,520. 121,520. Now if you divide 121,520 by 19, you will get actual rate. I think every number in the table is done. From here, it is just calculator work. Clear to you? Now the logic behind this. Why calendar is adverse? Calendar is adverse for a very obvious reason. Why? What is the reason, sir? You said 20 days. But because of that one holiday, we lost one day. When we are losing days, obviously it should be adverse. Correct. Capacity is 0. Why? 19 days you said, 19 days you worked. Okay. Efficiency is also adverse. Why? Look at this. Let me erase this. Yeah. Why is efficiency adverse? Your standard days were 16. That means you should have taken only 16 days to complete the work. But you took 19 days. You are taking 3 days extra. When you take 3 days extra, efficiency variance has to be adverse. Correct. Now the subtotal, that is volume variance. And then expenditure is also adverse. Why expenditure is adverse? Obviously, see what you are doing for expenditure variance. All of you observe. You are doing 1 minus 5. What is 1? Budget into budget. BDBR. Budget into budget. What is column 5, by the way? What is column 5? Actual into actual. Correct. AD into AR. That means column 1 was budget into budget. Budgeted cost. Column 5 is actual into actual. Actual cost. Budgeted was 1,09,000. Actually, you have spent 1,21,520 extra. When you spend, what will happen to expenditure? Obviously, adverse. Clear? Yes. Then the total, which is 34,320. Right. But in the question, that asked me to do one more thing. What, sir? They said overhead cost variance, which means variable plus fixed. I should do both together and present the answer. Therefore, what I did, total overhead cost variance is equal to variable overhead cost variance. This is coming from previous table. Fixed overhead cost variance. Let me just scroll up. See this number. I am marking in red now. 10,880 adverse, and then 34,320 adverse. Take both the adverse numbers, you will get 45200 adverse. Is that matching with institute's answer? Yes, 45200 adverse. Fixed overhead cost variance 34320. Is that matching? Yes, 34320. Variable overhead 10880. Is that matching? Yes, here it is. This number 10880. Like this, you sit and check every variance, their answer and my answer will match, and they have done this much of working note. If you do the table, none of these workings would be necessary. None of these workings would be necessary because all of this will be taken care in the table itself. Sir, then also why did you print all of this? Just to tell you that the way I did and the way they did is different, but the final answer will remain same. You will also have some working notes now. See in my answer. See this. You also have some working notes. I am circling. Correct? So your working note and their working note may be different, but the final answer will match. I think with this we completed all the problems of standard costing as well. Okay, good. Before we wind up, let me quickly repeat all 4 tables. Please try with me. Material cost variance SQ, RSQ, AQ, AQ. Last column is AR, other columns are SR. 1 minus 2 material yield variance, 2 minus 3 mix variance, subtotal usage variance, or volume or quantity. 3 minus 4 price or rate variance. Last one is cost variance. In case actual quantity consumption, actual quantity purchase is different, then column 3 will be divided into 3.1 and 3.2. I have shown how to do it. Yes. Second, labor cost variance. SH, RSH, AHW, AHP, AHP. Again last column is AR, everything else is standard rate. 1 minus 2 labor yield variance, 2 minus 3 labor gang variance, then the subtotal, then 3 minus 4 idle time, 4 minus 5 rate variance, all put together total labor cost variance. This rate variance they also write as expenditure variance. Rate and expenditure is one and the same. Next one is variable overhead cost variance. That will be only 3 columns, SH, AHW, AHW. Last column AR, other 2 columns are SR. 1 minus 2 variable overhead efficiency variance, 2 minus 3 variable overhead expenditure variance, together variable overhead cost variance. Last one is fixed overhead variance, my favorite. BH, RBH, AH, SH, AH. Last column is AR, rest everything is standard rate or budgeted rate. Because fixed overhead variance is based on recovery, not spending, recovery, therefore it will be in reverse order. 2 minus 1 calendar, 3 minus 2 capacity, 4 minus 3 efficiency, subtotal is volume variance, then 1 minus 5 expenditure, grand total is fixed overhead cost variance. You can remember it easily. Calendar, capacity, efficiency, expenditure. In between subtotal, that is volume variance. Volume plus expenditure is grand total. Clear? Yes, that's all. These 4 tables and the concept and the logic behind the table, if you remember, anything in standard costing can be worked out. The way you present, sometimes the way they present may be different, and now I am observing from last 2 attempts, even in institutes RTPs, in some places they are also using the table and they are not using the formula. So you can also use the table. You will not lose marks, don't worry. I know some students have this in mind. Table looks easy, sir, but what if we lose mark? You will not lose marks, because tell me, in material cost variance, material yield, what did I say? 1 minus 2, correct? What is 1? SQ. What is 2? RSQ, correct? and both will be multiplied by standard rate and standard rate anyway, column 1 and 2. I am asking you to do 1 minus 2. Material yield variance in my table is 1 minus 2. You know what is Institute's formula? Material yield variance is equal to, they write this only once again, that's all. Sir, what are you saying? They write this SQ into SR minus RSQ into SR. And then they say, as standard rate is same, let us keep standard rate outside the bracket and then write SQ minus RSQ inside the bracket. They call this as one formula for material yield variance. It is the same thing. I am asking you to do 1 minus 2. They are asking you to keep standard rate outside and do SQ minus RSQ inside. Now if you check study material, this is the formula you have. Like this, for everything they have a formula. How many formulas? Yield variance, one formula. Mix variance, one formula. Like this, for every variance there is a formula. And then when you combine all four, material, labor, variable, fixed overhead, you will have easily 20-25 formulas. Instead of that, 4 table I think would be easier for you to remember. Okay, yes, with that we completed our standard costing discussion as well. Yes.